And we're back. It's July 23rd. Paul Capetta's here. Paul, how you doing?
I'm doing great, man. It's going to be hot today.
It's going to be a hot one. They're turning it up. Had a really nice few days here in the Midwest, but now back to a stretch of 90 plus, humidity, everything that makes you feel, I mean, it wouldn't be summertime Chicago without it. But Paul, what have you been up to, man? What's going on?
Not a whole lot, man. Just enjoying the summer.
What does that mean? I asked Twitter what like good weather or sunshine means for him, and he said, what did he say? He went bowling with his sister and mom. I don't know.
Not a big fan of bowling.
Didn't make sense to me. But what's summer activities?
Usually golf.
Okay.
Kind of in the lull part of the summer, you're just kind of enjoying it. But it's also been raining a lot here. Like it's kind of like every couple of days we get like hammered with thunderstorms, which is normal. Mm-hmm. But I guess there's this thing called corn sweat going on, which I just learned was a thing.
That's the Superman. Corn sweat?
It's apparently causes humidity, and this afternoon it's going to feel like 105.
Corn sweat. Okay, hold on.
I'm glad we're doing this because I didn't do this before.
Corn sweat. Agricultural impact of heat dome. Holy smokes. So wait, what is this stuff? What does this do?
So it basically adds to the humidity in the air because the corn is essentially sweating, which I think is the non-chemistry term for this.
So the corn gets hot. And we live near the corn. The corn gets hot. Mm-hmm. It gives off even more humidity.
Yes, exactly.
Holy smokes. I was thinking, who's the guy that played Superman actor? Oh, I don't care about Christopher. I mean, I do, but, you know, in a respectful way. 2025. David Corn Sweat. That's the guy. I thought you were talking about that guy.
That's an interesting conundrum there.
Interesting time for that sound here in American culture.
Yeah.
Probably the most popular it's ever been. I've never heard of corn sweat before as a phenomenon.
Yeah.
And I've never heard of David Corn Sweat. But he is the most recent Superman. You seen it?
No.
Don't care?
Don't care.
Don't care about Marvel?
Not a big fan. I like the Dark Knight trilogy, but I don't like Marvel.
That is a classic. I don't mean this in a rude way, but that is like a very classic dude take, yeah. I feel like, which is like, don't care about this supernatural stuff, like Thor hanging out with Iron Man doesn't matter to me, but like the Dark Knight was pretty sick.
Yeah. Yeah. Exactly.
All right, I'll take it. I kind of want to see this. I don't really care about any of this stuff. It's just like when it's entertaining. I watched that Thunderbolts movie.
Yeah. All right.
Fine. Not that entertaining. I don't know. I feel like a lot of those movies are like people go nuts because they're like, oh, like so-and-so just showed up with so-and-so. And it's like I don't have any background for it. And so it's completely lost on me. But if it's entertaining, it's entertaining. But all right, that's enough. No Superman talk. No more corn sweat. Let's get in the market. It's Wednesday. Got some action going. You probably know this better than me. There was an announcement either last night or this morning that we have struck a deal with Japan.
Yeah.
Is that true?
We did strike a deal with Japan.
Okay.
Lower than the initial tariffs. I think they're 15%. Some initial positive news out of the auto industry out of Japan, so that's obviously a big deal for things like Honda and Toyota. But if you get into dollar yen here, this thing was all over the place last night. And we did actually have some other news out of Japan. So the initial reaction was some yen buying, so dollar yen sold off a bit on the initial trade news. And then there was news that the Prime Minister of Japan is actually resigning in August.
Okay.
So that kind of caused yen to depreciate against the dollar. You saw the bounce back in dollar yen. And then this morning, we're right back to where we kind of closed today. So it's been all over the place. Lots of news coming out of Japan. Kind of at the swing lows here, too. which is really interesting to see where we're going to go from here.
Yeah, talked to Twitter about this yesterday, and we were, I think, in this little pocket right in here, where it's like, okay, we're dancing around 147 to 147.5, and my point was just like, okay, I mean, every time we've moved on to a new, if I widen out here, every time we've moved on to a new high in this pair here in July, we've taken a little bit of a breather, 100-point breather or so, and then continued higher. And so my point, when we're in this junk, Monday into Tuesday morning here, I'm like, okay, if we have a bounce back here on Tuesday afternoon or Wednesday or Thursday, is 150, the 150 level that, has been so important the last couple of years, and has, not been relevant for decades prior to the last couple of years. Is that back in play? And it seems like, what we've seen throughout the rest of yesterday was some further dollar selling. And then last night, to your point, here's probably all of that mixed of news of, maybe this is the tariff announcement or the deal announcement in here where you start to see some yen buying, and then here you have some yen selling, and these are, this is almost 100-point range in 2 or 3 hours. So pretty good back and forth for Asia just waking up, and obviously the U.S. and Europe not being no overlap with that Asian session here last night at 8 o'clock, 9 o'clock, 10 o'clock Eastern. But it's interesting, Paul. We're seeing the same thing that we saw here on Sunday night as they started to digest this Japanese election news, which I tried to cover as best as I can. From what I can glean, there are some conservative upstarts in Japan that have taken a number of what I guess would be the equivalent of their congressional seats or whatever. And there was some pressure, it seems, on the prime minister. I forget his name now. Whatever, doesn't matter. I mean, he's great, I'm sure, but doesn't really matter for what we're talking about. And so you're saying that last night, further a little bit of this, not instability, but potential change in Japanese politics, met with some yen selling. But again, as they digest it, it seems like this potential sea change in Japanese politics is being translated as hawkish or bullish for the yen.
Yeah. And I just Googled this now because I was interested to see what his name was, and he actually is denying that he's going to resign. So
wow.
It's a little,
this is
the
U.S. playbook.
Yeah. I don't know. We were talking yesterday. There was a fake letter going around on Twitter about Jerome Powell quitting, so that was funny.
I remarked that that's the most 2025 story I've ever heard, where it's like, probably someone using AI created a fake Jerome Powell resignation letter, and it's circulating on all the social medias. Yeah. And it's like, what a time to be alive.
Yeah. But overall dollar selling yesterday,
it was a rough one, for sure. And I want to talk Aussie in just a second, but we might as well talk about the big one here. This euro really stretched its legs out yesterday afternoon, getting back well above 117. It's almost like they tried 117 on Monday, Paul. Unable, obviously not a huge reversal here, but then tried 117 again here on Tuesday morning and then just ripped through it. U.S. dollar being sold. I mean, there's a number of things obviously going on between the Trump-Powell battle, as well as Lagarde talked yesterday. There's an ECB meeting tomorrow morning, and then there's a Fed meeting a week from today. What do you think is the biggest catalyst for this dollar price action, either right now or in the next handful of days? Is it the unknown of what Trump or Powell or tariffs, what's going to come out of that stuff, or is it what is the ECB saying, what is the Fed saying as it relates to European economy, U.S. economy, and I think we have a Bank of Japan meeting on Thursday night or something. It's either tomorrow or earlier next week. I saw that on the calendar, and I can find it. But what do you think is the biggest catalyst for people the rest of this weekend next? Because there's a lot of central bankers, but there's a lot of Trump news ongoing.
Yeah, there's a lot of uncertainty. We had Goldman come out yesterday with that there could be more rate cuts in the future than they think right now, or at least the market's pricing in. So there's that. You obviously have the ECB rate decision. You have a European trade deal that is really up in the air. I believe we have the August 1st kind of deadline with that.
Okay.
Which obviously can still be extended, and that's happened a number of times now. So you have a lot of things kind of unknown. If you're purely looking at it from a price action standpoint, we had euro kind of knocking out the door on 117, which we'll talk about whole levels. They don't always mean the world, but sometimes when you see it break that kind of round number of 117 and it breaks through it pretty significantly, it keeps going. It has pulled back a little bit this morning, so it's interesting to kind of see where this one's going to head, but you're going to have to be really paying attention to the news because this thing's going to be swinging all over the place if we get something interesting coming out.
Yeah, I was trying to find this. I guess it's not until next week. That stinks. So it's just ECB this week, Bank of Japan. It looks like it's on the night of the Fed. So we have Fed Wednesday, Bank of Japan Wednesday night, and then a whole slew of just data all throughout next week. I believe we also have a non-farm, one of the weird first day of the month non-farms. So we'll get the July non-farm numbers on August 1st, next Friday. So, yeah, a whole bunch of stuff. And you bring up the fact that we're also being kind of held hostage by the August 1st due date, so to speak, for some of these trade deals coming in. But, yeah, we'll continue to monitor this one for sure, as well as that yen. Yeah, nice to see that this euro dollar has come off about 30 points from its highs. If we get a reversal back through 117, I mean, I do just want to call out that taking out the last few sessions, the last really what is this, Wednesday, really Thursday to now, this has been a pretty bullish dollar month of July. I just want to reiterate that, where we've gone from 118 down to 116, which was a nice little move. And now, unfortunately, dollar is giving some ground. Well, I mean, if you've been short dollar, then not unfortunate for you. Same with this dollar yen in here. This is still a month where we've gone from 143 up to 149 and now trading 146. So still a bullish month for dollar. It'll be really interesting because the last really 5 or 6 trading days of July here are just super action-packed with data and just there's got to be talk from Trump and some of these other countries around these trade deals because of the impending deadlines that are coming up, as well as, what the heck is going to happen with the Fed. I think it's worth taking a look just really quick so that we can maybe compare it next week to see where the heck we are with the Fed Watch tool. I'm still, looking at just a 5% chance of a cut next week, but a almost 60% chance of some kind of cut by the September meeting. And so we're in that weird phase. We've been here many, many times, and every time this year in 2025, this 2 meetings out or 3 meetings out has ended up becoming no cut, even though it's been overwhelmingly in that cut. I'm sure if you looked back at the July odds 5-6 months ago, this would have been overwhelmingly, it's going to be lower than the current range. And they just haven't gotten those cuts in yet because that data has not pointed in that direction. Last piece before we get to a study that I want to get your eyes on. I want to get your eyes on this. Holy smokes, this is a face-ripping rally in Aussie. Have you had a chance to see what the heck's going on here?
Not a ton. It's kind of going along the dollar selling story. But given the kind of optimism of the Japan trade deal, that's going to be exactly what's kind of one of the things kind of catalyzing this market. And because Aussie is such a exporting country, they're very reliant on trade deal economic or global economic trade to be kind of working as freely as possible.
Gotcha.
So that's where you get this. This is an aggressive rally. I mean, we were near 65 yesterday in this thing, or 65 last week, earlier this week, and this thing's been on a tear, and just hasn't really given up really any ground yet.
Oh, we were looking at 65, yeah. Just yesterday morning, and this has been a sad Aussie market. That frankly, you might say, oh well, Frank, you just told me that the U.S. dollar has had such a good month, and so I would expect the Aussie to be down on the month when it's actually sideways. It's actually up here now in July. Whereas those other currencies that we're looking at, those other major currencies are down against the dollar in July. This Aussie, in my mind, if the U.S. dollar is taking off, Aussie should probably also be performing well against a number of pairs, just because the U.S. dollar has kind of been bucketed in that more risk-on currency bucket for the last several weeks. And so it's just it's one of those things that when dollar is getting hit and euro's rallying 100 points and yen's rallying 100 points and everything else, Aussie's we're up 20. And then when the U.S. dollar is fighting back a little bit, it's oh, we're going back to the lows for Aussie. And so it's been a rough one. We'll see how this continues. I probably would agree with you that this has got to be trade war talk. Anything that alleviates potential economic strife in Australia, China, Japan, those dynamics, that's going to probably be positive for this Australian dollar. Would probably monitor when we get back to our screens, probably take a look at Chinese equities and a couple other pieces to see how this is all being digested. But so far you can see a little bit more dollar selling on the yen front, some Aussie buying, and then this euro reversing a little bit. So a number of stories, and then finally, hopefully, this dollar able to make back some ground against the Swiss franc. But Paul, let's get into this study because it's an interesting one. I took a look, and I wanted to get your eyes on this. It's mean reversion profitability in non-dollar pairs. I love this stuff, man. We're getting as deep as you can possibly get into the world of Forex research. Looking at different time frames, looking at should you be historically speaking, should you have been following this trend? Should you have been going against the trend, contrarians versus trend followers? And now we're breaking into a little bit of a different zone. What about when we take the U.S. dollar out of these pairs and pit them against each other? Is there greater potential for mean reversion, or is there greater potential for them moving in a trend following exacerbated nature when we see a big move? That's been kind of the filter for a lot of this stuff, is when we see a big move in a given market, what's the chances of it reverting or continuing? Right off the bat, before we look at the research, what do you think would be the results of looking at some of this stuff where you take the U.S. dollar out? Do you think there's more of a tendency for extreme moves or more of a tendency for mean reversion?
I think it's going to depend, and it could matter by the pair. There's a lot of dynamics that go on in the cross markets. When I say cross, it means a non-dollar cross, so it's something like an Aussie versus the yen. I could see it being very dependent on the time frame, depending on what's going on. There's a lot of other factors that play into these cross markets that you have to be aware of. But it'll be interesting to see. I'm not actually really sure. These markets kind of have their own game they play as opposed to the dollar.
It's funny, we follow those dollar pairs against the other major currencies so closely that a lot of these non-dollar crosses, yeah, can feel. I feel like I probably got a good grasp of Aussie Canada and Euro Sterling, but like Aussie versus the yen, don't really follow it very regularly, even though it's a pretty liquid pair, and we actually do see a lot of people trading it.
Yeah.
Same with that euro yen and pound yen. See a lot of people trading those pairs, and again, they're decently liquid non-dollar pairs in there. So I agree with you. I have already seen it, so I kind of remember the results, but I would imagine that Aussie Canada and that euro sterling they're just so not so they're highly correlated to each other. And so when you look at this right off the bat, before we even look at the results, and the fact that realized vol in a handful of these is probably less than what it is against the US dollar for these individual currencies, tells you right away that, like, oh man, this actually might be more mean reverting than seeing extremes. Now, what I would call out that I didn't really notice yesterday is that Aussie yen and that pound yen have actually been decently volatile. The fact that Aussie yen, Paul, is showing a 6.7% vol right now, and that's only the 10th percentile of volatility for the last year, tells you that vol has been super juiced at certain points throughout the year. So that's been a volatile trade. It's not high vol right now, but one that I'll probably go back and take a look at the charts and look for opportunities. Here's the study. We looked at the non-dollar crosses that we just showed you, measured realized vol, split the data into low vol and high vol subsets, and that's going to be marked at the 30th percentile. Anything below that's low vol, high vol above it. Simulated trade performance using contrarian trade entry. So we're just looking at contrarian trade entry, but again, since these results are essentially long or short the pair, depending on whether it was breaking below or above the Bollinger Band. Obviously, the flip side of these, one minus these numbers, is the trend following success rates. Looked at 2 standard deviation Bollinger Bands. So when the market broke below the Bollinger Band, got long. When it got above the Bollinger Band, got short. 2 standard deviations, that's 95% of the data. So pretty rare occurrence. Probably only happens once a month. So not a ton of data points, but Glenn did go back 5 years, so we got plenty of data points. Calculated the win rate and looked at 1 to 10 day time frames, Paul, compared the volatility environments. Right off the bat, low vol versus high vol. Here are the win rates, again, of contrarian trade entry when these markets hit that Bollinger Band, getting long to the downside and getting short on the upside. And yeah, I kind of knew this was coming, but man, the Aussie Canada and Euro Sterling results, especially in low vol, but even in high vol, I mean, those are some high win rates for a binary outcome.
Yeah, especially if you're managing your risks kind of appropriately. Those win rates would be doing pretty well for you. When I talk about kind of managing your risk, that's kind of your how much you win on your winners and how much you lose as a ratio. That is very important with this. It's interesting to see in some of these markets, definitely they kind of ping pong back between two levels a lot of the time. So it's not totally surprising, but it's interesting that it's Aussie Canada and Euro Yen as kind of one of those higher ones.
Yeah, Euro Yen too. Yeah,
you would think Aussie Yen would move around a little bit more, but it's actually kind of pretty flat on the.
I'm not super surprised to see that, given how high the volatility was in there. The highest volatility right now that we showed at the start, and the fact that it's only 10 percentile, which means like that thing's probably going to whip around a lot. And so that makes sense to me that you see plenty of moves where like Aussie Yen like skyrockets and then it keeps going, or is getting hammered and then it keeps going. But yeah, the Euro Yen throwing in there as well, especially in low vol environments, seeing high win rates. Super interesting, and great point on management, because if you have Aussie CAD and Euro Sterling, which we saw at the start, relatively low volatility, they're highly correlated to each other when you're measuring them against US dollar, you're probably not going to get a lot of, it just broke the 2 standard deviation Bollinger Band on the daily, or especially if you're day trading and you're looking at like an hourly chart or something like that, and it just broke the Bollinger Band, and now I'm going to look for like a 200-point winner. You might have in some of these 200-point range for a couple of months. And so when you see that big move outside of the range, you might be looking for a 20-point winner and loser, or a 30-point winner and loser. And obviously, yeah, you want them to be symmetrical so that you're not winning, 55, 60, 70% of the time, but your wins are a third the size of your losses, not engineered for success. The last thing really quick here, Paul, is just the time held. And it's interesting to me in the low vol environment that these success rate curves do kind of increase a little bit, not for that Kiwi CAD or for that pound yen or for that Aussie yen, but for that Aussie CAD, Euro yen, and Euro sterling. You do see the success rates kind of move higher over a couple of days, but then after like 4, 5, 6 days, they flatten out or move slightly lower. So in low vol environments, you can wait a couple of days, it seems, whereas in high vol environments, this to me looks so much more downward sloping to flat, telling me that I wouldn't want to necessarily hold these trades for very many days. If I get the move that I want intraday or in 1 or 2 days, I would probably be out in a high vol environment.
Mm-hmm. Yeah, I mean, it always depends on your strategy too. Like how long you personally want to hold trades. You want to take the overnight risk. I mean, you held yen overnight last night. You'd need been watching your screen until you went to bed.
You'd be in a different place today, and hopefully it's in your direction. Mm-hmm. But yeah, if you weren't expecting it, then probably not good to just hope it's in your direction.
Yeah, exactly. Yeah, so it's one of those things when you're holding positions overnight, you have some different risk on, and you have to either be willing to stomach that or set your stops and limits to kind of take care of that automatically.
100%. And with the takeaways here, non-dollar pairs are generally more mean reverting in low volatility environments. Yeah, saw plenty of 60%, 70%. Of course, these are historical rates. They don't necessarily indicate what's going to happen in the future. Aussie Canada exhibits the most success for mean reversion, regardless of vol environment. Crazy rates in there historically the last 5 years. Reversion trade success when vol is low peaks around 6 days, kind of confirm that. And then, yeah, timing is less important in high vol, but waiting more than a day technically, historically, can improve those win rates. I'm not a huge fan of that, and I don't think I saw that overwhelmingly in the data. But that'll do it, Paul. Yeah. Thanks so much for jumping on for today's study. And thanks so much for watching. Tom, Tony, and Vanetta coming up next.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and welcome back to the show. Tasty Live, the Millennial Takeover once again. Woo-woo! Good
What's
morning.
up, boys?
Chilling.
You guys look so nice today.
Thank you,
Hey,
thank
so do
you.
You guys put
So do
your
you.
party shirts on.
Party Shirt Friday. You got a party outfit.
I like bright colors in general.
You're always a
Yeah.
party. You're the
But-
life of the party.
But we get small cheval today.
Ooh,
yeah.
That's really nice.
Yeah.
Yeah,
And we had Chinese yesterday too, so
loved it.
yeah, there's a lot of calories.
And yesterday was leg day, so I had
Yesterday was leg day for me.
perfect.
Mm,
I had
Normally
multiple
it's my Wednesday, but I did legs yesterday.
yeah. Yesterday was pickleball for me.
Hey, that still works. That still works. But for me, I always switch up my brain activity. Like when it's leg day, I do whatever I want when it comes to food.
Yeah.
The fact that Ming Hen just landed on that day
It was just perfect.
Real nice.
Yeah. Yeah. See, that's nice. But see, now I have to stand and it hurts right now.
Because your ankles are swollen from all the sodium.
I wasn't
From
here
the lifting.
yesterday. I wasn't here yesterday because Tom and Bat were remote, so I got to work remote yesterday
Nice,
because I was coming
nice.
in today. So,
So sorry that we brought you in today.
no, it's fine. It's all
We like
fine.
to have the vibe.
I like the vibe. I like
togetherness.
being in person. It was
Yeah.
it was a good trade off because at least I got to not be here yesterday. So
Yes.
that's all that
You,
works.
you mean to tell me you don't think about this place?
Not
being
even
here,
a little bit. No.
Wanting?
I mean, sometimes panic attacks.
Sometimes, yeah, that's
Do
fair.
those count?
I get
Do those
that.
count? Yeah.
Sure.
So what are you guys up to this weekend? It's gonna hopefully not be as hot. You gonna play some golf?
I'm supposed to play some golf tomorrow.
Okay.
It's supposed to rain, but
Yeah.
so far this year, every round I've played has been sunny and perfect. So
Oh, okay. So
think
that's,
it's gonna
that's
rain.
not too bad.
yeah, I don't think it's gonna rain, but it's gonna
Where are
be
you
fun.
Where are you gonna play?
At the Arboretum in the suburbs.
Oh,
Arboretum. Where the hell
Buffalo
is
cute.
that?
Fancy.
Oh, okay.
But yeah, that's my plan tomorrow, and then Sunday just relax.
Yeah.
That's pretty much it. Low key weekend.
Yeah,
Yeah.
that's
It's a low key weekend because we're preparing for the start of football season.
Yes.
Next week.
How? Wait, what?
This is the last week of the year until we have football every week.
But there's no football next week.
Preseason.
Oh,
It counts.
preseason.
It does count, actually.
Preseason
counts.
doesn't count.
Chargers,
okay, so
Lions.
how much fantasy are you guys doing? Like, how many different leagues are you
Well, I
gonna?
live in a fantasy world. So it's a state of being. At
Right.
This point.
No, but how many different leagues are you
What do you
gonna
got?
be in?
I mean, I've done a lot of
Yeah.
drafts already.
Yeah, I'm at
How
like
many?
I'm at like 30.
So the nice
30?
thing, well, the nice
if
thing
you
about
think that's a high number, just wait till his comes.
yeah, I'm at like 75.
How do you keep like you? That's a full time job at this point. Like,
Well, this is the best part. So I do them when I'm at the gym because they're snake drafts. So like your traditional fantasy football draft where you pick and then you wait like 10, 15 minutes and you pick again.
yeah.
So I just do it while I'm working out. So I have my phone there, and then when it's my turn to pick, I pick, and then I've doubled my cardio time so that I can fit. So
You're
it's
just
not-
on the Stairmaster.
yes, literally. So I'm up to like 75, 80. But yeah, it's the nice thing about these drafts is that they're best ball drafts, which means You pick your team, and then you don't have to manage it the rest of the season.
So you set it and forget it.
Yeah.
That's what I was concerned because I was like, how do you actively manage
You don't.
75 different?
don't.
Okay, I get it now.
So you just have your ideas, your people you're overweight on,
Well, what if someone gets hurt or something?
and that's it. Then
It's
but
cycle.
It's a it's a big roster, so you have 20 slots.
Yeah, it goes deep.
Okay.
So we're
You can get-
drafting like third string wide receivers.
Yeah.
Okay.
So you get normally you get 3 quarterbacks, 3 tight ends, 6 or 7 running backs, 6 or 7 wide receivers, and then that's your roster.
Yeah.
What's the sort of a ballpark for the outlay of capital to?
Well,
Yeah, we don't
Like-
have to talk about those.
No, I'm just curious.
It's
like,
at least $1,000.
Hey,
I
there
was gonna
could
say,
be
right,
some
I
people
didn't-
listening that are wondering about that.
But they have smaller. They have a $3 one,
Yeah.
$3 draft. So
Yeah,
you can do.
they've
oh, I have $3.
That's
Yeah.
some.
Okay.
Hey, if
Yeah.
you win, you could win like $1 million.
Yeah.
I'm not gonna win $1 million. I'm
Maybe.
not delusional.
The bigger one is $2 million to first. The $3 one is $150K to first if you win it all. But
Well, I will
make
have you
money
know-
if you make the playoffs.
Yeah, I will have you know that both Mikey and our very own Jules made it into the final round.
Wow.
So
Congratulations.
it is not out of the realm of probability.
It's actually expected. When you do
expected.
when you do 80 or 90 lineups, you expect 1 or 2 of them at least to get to the final.
Okay, but how are you doing like all of the scouting and the research? Like, do you know what I'm saying? Like, I understand like you can know who's good on like a couple of teams, but like how do you know?
Are you trying to ask if we do anything else here? Are you
just
trying to out us?
No.
I don't get
No,
that.
this is like my sincere curiosity of like, because like so that's what people say when they start like trading or like options for they're like, how do I like? I feel like I want to know everything about a company before I do a strategy in there, but you realize it's not possible to
Yeah.
know everything about it. I just like
So very similar to this, like we're broadcasting on YouTube right now. There are other companies that are strictly fantasy companies.
oh
and they
okay.
create content. So there's companies where like I can.
So
log
there's
on
like
to
a
YouTube right
fantasy
now.
market measures.
Oh yeah.
Pretty much.
It's literally
Pretty
like
much.
it's like here's the top 5 running backs that are gaining average draft position. And
Okay.
here's why?
Yeah.
So it's like okay, what's happening here? This person's holding out for a contract. This beat writer says this person's running with the first team in practice.
Okay.
Like you have the information. If you want to
Okay.
find it.
But as Miko says in the chat today, it's a lot like option trading and probabilistic outcomes.
Right.
You can kind of play probabilities. Certain teams are probably going to be better than others, so they'll be higher scoring.
Sure.
Better offensive lines might be better running backs. New rookies on the team have potentially higher upside because you don't have any like data on them.
Right. Yeah, they're like IPOs because like you don't
Yes,
have enough historical volatility
Yes.
because they're rookies.
Exactly.
And like a
You know-
portfolio.
Yeah.
So like let's say you get the 3rd pick and you have Saquon Barkley.
Yeah.
I pick Saquon Barkley. My next 4 or 5
He's like
picks-
Nvidia.
Yeah.
right. So if I have Saquon, my next 4 or 5 picks I'm not going to pick a running back. I'm
Right.
picking 3 or 4 wide receivers, a tight end, because I know that Saquon's always going to be in my running back slot.
Right.
And then my other one I can fill in with backup guys.
Gotcha.
So it's
like
strategy in
consumer
that
staples, maybe.
Yeah.
Industrials.
Dividend paying stuff.
Dividend paying. Yeah.
Yes, exactly. You got to, diversify. You got to
Sure.
change. You can't go with the flow. You have to kind of get goofy
Right.
with it because you're in a big pool. So
Right.
you got to be unique.
Okay. So you guys are locked and loaded then.
Yes,
for
yes,
football. You're
yes.
just-
And last but not least, week 17 is the final week.
Yes.
So really, when you're drafting, you should be thinking about the matchups you want in week 17. So you should have like a quarterback, a couple wide receivers, a wide receiver from the other team for that specific game.
Right.
Like Miami versus Tampa Bay. That's a week 17 game that people are targeting as like a high scoring game.
Okay.
You basically
These
are,
are deep,
you're thinking
deep.
like, I'm going to make the playoffs.
Okay.
I want my team to have a good, strong possibility to make a deep run in the playoffs.
All right. So you're all
Structured
Baker
that way.
Mayfield all the
Yeah,
way.
yeah, sure. We love Baker.
He's funny.
He is.
All right. So what are you up to this weekend then? This is your last free weekend then?
I got some golf too Sunday.
Yeah. Okay.
Yeah, so I'm excited about that. Cantini.
Oh, little Cantini.
Yeah.
Oh, that's a nice course.
It
It's
is a nice
fancy.
course.
Yeah, Tom likes that course, so that's how you know It's like legit.
I'm trying.
He doesn't call it a dog track like some of the other places. He's like, I'm not playing that Muni dog track.
Yes, Cantini's a good one. But I had my best round ever last week with Mike.
Oh, I heard you broke 80 or like.
I was close. I was
90.
tracking.
You broke 90. Which
yeah,
is
at
great.
81.
Okay, well,
that's almost breaking
tracking.
80.
Yeah, okay,
That's
all right. I'm so
tracking.
sorry. I'm so sorry.
It is a dog. It is a dog track. It's Jackson Park.
I love Jackson Park.
Which is a great. We love it.
Views of the lake, random like dirt bike meetups.
Dirt bike, yeah.
You might hear some fireworks.
Some
Yeah.
fireworks.
Fireworks.
The sand is like dirt. You know,
Yeah.
it's like
It's
like
perfect.
it's
It
like
is-
a
it is really-
baseball
it's-
infield.
But the greens are actually really good there.
Yeah.
Like for what it is, the greens are actually up.
For what you pay, and it is a beautiful location. Like,
Yeah.
where else are you gonna get to play on Lake Michigan for like $20?
Yeah.
We took Thomas and Gus.
Oh, did you? Oh no! Please don't corrupt them. They're so sweet.
Which one? Gus is sweet. Gus is a
Both
good kid.
sweet. They're both good kids.
Thomas is a little. I had to show him who's boss. He was talking shit the whole week. And I
Oh
whooped
my
him.
goodness. Oh, that's so funny. Well, yeah, that's
Ferda.
for the boys.
Yeah, whooped his butt. Ferda.
Ferda. Well, he
Yeah.
did call you Unc, so.
Oh yeah, I'm Unc. You laugh at that.
It's because it's funny.
Yeah, Alyssa and Tori overheard it when we were talking, and so I've been calling them aunties now.
That's
I'm
fine.
like, sup,
I
auntie?
embrace my auntie energy.
Yeah.
Like, it doesn't offend me, but you get mad when they.
No. I embrace it, but I just want the acceptance. Like, like when we're talking about like young guys, I'm like, oh yeah, like us. Like us. We're the young bloods here.
Yeah.
We are.
No,
Well,
Believe it or not,
yeah.
anymore.
Well, compared
not anymore.
to Tom, who's 70, yes.
Yeah.
Mathematically.
Hey, but speaking of Tom and Bat, they are gonna get ready here imminently to take the stage in Denver. But I don't know if you saw last night. Your dad posted pics. They were at Casa Bonita. There's the crew. It looks beautiful. Impeccable timing with that
Yes.
South Park episode that just dropped, which we cannot show any bit of.
Did it actually drop though? I saw that.
It did. It was on. Yeah, it aired.
Oh,
Yeah.
it did?
Yeah, the whole thing in its entirety. And
Was it good? Yeah, I'll watch it.
It was fun. I mean, I thought it was funny, but
Mm.
but there they are. Yeah, at Casa Bonita. People are asking them. They're like, "How was the queso? How was the food? What did you order?" I asked for a shirt. I hope they got my shirt.
Nice.
I know I want.
My dad always brings you.
I know he's very good about it.
He's actually like somebody that cares.
Yeah.
And loves other people.
Yeah.
Like
Have you guys been to Casa Bonita?
no.
No?
I don't even know what it is. What is it? It looks
it's
like Disney World, but
it's like
for
in a
adults.
Chuck E. Cheese for adults, kind of. But it's a Mexican restaurant. But there's a lot of experiences. They have divers and like cliff divers and stuff on the inside. The reviews I think are mixed on the food, but literal creators of South Park own it now. So they wanted to see. It's been around forever in the Denver area. But
It's like the Rainforest Cafe, but for adults.
kind of, yeah.
You get to go in there. You get the frog noises and
Like an experience.
like an experience.
So I love like kitschy, touristy
Yes.
places like this. So it's right up my alley.
Very
But
nice.
hopefully they had fun. How do you think the trading is going to be this morning for the boys?
More of the same, probably pretty awful.
It's kind of been quiet.
Yeah,
Quiet.
it's
AMD's up a little bit, pre-market.
Okay.
But
Tom's gonna be pissy about his Intel, which is down $1 and change after earnings.
Yeah. But they'll
Which is
find
like
some. Maybe
pretty
they'll
big,
find
10%.
something to do.
Yeah. There's always an opportunity. That's the beauty of markets.
Yeah. New highs every day. Just more of the same.
Yeah, there's always opportunity.
Yeah.
Every day is a new opportunity.
There you go.
Not the same every day.
I like that outlook.
Yes.
And then you guys are headed to Seattle in like 2 weeks. You guys like Seattle?
Yes.
I do.
You guys party a little too hard in Seattle.
Party a little too hard everywhere. The party follows us everywhere we go.
True. But yeah, Seattle will be fun. Sunday, August 10th, a couple weeks out. And yeah.
Yeah, that's great.
It's going to be glorious.
There you go. The whiteboard tour. This will be the second show for you.
Yes.
At the Crocodile. That sounds cool. The
Yes.
Crocodile.
Yes.
I've been told that the Crocodile is one of the historical venues there. So when you go in the green room, there's like Rolling Stone signatures. And,
Whoa.
yeah.
That's cool.
So we're gonna check it out.
It's only fitting that we share stages
Yeah.
with Rolling Stones.
Yeah.
Yeah, that's cool. All right. Well,
Yes.
that's coming up around the corner. tastylive.com/events. And our Chicago event is also in August. So that's also just around the corner. So if you'd like to come visit us in Chicago, we'd love to see you.
Yeah.
But hey, in the meantime and in between time, there you go, August 15th at Thalia Hall in Pilsen. So come on down to Chi-Town. But hey, in the meantime and in between time, we got a great show for you today. It is a fantastic Friday here on Tasty Live. And the top of the 8 o'clock hour, Options Jive, Play the Odds, Not the Fool, Lessons from Monty Hall.
Yes.
That is like one of the best written segment titles I've had in a while.
Sahil's really excited about this.
Oh, it's a baby shark piece.
Yes. Jaws.
Oh, sorry, he's Jaws now? He's baby shark.
No, he's big. He's grown now, so we can't give him baby. But he's excited about this because Tom couldn't understand it or
Right.
do it, so he's been waiting for this moment.
It's like, now it's my time to
Yes.
shine.
Yeah.
Yeah.
I was looking at it. There's no way he would have.
Tom would have butchered.
Yeah.
There's too many slides. There's too many words.
Yeah.
There's too many things you have to remember from the last slide. It just wouldn't have worked. So we're excited about it. It's a good piece.
And then it's #Fan Friday, so we got Fast Market.
Yeah.
You guys are doing viewer trades.
Yeah.
It's a fun way to find new insights to what's
Yes.
going on. People come up with some wacky stuff, but it works, man.
Mm-hmm.
That's going to be at 8:40. Then 9 o'clock for market measures. Trading bullish strangles.
Yes. Bullish skewed strangles.
Oh,
Should be a
bullish
good one.
skewed strangles.
Yes.
That's hard to say. Bullish skewed strangles.
Yeah.
That's going to be at 9 a.m. for market measures. And then you guys are going to take some calls. Is Scott Sheridan here tonight?
Yeah.
Yeah, all right. So Scott is going to be on
Scotty
too.
S.
Okay.
Yeah.
Big Boy Scotty S counting down all the top trending tickers. But also, if you have questions about the brokerage side of things, we would love to hear from you. That's at around 9:30 with Mike and Nick and Scott Sheridan. But hey, in the meantime and in between time, you guys want your daily dose?
Yeah.
Yeah. Let's go.
Our leading story. Breaking news.
Across
the wire. Leading story. Top story. Just in.
Today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a fantastic Friday. It's July the 25th. This is the part of the show that we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Yeah.
The S&P 500 and NASDAQ notched record closes again, mostly because of Google. Thanks, Google. But the S&P and NASDAQ notched record high closes as robust results from Google parent Alphabet fueled optimism about other heavyweight AI stocks. I think Jamal tweeted out that this is like our 6th week in a row that the S&P, like if we close up today, that's 6 full weeks in a row that it's been up. It's like setting new records. What do you guys do when markets are at extremes like this?
Take some off the top. I mean, we lean bullish generally.
Okay.
As good millennials, we lean bullish.
Yes.
And yeah, I mean,
Stupid, buy the dippers. All you know is buy the dip.
Diamond hands.
But yeah, I think when volatility is this low, and if you've been riding this wave up, I think it makes sense to have a low exposure at this point in time, which is what I just placed my first downside hedge in SPY.
Okay, yeah, I was gonna ask what you guys were doing in the indices.
Yeah, so just threw on a downside hedge, taking off some risk, and yeah, this is one of the points in the year where I have very little risk on.
Okay.
Yeah. I'm in that same camp. I
Same.
mean, you got to take off positions. Volatility is low across the board, so you're a little bit more selective with what positions that you keep on and the new positions you put on as well, because you got to find, the opportunities have slimmed down.
Sure.
So
Well, speaking of looking for opportunities, it's like what else can I do stories on? Corn. Corn pushed higher yesterday into the close with help from the export business. Corn futures rounded out the Thursday session with contracts up 3 to 4 cents at the close. Not sure if you guys are doing anything in the softs, corn, soybeans, wheat, if there's any opportunities there.
I'm actually long corn here.
Ha-ha!
400.
I'm also long corn.
Nice.
Was the corn sweat thing, was that fake news or is
No,
that
corn sweat is real. Growing up in India, so basically the evaporative process of as corn continues to grow and get bigger. So the corn harvest is really good this year.
Yeah.
So in Iowa, Illinois, Indiana, you have these massive fields of corn, and all of the liquid that's evaporating from the corn contributes to the really uncomfortable humidity and dew points that we're feeling, but it's really just, it's corn sweat.
Yeah. Wasn't that our rain for the past week?
It's a lot of things. Yeah,
Yeah.
It's the heat
So
dome.
corn. I've just been showered in corn.
Yeah.
Yeah, just but it
High
makes
fructose.
your body, it's harder to cool down your body because
Yes.
you can't evaporate your own sweat because you're bathed in corn sweat. It's
Yeah.
yeah.
That's why I'm sweaty.
But it is not fake news. It is not fake
Yeah.
news. It is
Okay.
real.
That's good to know.
It's real. Good to know.
Yes.
Hey, in other news that is not fake news, Michael Saylor's one-of-a-kind capital markets machine just got bigger. As crypto prices continue to boom, Saylor's Bitcoin holding company Strategy launched a new kind of preferred stock and then upsized the deal from 500 million to 2.8 billion. I don't understand how this company works at all, but they just did another sale. MSTR, I don't know if you guys are doing anything in there.
We haven't recently, but it's definitely been something to watch. I mean, they've just been acquiring as much Bitcoin as they possibly can, taking out debt to buy Bitcoin even. So yeah, they have been a beneficiary of the general Bitcoin rally, but they had their squeeze moment back
There's
in
a lot of liquidity that they got now.
2024. Yeah. But it's been hovering up. It's still up around 400, and this stock had already split. So this is a
Oh, wow.
This is a $4,000 stock price pre-split.
Oh, that's good insight. I wouldn't have put that together. That's bonkers.
Yep.
That's crazy. Well, speaking though of doing it the right way and then maybe doing it the wrong way, it has now been realized that Tesla dumped 75% of their Bitcoin at one of the worst times, losing out on billions. So the company bought $1.5 billion of Bitcoin in 2021 and added it to their balance sheet. But then they sold 3/4 of their holdings in 2022 as the market was tanking. But now, because they reported on their earnings call, like what the value was of what the Bitcoin that they did have left. But if they had just kept it and held on to it, like it would have been so much more. So their holdings of digital assets rose to 1.24 billion, up from 722 million. But again, they sold 75% of what they were holding. So womp womp.
Wild.
It's kind of sad.
Yeah.
Yeah, but they couldn't even
what are
hold
you
it
doing?
for like a year.
Yeah.
I mean, I'm all puffy chested, like I don't know what I'm talking about.
Yeah.
But like, you know, the concept of Bitcoin.
You're over here in T-bills and CDs, and you're talking.
I love money markets. I love T-bills. I love CDs. It's how I sleep at night.
It is interesting though, because it's kind of like, why would they need to sell? Because I feel like there has to be the person at the helm of this has to know, like, okay, if you're investing in Bitcoin, along with all these other tech stocks,
Right, don't touch it.
You're not selling it.
Right.
So if you had to sell it,
You're thinking something
an
was going
issue?
on and they
Yeah.
needed cash quick. What are you guys doing in Tesla, if anything? I know they're post earnings.
Long, short of put spread at the money.
Oh, okay.
After earnings.
Okay.
yeah,
I had an iron condor. I just closed out of the call side, so now I'm long around 300-ish.
yeah, I still have the Iron Condor. So 300, 290, that's the strikes.
There you go. From earnings last night, Intel beat on revenue, and they reported second quarter results that beat Wall Street expectations on revenue. But the new CEO announced significant cuts in chip factory construction. Intel brought in revenue $12.86 billion versus 11.92 estimated. The company also going to announce another round of layoffs, a reduction of around 20% of the workforce. What did
Stock at 2060, down $2.
What did you do?
10%. Nothing. It's too hard to trade.
Oh, okay.
I did
I
nothing.
mean, there's just like not a ton of volatility. Is
Sure.
Yeah,
not very great. It's $22 stock. Not like
I bucketize Intel as like an IBM type stock.
Sure.
And IBM tanked from earnings. It's like, okay, if I think Intel's going to go down, what am I going to do on a $20 stock? So I just didn't do anything.
Okay. That's I mean, sometimes the best play is no play.
Yes.
NVIDIA AI chips worth $1 billion were smuggled into China after President Trump imposed U.S. export controls. NVIDIA's powerful B200 chip favored by U.S. tech giants like OpenAI and Google to power their AI models are banned for sale in China due to government rules limiting shipments. But now insiders reported, no, they have all of these chips. But then NVIDIA was like, to be fair, if anything goes wrong and they have to call customer service, they're like, we're not gonna help them. And I was like, that's it?
I mean, anybody that thought that they didn't have these chips.
No, right. I know.
Has to be a little naive.
But $1 billion is a lot, though, of the.
For all of China?
Yeah, that's true. That's
I
true.
mean, we got $1 billion in half a data center. I mean, come on.
What are you guys doing in NVIDIA? I know Mikey said AMD was up pre-market. I don't know if NVIDIA is also up.
It's not really.
Oh, okay.
Interestingly enough.
It's at highs. It was up $2 or $3 yesterday on Google CapEx expenditure increasing.
But yeah, I like playing NVIDIA to the upside, but I don't think I can do it right now.
Okay.
I think if we
It's hard
get
to
another-
look at these stocks and be like, oh,
I know.
got more.
Right, I know.
We've doubled.
It makes
you know,
sense.
it's
But I will play it. I will do a bullish strategy for earnings most.
Okay.
likely. So that's next month.
OpenAI is preparing to launch its GPT-5 model as early as August. The new model, which was expected to launch this summer, will be positioned as an AI system that incorporates distinct models and can perform different functions as opposed to just a single AI model. You can't trade OpenAI, but you can trade Microsoft.
Mm-hmm.
Yeah.
Machines are gaining sentience.
Do you use OpenAI or ChatGPT at all for work? Yeah, I do too. Not a lot, but every now and then.
Yeah, they're all
I think
great.
that's an interesting thing. Is like the dynamic has shifted where everyone used to use Google, nobody used Bing.
Right.
They're like forced to, but now people are using AI platforms instead of Google.
Yeah.
But yeah, Microsoft just climbing straight to 600.
Mm-hmm.
It's up every day. It's insane.
Yes.
One thing that went under the radar is Google announced their blockbuster earnings that lifted then the rest of the market. Well, Google has a new AI feature that lets users virtually try on clothes. They're also rolling out updated price alerts. So if you see something that looks nice and you're like, oh, it's a little too expensive, you can set a price alert. So you just scan yourself and then Google uses AI so you can virtually try on new fits.
Perfect.
Yeah.
Does it shame you too? And
I don't
be like,
think so.
Like, sorry, you're not a medium. You're a large. Looks like your waist got a little bigger. You went from a 34 to a 36.
Oh no. Oh, that would be
wild.
brutal.
That would be.
You know, people are doing that. People are uploading their picture to ChatGPT and they're like, am I attractive? Am I hot?
Oh.
And then they're just like, I was like, that's a choice.
Huh. Well, I did see.
Some people just know. You know?
I did see that they started doing more like self-help responses.
Yeah.
Like if you ask a question that might be like, I guess pointing to some other larger thing, it'll be like, if you need help, call this number.
Right,
like
right.
Art or something.
Yeah. Well, then that's good.
Yeah.
I think that's good.
So if you're uploading your own picture saying, "Am I hot?" like that, then maybe that's the
right. That's a call for help. That's a cry for help. I mean, Commerce Secretary Howard Lutnick said TikTok will go dark for Americans unless China agrees to give the U.S. more control over the app. It seems we are right back where we started. This seemed like this was going to be safe for a while, but now it looks like it's back in the crosshairs. How upset would you be if TikTok went away?
Doesn't really affect
I'm minimal in the TikTok space.
Really?
Yeah.
Yeah. I literally don't have it on my phone.
Yeah.
I think Tom would be the most devastated.
Yes, probably.
For some reason, he's the biggest TikToker in this office.
I know. It's so funny. It is wild to me. You can't trade TikTok, but you can trade Meta. And so this would be great news for Meta.
Yeah. I wonder what Meta is. Was
Meta's
this
up a little
yesterday
bit.
that this happened?
Yeah, it was yesterday this happened.
Meta up $3.
Oh, that's a decent move.
Yes.
Are you guys? Do you have a position in there or no? I know it's hard. It's post earnings, so that I like.
Meta has earnings next week.
Oh, they have. Oh, they haven't had earnings. Oh, okay.
Yes.
Yeah, next week will be a lot of the.
Oh, that's big
Meta,
then.
Amazon,
Okay.
Microsoft, Apple, all in
I
there.
Yeah, maybe-
misspoke.
Maybe you throw a little bullish trade on there.
In Meta, doesn't that make you feel dirty? I thought that ideologically you would never be bullish in Meta.
Well, I was bearish.
He's a big Zuck guy now.
I was bearish Zuck, and then he had the glow up, and now I'm bullish Zuck.
Oh wow!
But really, like, it's hard to do anything in here because it's $700 stock. But yeah, I did enjoy being short Meta.
Speaking from experience, don't get conned by a man just because he got a haircut. Okay? Take it from someone with
Ooh.
experience. Like, just don't. It's not worth it.
That's fair.
It's not worth it, girl.
I will note it. Noted.
In streaming news, the FCC has approved the $8 billion Paramount Skydance merger. The deal includes Paramount Pictures, the CBS Broadcast Network, and the Nickelodeon channel. The contentious merger had been sort of put in the political arena with the firing of Stephen Colbert, which they said helped then give the green light for this merger to go through. I don't know if that's true or not, but CBS did make concessions on their DEI initiatives, and then they were like, FCC was like, okay, we're happy now. But then, of course, this happens on the heels of a very scathing episode of South Park, where the creators were paid $1 billion. Now they own the rights to their episodes in a diabolical episode that was not favorable at all to the president. So we're wondering what's going to happen.
Scary.
But this does affect something. I know you're probably not trading Paramount, but this would affect something like Netflix. What are you guys doing in Netflix?
Netflix has not had enough move for what seems like forever, but it's really just been since earnings.
Yeah.
It's gone from 1,300-ish down to, I mean, it's the high 1,300s, 1,350-ish down to 1,150-ish.
Whoa.
So, a good 10 or 15% downside move here. Vol is super, super low.
Yeah.
It's been a sell every day. It's been surprising.
Interesting.
Everything else going up.
Right.
And Netflix is usually, because you have a lot of gamma with a stock that's $1,100. You
Right.
can kind of move it.
Why doesn't it just split? Come on,
Yeah.
split already.
Yeah, you would think soon. But then you look at CMG, and CMG is a stock that's split, and now it's dead.
Yeah, that's true. That's true. That's a good point.
Yeah, you gotta keep it somewhat high.
Because I tailor my news to my audience, this was very fortuitous that this came out today or yesterday, and I was able to share it with you guys. Sydney Sweeney sparks the latest meme stock rally as American Eagle jumps. The actress helped bring clothing retailer American Eagle shares into meme stock mania. The Euphoria star will lead a campaign for the company centering on denim jeans. Is it centered on denim jeans or her boobs?
It's centered on her jeans.
Oh, okay, sure.
Yeah.
All right. Because I casually
uh,
just lay around my house with my top unbuttoned.
I love everything about this. Well, honestly, I think the most genius marketing ploy with Sydney was when that soap company.
The bathwater.
Oh, her bathwater soap. Yeah. Did you guys buy it?
With bathwater.
No, but I think you can buy it on
stock.
StockX. I think StockX has it for like people scalping them for $500.
Whoa.
Yeah. But some of my friends were like, "This isn't like peak insanity," and I was like, "Listen, if I walk by this in the store, like I'm buying this. If I see it in the store, just to flip it on the market."
Oh my goodness! What do you guys think about the meme stock sort of mania now with your Kohl's, your Open Door, your GoPro, your D-Nut, Krispy Kreme? Like, are you participating at all? Or
Mark said the next meme stock is Wendy's.
Oh, Wendy's. Yeah. That's an interesting choice. Normally there's like these like penny stock companies. I heard of like Triangle Health the other day. It's like 5 cents. And I'm like, what do you guys do? Like, what are you doing?
That's what happens when markets are
but trading in Open Door was like 20% of the market's volume like earlier this week. Like that's bonkers.
Yeah.
That's bonkers.
Yeah.
Yeah, there's nothing you can really do other than just, ride the wave if you want to.
Yeah.
I know you want to ride the Sydney Sweeney wave.
No doubt.
Whoa, hey. Hey.
But yeah, Wendy's.
American Eagle is what is the ticker? I think it's AEO.
Yes, it is.
Yeah. Are you guys doing anything in there?
Well, of course. How do you not support this?
It is funny though. The stock jumped from 10 to 12 in one day. So
That is
the meme world is
It's worth the. I mean, it paid for the ad campaign.
sure. The memes are memeing.
Yeah.
Yeah. Also, I pulled this for you guys today. Launching live on Netflix today, Happy Gilmore 2.
Yes.
Netflix and Spotify have teamed up to launch a golf-inspired game to promote the Adam Sandler sequel. Happy Gilmore came out in 1996. Oh, I feel old.
Yeah,
But the Happy Gilmore 2 premieres on Netflix today. The partnership represents a new venture for Spotify, as the platform has never teamed up with another company to create a gaming experience within the app before. Also, Travis Kelce, also my best friend's husband, is in the movie.
Hey,
Travis
cameo,
Kelce.
yes.
I've been drafting a lot of Travis Kelce, so
Yeah.
Good. He's slimmed down. He looks really great. He broke the internet last night. Oh my God, we have to talk about this. He posted 13 photos of him from the off season, photos we had not seen of him and Tay.
Wow.
And it's like his brother and her brother, and like their families are merging together. And I was crying. 2 million likes. It's the fastest at ever one of his posts, because he never posts personal stuff on his Instagram. He normally posts just business stuff. But these are pictures of Taylor.
well, they say that.
But also,
he's
when do
obviously
you?
nearing retirement, so I think he's softening up a little bit.
Yeah.
Yeah. But what's the timeline? When do you guys do a hard launch? Like, when do you? Because they've been dating for like 2 years. Like, obviously we knew. Like, when? What does that timeline look like? That you're like, okay, this is Instagram official.
Yeah.
For me, it's like a week. I'm just kidding.
I'm actually surprised that they haven't like done an Instagram official thing.
She put,
Well, I mean, they're all over
when
the
they
news.
met
They don't
the
need
when they
Instagram.
met the royal family. She put him in that picture, and when he came on stage in London, magical night. Then she did post that picture to her official Instagram. I can give you the whole lore and the history.
Yeah.
if you
Your
would like.
family tree.
If you would
the
like, yes.
You
connections,
showed,
Yes.
you showed me the
everything.
PowerPoint.
I'm just deeply invested. That she's my best friend.
No.
But are you guys gonna watch Happy Gilmore 2?
Yes.
Yeah.
Absolutely.
It makes me feel old that 1996 was when it came out. That's
Yeah.
wild.
I know. We have to talk about that later. But
And I hope it's not crap.
It's gonna be.
it's free. It's free on Netflix. Like,
I know.
what are you
Well,
gonna
of
complain
course.
about? Like,
I don't. But you don't.
it's got Shooter McGavin, but Stubbs, R.I.P. Stubbs.
Yeah.
I think it's gonna be
My
funny.
bar is low.
Yeah, eat it edible and then turn it on and then
That's-
just
that'll
have a good
raise it
time.
up a little bit,
Yeah,
yeah.
just raise it up a little bit. What are you guys doing in Spotify?
Nothing right now.
That stock has gone parabolic. It's
Yeah.
681.
Ooh.
Actually, the chart looks like Netflix.
Okay.
Very similar,
Yeah.
but
Are the markets wide in there?
Yeah, they're not
Yeah,
great.
they're not
It's
great.
a tough trade.
Well, speaking of gaming, again, I pulled this for you guys because Tom and Tony, they don't even know what this is. The Nintendo Switch 2 is the fastest selling gaming hardware in U.S. history. 1.6 million units were sold during its launch month in the U.S., and that's a bonkers number. So I thought I would share.
Yeah, it's wild. I was never a Switch guy.
yeah,
But it came out like after, like we were a little too old by the time like the Switch came out.
yeah.
Yeah,
I was
which
already
one-
embedded in like the
We had the
Xbox.
Wii. The Nintendo.
Yeah, we had the
I was a
Wii.
Xbox
Yeah.
guy.
You were an Xbox guy.
Halo and
Yeah.
Call of Duty
Call it COD.
exclusively.
Yeah.
Yeah, that makes sense.
Yeah. First person shooters, we don't play these Mario.
But I would be a Switch because I want to do like the what is it like the Animal Island one or like the Mama's Cooking game. Like I like girl games.
Yeah.
That's fair.
Yeah.
I was like, that's fair. That's
Yeah.
fine.
We got to get you one of these then.
That's fine.
Yeah. We like teabagging like
Wow. What? Okay.
Yeah.
This is funny because it is just like the most.
headshots.
This is the most Florida story ever. But Chuck E. Cheese, yes, that Chuck E. Cheese has been arrested for credit card fraud. There's a photo. How are you gonna get perp walked in that
So
costume?
awesome.
This is so awesome. The man though that is in the costume was arrested on 3 felonies for credit card fraud. But there's not really a good way to show up to the county jail, but dressed as a mouse, that ain't it.
It's incredible. Local Florida man.
Local
Dressed
Florida
as a
man.
mouse.
Oh my God.
Yeah, the interesting part is like, is this, like, how do they spin this? Are they going to have like a
No, people said that his bail was set at 10,000 tickets.
That is good.
That's like on the internet.
That's amazing.
Yeah.
The internet is.
Chuck E. Cheese could rebrand as like a bad boy Dave and Buster's.
He was always like a bad boy compared to like Mickey Mouse. Like
Yeah.
yeah. Like he was always kind of like
Organic farming in the chat. That's what he gets for being a rat.
Stitches. McDonald's shuttered their Cosmix chain, but the burger chain is planning to test the new coffee drinks, refreshers, and flavored sodas inspired by the spin-off brand in 500 restaurants in Wisconsin and Colorado.
Didn't we have one in Illinois?
Yeah, we did. The very first one ever was
Yeah.
opened in Bolingbrook, and the line to get in there was like 2 hours long when it opened. I was like, this is insane. But I didn't get to go down there. I did want to drive down there and like film something for it. But now the drinks are could be coming to a McDonald's near you. A Sprite Lunar Splash, Popping Tropic Refresher, or a creamy vanilla cold brew. That's for you, Nikki.
I'll take that cold.
Yeah.
I see that. I
what's,
like a little cold foam on there. Like
What's McDonald's doing, you guys? Anything?
Mickey D's.
MCD.
Chilling around 300.
Yeah. This is its
Still
spot.
kind of on the low end. I think this is an interesting bullish play. If we assume that the value of the dollar is continuing to crumble, McDonald's will thrive.
Yeah. Well, we will see.
Mm-hmm.
Start over. NFL is in talks to take a 10% stake in ESPN. Yesterday, I reported that the ESPN would own all of the NFL Network and Red Zone now. So yesterday was just they were going to have a controlling stake in the NFL Network and Red Zone. So now with this deal, ESPN would own the NFL Network and Red Zone, and then the NFL would own 10% of ESPN.
So they're swapping.
Basically, kind of.
Yeah.
But it's interesting because this is tied all to Disney. So I don't know, is this bullish for Disney that the NFL owns 10% of the?
It's not bullish for our wallets. Those prices are already sky high.
Do you buy
and they
Red
will
Zone, or you just do YouTube football? Like, how do you?
I do just Red
subscribed.
Zone.
I just did NFL ticket.
You did the full thing?
How much is NFL ticket? Like $500?
Yeah.
No, it's less than that, but it's $30 a month for a year.
Oh.
Or you can pay in full,
What?
and it's like $380.
Yeah.
What?
You can to watch every single game. But it's really insane because to watch every single game for the NFL, it's $300. To watch every single game for baseball,
Yeah.
if you do it from the beginning of the year, it's like $130 on Amazon.
What?
And there's
yeah, but no one wants to watch
1,000
baseball.
games. There's actually more than 2,000 games.
It's like a penny a game.
Yeah, literally, it's crazy. But very expensive to get the ticket. But I know that I'm gonna want it later, and it's gonna be more expensive later. So
Sure.
I just took the deal.
That makes sense, I guess, to you. Are you guys doing anything in Disney? And when are Disney's earnings?
Disney has earnings. So Disney trading at 122. It's about $1 off the highs here. It has earnings August 6th. So
Oh, okay. Just around the corner there. Hey, filing today for my viral video of the day. Every Friday, I like to do a little segment I like to call Will Tom Eat It, where I scour the internet for food for fat traders. But I thought that I would switch it up for you guys today because this seems up your alley. It's a place called Hoggy's Barbecue, and they are cooking up a sandwich they call the Pig Mac. The Pig Mac. Watch this.
Am I gonna take the Pig Mac off the menu? That's up to you. So Pig Mac, wonderful sandwich we have here at Hoggy's. It's a triple decker. It's inspired by the Golden Arches large triple decker sandwich, but it's bacon, pork, tomato, pimento cheese mac sauce, and then the new feature is our Caesar coleslaw. And as we've said in the
That sounds
past, Caesar
good.
coleslaw, texture, umami, great seasoning, creaminess. It adds such a great defining component to our Pig Mac. And if you want to try the Pig Mac and you want to show it some love so we keep it, come in and try it. Am I going to take the
where
Pig
are
Mac
you
off the
headed
menu?
to eat
That's
this?
up to you.
You gotta
So,
go
Pig Mac,
to Columbus, Ohio. I'm so sorry.
I to eat that though.
It does look really good. Caesar coleslaw. There's something to that.
I was like, he might have did something.
Yeah,
'Cause I'm not a big coleslaw person, but I love a Caesar. But I was like,
I love Caesar.
Yeah.
I love Caesar salad, Caesar wraps.
Only the third bun not needed.
Okay.
I mean, like, it's interesting.
Yeah.
Include it, but
Something. It's like something. Oh, that was cool. All right. Well, this is always a joy to hang out with you two, but what's coming up next?
We have confirm and send, and we'll take some questions from the YouTube chat if you want to throw them in there if you're hanging out there, because we love the chat.
We love the chat.
Do that.
Chat.
We're going to take a quick little 90-second break, come back, confirm and send, then we got our option jive after that. You're listening to Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Hanson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Mikey, we are back, my friend. A quick little market update because we haven't talked about the markets yet. E-mini S&P 500 futures are up 6 right now. We got as high as 64.21 in the overnight session, so about 20 points to the upside. NASDAQ down 6. There's your Sosnoff sell-off as he is gone today on the road for the show. You've got the Dow up 51 and the Russell up 8. Oil basically chopping around the 65 handle, 66.40 right now. You got volatility futures unchanged at 18.05. You got bonds down 5 ticks, gold down $34. It can't get out of its own way. Silver down 16 cents, and Bitcoin had a little bit of liquidation last night. Got down to 116 and change on the, 115, almost 114. It's down $2,700 on the futures. Spot is basically unchanged from the overnight session, but a little bit of weakness there. Saw some kerfuffles about big whales liquidating 800,000 coins here, big thing here, blah, blah, blah.
Yeah. Blah, blah, blah is right.
Is that how you look at it?
Yeah, it doesn't matter. It's going to continue to go higher as assets continue to pile into there.
Yeah.
But yeah, kind of interesting move in gold. 3 days in a row, straight to the downside. Mm-hmm. I do have a butterfly in there with 3 days left at 32.40, 32.20, 31.80. So maybe that'll hit.
Ooh.
But I also have an iron condor in gold. Short strikes at 3,200, 35.35, and that's in the V contract. So
locked and loaded.
Yeah, we are wrapped around the gold price. But yeah, I don't have any earnings trades to close this morning, so that's interesting.
Well, we still got time.
Yeah.
NEM, one of the earnings plays up to $1.50-ish. You got Intel down $2, and then I think that was it. Was there anything else? I think those were the only
NEM, Intel,
two interesting ones on the board. So, not a big day for earnings.
Correct.
If you got some questions, you can throw them in the chat now. But we do have some confirm and send questions. You want to get to them?
Yes.
Because then we got a long option jive, a good option jive, but it's a hefty one. A lot of slides. 20 slides, I think.
There are
or like 17 slides.
There's 16 slides.
16 slides. Yeah. A lot.
Let's dive in.
Cool.
Confirm and send. Today is 21 days. Day till expiration. I have to roll a 90 put in Uber, but earnings are on August 6th. Would you rather roll to September or close the position to avoid earnings? Well, if you're in August at the 90 strike, you're right at the money.
Yep.
So there's a couple of things. If you want to avoid earnings altogether, then I think you get out of the position.
Close the trade, move on. Yep.
But if you want to hold it for earnings and you're comfortable with the risk for earnings and you're willing to stay in the trade after earnings, I think you stay in the August cycle.
Yes.
Because the September cycle, while you're getting a little bit of premium, if you roll out, it has a 41% implied volatility representing a 10-point expected move for the September cycle, 56 days out. In August, you have a 21-day cycle with almost a 51% IV, 10 percentage points higher, representing an 8-point expected move. So in other words, over the next 21 days, the premium represents an 8-point expected move versus a 10-point expected move for 56 days. So you have a lot more premium relative to time in the August cycle. And if your intention is to roll it out anyways or close it for a winner if it rallies, I think you stay in August because you're going to get that big vol crush in August. You're not going to get it in September.
I think on one-sided trades, if you're directional, just to put, just to call, I tend to let that play out into earnings rather than roll it. If you had a strangle, I would say, you know what, the conservative adjustment would be just to roll this out and move on.
Yeah. But yeah, if you're trying to stay in this after earnings, then I think you stay in August and then you can roll to September afterwards.
Beautiful.
Or close it.
Let's get to the next question. For a covered call that has been breached, do you roll at 21 days or do you just leave it? Tend to roll whenever the strike gets at the money. I mean, if you want to maintain the stock position, that's going to be your most advantageous adjustment in terms of extrinsic value. When you're rolling, when the option is at the money, you're going to pick up the most premium. It allows you to move the strike out of the money. Once you get in the money, you have intrinsic value on that short call. So it's going to be, tougher to roll that out in time. So whether that's 21 days or 30 days or 7 days, it doesn't really matter. If I'm trying to hold the stock, I want to make the adjustment when the short call is close to at the money.
Yeah. And when you're thinking about 21-day rolling guidelines, it's to avoid gamma risk, but you don't have gamma risk with the covered call because your short call is covered in risk. So I totally agree with Nick. I think you roll it up and out or out when it's at the money. And other than that, you let it go and you still close it when you have 70, 80, 90% of the value out of the short call, or you roll it then because there's no reason to have it on once you've already captured all the value. So I think it breaks away from the traditional 21-day rolling guideline for sure. I'm working on building up my market awareness and setting up watch lists that will give me a solid view on the overall market. What underlying symbols would you suggest I include?
Ooh,
good question. So if you're just talking about static products, I think you do SPY, QQQ, IWM, GLD, SLV. So just the ETF versions of all the main futures that we look at.
You got to have the futures, though.
Yep. Yeah, that's what we look at. We just look at the futures.
I think you have to have a watch list with just the main, I'll call it the market. You have E-minis, NASDAQ, Dow, Russell, oil, volatility, bonds, which is /ZB, gold, silver, and then you put Bitcoin and ETH on there as well. Because I like to look at those. But those will tell you can look at 24 hours a day pretty much and see what the market's doing. And so that should be your first watch list because it'll tell you everything about your positions. If you're long Delta in Tesla, Apple, and ExxonMobil, and the market is up on the day, you're probably having a good day with your positions. You don't necessarily need to see what those stocks are doing. Those are the indices. Yes. Next question, please. Tom did a trade in CMG for earnings where he sold puts. Then on Thursday morning, when the trade went against him, he sold calls, turning this trade into a strangle. My question is, why did he do that instead of just closing the position since the IVR was around 10? I mean, selling the call is a way to reduce your overall delta exposure without adding more capital to the trade. You add a risk to the upside. So that's just a way to reduce your overall exposure. And sometimes, you want to lean long into lows and short into highs, or take profits into highs and buy into lows. I mean, that's kind of like a market dynamic. So selling the calls is a way to reduce overall long exposure while still leaning directionally long into lower prices.
Yeah. And I would say also he's not really concerned with any individual position because he has so many. So it's less about like trying to get out of this one for a scratch or a small loser. It's more about just picking up premium, forgetting about the trade, and just selling premium in there regardless of the outcome. If it were me, I would not have sold the calls. I would have just rolled the puts because I have way less positions and I want to give myself the ability to get out sooner than later. And that's how, not having risk on the upside after a big sell-off is one way to do that if there's a recovery.
Yeah. Yes.
Cool. Where do you guys look for new underlyings to trade or to find stocks that are suddenly hot, like the new meme stocks? I feel as though I'm always trading the same underlyings and I'm in a rut. Well, there's nothing wrong with trading the same underlyings that are liquid and easy to get in and out of.
Yeah.
But if you're trying to have some fun with some memes, you have your ear open to. You have to like look at Twitter, look at Reddit. Like there's places where you can find these memes, but we usually find them after they've already moved because people are telling us about them.
I didn't say that. You can look at the high option volume watch list. It's in the liquidity bucket. That'll give you your memes. I would say generally, I just pull up the S&P 500. I look at stocks that are moving in a big way to the upside or downside. So I just sort the list by, up or down and just kind of browse what's moving. If there's a stock that I'm interested in that's down 10 or 15%, I'm going to look at it and see if there's an opportunity to buy a dip. If there's a stock that's going parabolic, I'm looking for a, short delta position. So I think that's, the more conservative way to go about new positions. Very nice. Next one, please. What is the role of the US dollar in relation to the stock market? The dollar used to be very strong and the market was strong. This year, the dollar has been very weak and the market has not stayed strong. Oh, the market has stayed strong. Dollar has been very weak. Does this mean the dollar has no role? That just makes no sense to me. It's a good question. Sometimes things flip, but yeah, I mean, the dollar as the reserve currency, everything in markets is measured in dollars. So when dollar goes down, things get cheaper outside of here. So it's the same thing when the euro goes up and you're taking a euro vacation, it gets really expensive. The opposite is true here. And so, it makes buying US equities more attractive across, outside of our borders because the dollar is weak. You can buy more relative to the currency conversion. And so that's a natural bid from outside.
Yeah. And also I would say, although a relationship is expected, it may not be, it's not going to be perfect. Like that's the nuance of correlation. Like you could have a correlation of 80% where if this thing's happening, I should expect this other thing to happen 80% of the time.
Yeah, it doesn't happen all the time.
It doesn't happen all the time. So like there can be a lagging effect right now. There can be other things compressing the US dollar relative to the stock market that's mooning due to X, Y, and Z.
Yes.
So sure, eventually I think you might see some movement that makes sense, but right now you're not seeing that pair play out.
Fantastic. Great questions. Did we see any from the YouTube chat? Just real quick, if we want to do like one or two of them.
Yeah. Is it reasonable to expect a beginner using Tasty Mechanics starting with 10 to 25K to live solely off trading
from the juice
with 5 years, or is it likely to supplement? Definitely supplement. I
gotta have realistic expectations, of course.
Yeah. Like the only way you live off premium with no job consistently is you need to have
the capital. You have to have realistic expectations. You have 25 grand and you make 50% a year. That's a great return. That would be that's amazing.
Yeah. But to expect to make 50% a year every year, now you're doing better than Warren Buffett.
I don't think it's out of the realm of possibilities to put those sort of numbers together, but realistically, it's not going to support your living. But if it pays the light bill, pays the car note,
it's great.
Those are things that people don't think about.
Yeah, but if you're just selling premium and SPX and you're doing one contract or 2 contracts, that's different. But how much money do you need to do that? You need a couple $100,000. So, but yeah, you could totally live. You could live off 1 or 2 contracts in SPX if you're living within your means. You just got to be able to afford it. And
we got some people with UNH just going nuts here.
Oh no.
I know. Earnings in the middle of the week next week.
Kevin asking about slides from the show yesterday.
Yes.
$20 wings. How do you manage losers? So the losers were just let go, right? In that study.
Yeah, I think there was we did 10 and 25% management.
For management of winners.
Of winners. The losers just let go.
Yes. Yeah. And that's typically the case for 0-day stuff.
Yes.
I think that's it.
Great. Awesome. We're going to take a quick little 90-second break and come back with a very juicy option jive from our very own Mr. Jaws, Sahil. Beautiful 16 slide. Monty Hall research piece. It's going to be a great one. You don't want to miss it. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Got friends? Get $250. We'll give Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was
would
right
say.
there. Right when we
So,
started.
He
we
was
did-
my friend first, clearly. Met at work.
Yeah, Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Say it. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
It's option. Jive.
Mikey, we are back, my friend. E-mini's only up 2, NASDAQ down 20.
Crashing.
We're crashing. We gonna get a down move today?
I think so. Bitcoin's down 3 large.
Yeah, 3 large. There you go.
I think we might see a little sell-off here.
Ooh, we've been waiting
Gold
for
down.
it. Something.
Gold down, Bitcoin down, market down.
Yeah.
See.
We'll see.
We will be here for it.
Yes, and Tom is gone, so we know there's a little bit of volatility. It's 4 for 4 in the last 4 times.
Yeah. I think it only makes sense that the market will go down. The market hath gone down.
Can't go
all
up
4
forever.
times. No, definitely not.
Playing the odds.
Yeah.
Not the fool.
Playing the odds, not the fool.
Lessons from Monty Hall. Beautiful. A play on words.
I'm excited for this one. I see some pictures in there.
Yeah,
Some nice
they're good.
imagery.
Well, it's a card game / like it's a probability game.
Yeah.
Oh.
We got a ton of slides. Let's
Let's do it. Then we get to the opening bell. And then we have fast market trade ideas. It'll be fun.
We love fast market.
We love fast markets. The fast market hit rate has to be well above average.
Yeah. The win rate's like 70%.
Yeah, it's great.
Based on the ones we've taken.
It's great.
From us taking over.
Yes.
All right, what are we even talking about here, you might be thinking? Well, we're going to let you know. Since trading is all about math and statistics, we want to introduce a fun thought experiment that seems non-intuitive at first, but has practical applications to trading. The Monty Hall problem. Monty Hall problem is a famous probability puzzle from the game show Let's Make a Deal. Contestants choose from one of 3 doors, behind one of which is a prize. The other 2 doors are goats.
Yes.
Goats.
Losers.
Yes. After you choose, the host, who knows what's behind the doors, opens one of them to reveal the non-prize.
Yes.
And you're given the option to switch from your initial choice. The question is, should you make the switch?
Do you know this?
Yeah.
Okay. I'm not going to spoil it. Next slide, please.
Let's say you put up $1 to play a game where there are 3 cards to choose from. One of them is the ace of spades and the other 2 are jokers. If you pick the ace of spades, you win 1-1. But if you pick a joker, you lose your bet.
There we go. Okay.
Simple as that.
You're going to pick the first one.
Yep. On the left.
Yes.
Naturally. And the host tells you, knows which card is the ace of spades, that the ace is not the middle card, and proceeds to ask you if you would like to stay with your first choice or switch to the right side card.
Yes.
So now you have been given
some information.
A little
you got a little tiny taste of information here.
And the question is, Do you stay or do you go?
Is it a 50-50 shot still?
That's a good question. If we pop to the next slide,
yes,
we can walk through this thought. So as a newbie gambler, you decide to stay with your first choice because you think the host is trying to play games with you, trying to get you to switch because you picked the ace to begin with. It's a whole
mind game.
Are they trying to save themselves from paying me out?
Yes.
Or what?
Yes.
However, you did pick the wrong one. You struck out. You picked the Joker.
Of course.
Obviously, you should have switched because we know that the ace was on the right side.
We don't know it, but we know that there might be a change in the odds, which is a Monty Hall problem.
Right. So the question is, when you have a choice to switch, do you switch? Well, we can break it down mathematically. So not switching, you actually keep the odds of being right at just 33%.
Because you had the original number there.
And it's it is kind of a thing where you're like, well, what?
But no, there's only two, so it has to be 50%. But you didn't, when you picked, you didn't have that information that the middle card was a Joker. So you weren't picking between two, you were picking between three. Now you have more information. You have a new, data set.
Yeah. So let's break it down. Next slide here. Intuitively, people think that when offered the choice to switch, the game becomes a 50-50 proposition. This is not true because of a concept called variable change. The game becomes a 33-67 proposition with the option to switch, having a 67% chance of being the ace and staying with your choice just 33%. In other words, you turned a game where you would profit in the long run to a losing proposition. Let's look at an extreme version of the situation to better understand why switching does not result in a 50-50 bet.
And this will get to trading, peeps. I see some people like, okay, I love this, but where does this go with option trading? We're
gonna let you.
We are getting to that. Okay. There's 15 slides here. There's a lot.
We're almost done.
Halfway.
Let's say you now have 20 cards. 19 of them are Jokers, with just one being the winning ace. Again, you randomly pick the first card. Obviously, you love picking the left card, so you pick the first one.
First left.
The upper left.
Doesn't matter which one you pick.
Yeah.
It's just the ease of example.
Exactly. The host now offers you the same option. He tells you that 18 cards are not the ace. Would you switch? It seems more intuitive to switch now because we have a larger population size of cards. Because the host is leaving you with an ace and a Joker, unless you happen to pick the ace in the beginning, which is a 5% chance, you have a Joker, which means there's a 95% chance the other card is an ace.
Yes. This is a good example. It's a good way to put it.
Totally. So breaking it down mathematically, the situation with 20 cards is identical to the situation with 3 cards. One just has more cards. When you break it down to the net end result, you're left.
Let's jump to the next slide, guys. Yeah.
You're left with one choice, and it's between 2 cards. It doesn't matter how many cards you start with. In the situation of choosing to switch,
yes,
you're left with the same end result of 1-1. So one has more cards. The one with 20, obviously, the probability of picking the ace is 5%, where the probability of picking the ace with just 3 cards is 33%. And therefore, the chance of picking the ace if you switch is 95% in the situation with more cards, and just 67% when there are just 3 cards. And again, it's because you're getting more information into your decision-making process and then making a new decision based off of that.
Yes.
With a lot of the variables out the door already. A lot of the variables are gone.
One full set of variables is gone out of the 3. And so it changes the probabilities.
Yes. So ultimately, it's because you have new information that you didn't have when you initially chose, as the host will never remove the winning card. So what does this have to do with trading, you may ask? When you're managing trades early, you have the same phenomenon at 21 days or any other point you choose to manage or make an adjustment or defend trade or offensively roll, whatever it is. By choosing to simply manage all the trades at 21 days, regardless of any other information, you see the results below. So average P&L per trade as a percentage of credit, average daily P&L as a percentage of credit. volatility of P&L per trade as a percentage of credit, and volatility of daily P&L percentage of credit. So ultimately, all of your risk management statistics are much better if you are managing at 21 days.
P&L volatility, the percentage, the volatility of P&L as a percentage of the credit, all those things are tighter. Obviously, you give up some of your average P&L because you're doing this regardless of what the position is. So you're going to have a lot of losing trades that could potentially come back as winners. But overall, it's that piece of information that you didn't have at the beginning, how it relates to the Monty Hall problem. Like, you have already watched 20 days of price action, and you've already seen what that piece of information is. Now you can react to it.
Exactly. So on the next slide here, 21-day mark, we have undergone variable change, meaning we have more information about the trade that we didn't have in the beginning when we placed it around 45 days, let's say. The current P&L of the position, how much premium we can make going forward. I think that's another thing to consider too. Like, okay, I can make $2 on this trade 45 days out. I've made $1.80 on this trade with 21 days left. Why am I still in this trade?
Yes.
I can make 20 cents from here going forward, and I still have all the risk. It doesn't make sense. Which this leads us to managing winners too. Same sort of methodology, same idea. And if we pop to the next slide, we have new information about our current P&L at 21 days or the situation of the trade. It would be foolish for us to not optimize and adjust the trade to manage risk or take some winnings off the table, depending on the situation. If our trade's a winner at 21 days and we held to expiration, we make much less per day going forward, and we have all of the same risk. In other words, you actually have more risk because you have your winnings on the table.
Yes.
If the trade's a loser, holding the trade to expiration becomes a higher risk because you have gamma risk, et cetera, but you can have a high return on the trade because you can make everything back that was loser there at the time. So disregarding P&L at 21 days versus P&L at 21 days is positive, and P&L at 21 days is negative. Of course, if you have a losing trade and you leave it on, you have the ability to make back a lot more relative to what you started with because you're taking losses on a trade. It's similar to like a credit spread that's near max loss. We leave it on because there's no reason to book it if it's near max loss and I don't have much left to lose going forward. I can leave it on and potentially get lucky with a big move in a short amount of time and get all that back.
Yeah.
So the choice whether to manage your trade at 21 days is ultimately up to you, but it is wise to take in all of the available information since the result of the trade from 21 days to expiration will vary depending on if the trade is a winner or loser. And this extrapolates to other areas of trading to include implied volatility of the underlying, delta of the trade, and much more. So a couple of takeaways for you. We generally stick to managing trades at 21 days to simplify decision making and have more peace of mind, as more 16 delta strangles have already undergone meaningful shifts by then. And yeah, I think it's
not
always
gonna hold the 70% winner.
Yeah.
Now that you have new info or 50%, you can close them.
Yeah, you gotta check in on your trade and make adjustments as you see fit. Sometimes there's no adjustment to be made, but a lot of times there is. Similar to the Monty Hall problem, where the host tells you which cards are not the ace, a 16 delta strangle will have already gone under significant change by the 21-day mark, and taking those changes into consideration can fine-tune your management strategy to your risk-taking objectives. And we saw that with the data in terms of the risk management factors are all much better if you're doing something versus not doing something.
Changes in volatility, passage of times, theta decay, directional moves, those are all things that have changed over that period of time that you can take and make a decision on whether the probability, of whether to switch the card or not. Like that's really what you're looking at here. That's the example.
Yep. Losers at 21 days can recover with added risk because you have losses to make back. winners tend to be to become low risk, low reward plays if held to expiration, but certainly still risk there, especially if it's undefined risk.
Yeah.
Take the winners and run, and use your own personal risk tolerance for losers. Remember that you now have more information than you started with after the trade has already passed a couple of days. So making adjustments based on new information, always going to be better than making adjustments or doing nothing based on your initial information where everything has changed since then.
Fantastic.
That was fun.
That was a fun segment. Great job from Shark.
Mm-hmm.
Good job on that.
Mm-hmm, mm-hmm.
Very nice. E-minis up 4. You got NASDAQ down 11. They bought the dip a little bit.
Yeah, naturally.
Shockingly.
Yeah. Maybe we'll get a little dumpy do later today, but they gotta buy them at the open.
Of course, you can't. You gotta have that upside move. Anyway, good stuff from the team. Thank you for putting that together. We're going to take a quick little 90-second break, come back with the opening bell, and then we got fast market shortly after that. We've got another market measure that's going to be a great one. It's a bullish skewed strangle, so playing the upside a little bit with a neutral / bullish position, so that'll be a good one. And then we're going to go to Scott. We're going to take calls, 855-238-2789 or 855-BTASTY. Very early to call. Don't call right now, but write that number down so that you can give us a call in about an hour and a half or so. We're going to take a quick little 90-second break. You're listening to Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
All right. Perfect. I would like to buy Park Place.
No,
What?
there is no Park Place in this game.
Yes, there is. I'm looking at it.
No,
I
this
will
is mine.
take
It's
it.
mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want
I'm
it.
the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly. This is the mayor, and I am overturning everything, and
You're
I am
in over
allowed
your
to buy.
head.
Excuse me?
You're in over your cute little head.
Don't
right.
patronize me.
You
This
don't
is a
come
board game.
down to where the big chimps play and expect to get a banana, sweetheart. You
Big
gotta earn it.
chimps. Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a wallet? Did you just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads. And what do you just have? You have a bunch of hotels and houses, which in this market is ridiculous. A nice, simple house on Mediterranean Avenue. A beautiful car worth 10 times more than your dog who is gone. Cut a deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. The old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
I am a self-taught retail trader. I didn't go to school for finance, and it's not necessary to be successful in this industry. All it takes is a little bit of dedication and a lot of time to learn the lingo and learn the strategies. So standard deviation is basically just the probability of being in the money or out of the money. So one standard deviation with options is going to be probability of 16% being in the money on one side and 16% on the other side. So if you take those two together, you have a 68% range in that spectrum. So that would be one standard deviation. If you just focus on a couple of core key concepts and go from there, it will allow you to educate yourself and propel yourself through the options trading system.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Good morning, everyone. We are back for the opening bell. E-mini S&P 500 futures up 5. Got the NASDAQ down 9. Big old nothing burger. What was our expected move yesterday going into today?
28 points or something like that?
28 points. We'll see if we get past that today. I mean, looking at the market, we've had 2 days of just choppy chop fest. NASDAQ looking kind of the same here. The Dow up 49. The Russell really the only thing moving right now, up 10 and change. You've got oil up 20 ticks, 66.22. Volatility futures unchanged at 1807. Bonds down 7 ticks. Gold got below 3,400 for just a moment here. It bounced back. It's down 30. You got silver down 17 cents. But Bitcoin was down 3,000 on the futures. Spot basically unchanged. It's having a little bit of a bounce back there. Couple of the earnings stocks. Intel looks to be down about $2 here. I think that's a little past the expected move. NEM, another one that had earnings up about $1.80-ish here. That's probably an inside move there. We didn't play either of those. Or I have a trade in my Johnny Trader account. I think I'm short the 62.5 calls there. So I might have to do something there. But Intel and NEM, not exactly the most exciting earnings trades on the board.
Yeah, they
saving some powder for next week for the festivities.
Yeah, they didn't give us any exciting stuff to end the week with, but yeah, next week you have basically every other stock that you could think of.
Mm-hmm.
There are a ton. Almost the entire all earnings watch list is next week, from the 31st at the end of the week to the 25th. You've got, just sorting it by the price of the stock, you've got, let's see.
For next week?
For next week.
Yeah.
Coinbase.
Yeah. Coinbase is in there. Robinhood.
Amazon.
Apple. Meta.
Palantir.
Yeah. Big names. UNH, PayPal, Boeing, UPS, Spotify. Next week's the big week for earnings.
So yeah, I guess we will have to delay our earnings fun till next week.
Yeah. You don't have to push the chips in every day for Intel, selling 30-cent puts.
No. Can't do it.
No good. Getting into the open here, E-minis up 3, NASDAQ down 16. We'll see what's moving once we open here in just a moment. Pre-market, Apple up $1 or so. NVIDIA here. And there's our bell. E-minis up 4. NASDAQ down 23, the low of the session here. Let's see where Intel is. We've got Intel at 2077 down $1.70. NEM at 63.73. Anything popping off the board here for you, Mikey?
Not really. In terms of what's moving in my account here, AMD up almost $1. That's good for this position. I can actually close this one.
What'd you have there? Like a diagonal, call diagonal something?
No, I had a short put.
Oh, beautiful.
The old tried and true. Just bought that back for $2, so that was a $140 winner.
Very nice.
I do have an Apple call diagonal here that I'll just hold through earnings. It's a September-August one.
Okay.
FedEx call diagonal, it's at a scratch right now.
Mm-hmm.
But the interesting one is this gold futures position, because I've got the broken wing butterfly on the downside with risk still. The 3240, 3220, 3180 expiring in 3 days.
Probably take the money and run.
Well, it's basically worthless.
Yeah.
So yeah, I'm just gonna leave
buy
it there.
back the short spread, put spread if you wanted to, or leave it. I mean,
yeah, if we get a continuation of this move, I could probably sell out of it for 20 or 30 cents, but it's basically done. But that'll be a nice trade. That's a $250 winner. And then this sell-off actually works out for this gold iron condor I've got in the next contract, the V contract.
Very nice.
But yeah, I really don't have many positions on that are worth much at all.
Yes. Just looking at S&P 500, some of the bigger movers to the downside. Charter Communications, you got Intel in there, Comcast on the downside. Coinbase down 5 and change here. You got Alta, LRCX, Micron, some of the chip names. Boeing down $2 and change. Starbucks and Love down a little bit. On the upside, you have DEC. I think that had earnings after the close. So that one's up 21 and change here, up 20%. Big move in Decker. NEM is up there. You have some of the healthcare names, Humana. Palantir up $3 and change. Feels like that stock goes up every single day. We're back to that sort of trade here. E-minis only up 3. You got the NASDAQ down 13. It's chop fest to start the morning. A little bit of weakness in some of the currencies. Dollar, a little bit of strength today. You've got the euro down a little bit here. Start the session about 0.4%. Down below the 18 handle, which is helping me. I'm short a little bit of euro there. What else do I have here? Corn basically unchanged here. Yeah, nothing crazy. Very much an inside day. NVIDIA down 54 cents. Taking down the market.
UNH up almost 5.
Ooh, buy the dip.
Yeah.
I need it a little bit higher than this.
Yeah.
But a nice sign nonetheless.
Yeah, we'll see where that goes. That's going to be an interesting one to watch.
Yes.
Drop from 600 to 280, but earnings coming out next week.
Yes. I mean, that
3-point expected move.
There's not a shred of good things coming from that camp.
Yeah.
Makes you think it might be time.
Might be. Just might be.
Very good. Well, nothing moving right now. You want to take a quick little 90-second break and come back with things that are hopefully moving with our fast market trades, get some trades ideas?
I would love to.
Let's do it. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I will pay for the first bar mitzvah that has eggplant parmesan as the primary dish.
Can you throw weddings in? I'm done with bar. I'm done with bar mitzvahs. If you throw weddings, right? If you throw weddings in.
Hold on. Cancel the quinceañera. You're a Jew now. All right, we got it. If I got married again, I would have eggplant parmesan as my dinner. If I get married again, how stupid are you? Not if I get married again. If I was
exactly
getting
what
married.
you said.
Don't cut that out, Beth, for him.
If I got married again, I would have eggplant parmesan as my dinner.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University, #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago, #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign, #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Mikey, we are back, my friend. E-minis up 6, NASDAQ down 25. A little bit of movement there. That's nice to see. Maybe we get a little bit of a pullback. Volatility up 4 ticks. Give us a little something. Just a little pop in volatility, a little movement, something. I can't grind all day. Can't do it.
I'm right there with you. We need something.
Just give me something to get me interested.
15 point, expect to move the rest of the day?
Ugh. Don't even say it. Don't even speak it into existence.
It's crazy.
Give us an outside move, just once.
How could it be 15 points? That's the question I always ask myself. It's a $6,000 price.
It was funny. I was talking to E and Sahil yesterday because they were looking at. He's working on a market measure for sometime in the future about the VIX and how many movements and in VIX points relative to where the VIX was. And one of the trick questions was that the VIX has never been below 8. And so when you got to 10 to 13, you never had a 5-point vol contraction. And I got to reminiscing about 2017 and 2018, where we had 9.5, where a VIX above 10 was an interesting point in time.
Yeah.
Where you would the market would open up 3 points and move, 1 or 2 points by the end of the day. And it would be up 5 basically every day. And vol just gotten, 0.5% to the downside, 1% to the downside. And we got to a 9 VIX. And then we had the VIX explosion, XIV, where that just got wiped out overnight on a move from 9 to 18. It was basically 100% pop in volatility. But I was telling E, I was like, you think this is bad? This last couple weeks is bad? Let me tell you a story, kiddo. Yeah.
This is still some products are chopping.
This is still something.
Yeah.
You don't know pain until you've traded through a 10 VIX. So good stuff there.
It's almost untradeable when it gets that level.
It was horrible. Do you remember Apple would be up 15 or 20 cents every single day? It was just it was the only thing we looked at. Oh, Apple's up, market's up, it's done, it's over. Amazing.
Yeah, we are creeping towards a similar level of low volatility, but hopefully something can give us something to see some market movements.
Yes. You want to see if the peeps gave us some?
Yeah.
We got some fast market trades. Fast market. E-minis up 4. NASDAQ down 23. Give me something, peeps. First trade. We're looking at wheat. All right, ZW. I love wheat more than gold. I don't know. I think that's a you problem, man. And when wheat gets cheap, I sell some puts. Ivy is not bad. They're at almost 40. 520 puts in September for me. Almere, Newark, California. Let's see ZW.
520, eh?
They're looking at September, so 63 days. Pretty far out there. I could do a little put spread here. I mean, all the ags have been soft. So wheat at lows, you have corn at lows, you have soybeans pretty much at lows. So they are all at price extremes here. So I could get behind this. Might do a little 10 point or 10 tick wide put spread. A little Johnny something. in here for like, might have to move it up a little bit. Do it for like 1/3 the width of the strikes.
I just did a diagonal spread.
Okay.
So I bought the November 560 call, and I sold the September 595 against it for 19 ticks.
All right.
Whatever you want to call it. But it's $950 total risk.
All right. I'm going to try
Nice
and
wide.
I'm going to try and do I'm doing the 540 530 put spread. It's a little tiny Johnny put spread around the 30-ish delta. So I will follow suit with you. It's going to take a long time for that. That trade is going to be a set it and forget it. $200 in buying power, small little Johnny trade. I like it. We're both in for corn, for soybean, for wheat. I'm going to get it right this one. But we both do have long deltas in corn as well, not soybeans.
Yeah.
1 for 1. Love it.
Lulu broke the 5-year lows. No earnings before September. Thinking about selling a September 200, 230, 240 Jade Lizard.
200, 230, 240. Yeah, trades at 11:45. Colin in Rochester, New York.
So September.
Selling about $3 in that call spread, which is about 1/3 the width of strikes. Pretty mechanical there.
Yeah. So this does have earnings. It looks like they have earnings September 5th.
Mm-hmm.
If you look at the IV, in August 22nd, it's 37%. August 29th, it's 37%. And then it jumps to 42% for the September 5th cycle. So that tells you that the market is pricing in earnings to be there.
Yes.
With that said, a Jade Lizard is still directional enough to where it doesn't matter.
Yes.
You can still get paid on an up move with the Jade Lizard because you have no risk to the upside with this setup.
Yes.
So it's a little rich for my blood. 3K buying power, $1,100 credit as it stands right now.
Mm-hmm.
But I'll get into a little put spread.
Yeah.
Yeah. I'll do the 200 195.
Okay.
Actually,
190.
let's make it a 210 200.
All right. So right at the money.
Right at the money, which you still have 8 points of wiggle room to the downside. Yeah. But yeah, 210 200 for $3 and change.
I like it.
Yeah.
Good play.
We'll try and paint the bottom here.
Yeah.
Yeah.
I mean, it stock's on its butt. Why not?
371. I was just filled out.
Small little Johnny trade.
Yep.
Beautiful. 2 for 2.
2 for 2.
M-Phase. I know Tom hates it. Yeah, because it had it got absolutely smacked on earnings.
Twice.
Yeah, M-Phase trading at 35.39 here. But contrarians have to try at this price level. Ivy rank is pretty low after earnings. So what about buying a 35.37 October, August? Poor man's cover call, slightly bullish. I am with you with that sort of directional trade. I sold the 35 strike puts. I did this, I think, yesterday or 2 days ago. I did it at 277. It's marked at like 310. So I'm out about 30, 40 cents at the moment. So I'm with you with some long delta Raj in San Jose, California. I won't be adding to the position, but I certainly think this is an interesting one for short put, poor man's cover call, diagonal spreads, that sort of thing.
Yeah, I'm already in a short put at 40. There you go.
We are with you.
We're
in
with
solidarity.
In sentiment and solidarity. We're
Yes.
with you. Cool. Natty Gas. Okay, let's get crazy with Tom's money. Okay.
Okay.
Going with
nice.
a double Widowmaker, a short copper, long Natty Gas pairs trade. What could go wrong? Famous last words. Perfect situation for contrarian sentiment. So.
Mikos from the chat.
So.
Beautiful.
I'm already long Natty Gas.
See, we asked for trades from the chat, and the chat came through.
Yeah.
I love that. You're long Natty Gas.
I'm long Natty Gas.
Because we did that with Thomas on Tuesday this week.
Yeah. So I'm long Natty Gas by way of a micro Natty Gas contract, the MNG contract.
Okay. should be working nicely today.
Today, yes. Overall, not yet. But I will layer on this same idea, and I will short the micro copper futures contract.
Ooh, be careful. It is still a little, I think it's $5 a tick, so it's a big still moves.
Bless you.
But the options there in HG aren't great. I have an Iron Condor in HG that leans me pretty neutral, I believe, but I'm pretty far out in time. So I'm only 32 days out. I'm wrapped around 6.2 and 5. So a little bit of short delta. So I have this synthetically on. So I'm with you, Mikos.
So yeah, the micro HG contract's pretty big.
Yes.
So I'll go to the August 26th cycle.
I know that because I felt some pain in that contract.
I'll sell the 605. So it's a $500 max profit, $800 max loss, slightly within the expected move in the 30-day cycle.
Beautiful. And you already have the long natty gas, so you don't need to add that component.
So we'll get in there.
Yes.
Do that.
Beautiful. I love it.
Cool.
Love this huge post-earnings drop is a good opportunity to get long the 32.5, 35 call spread in SEP. It's a tight one. Obviously, the stock is low price stock. Let's see, 32.95, low Ivy rank, 6.8. Implied volatility in September, 36%. Let's see what we can do here. Yeah, I'm admittedly not a big love guy. I'm actually quite the love hater.
Yes, you are.
I love love. I don't love Southwest.
Yeah, we got paid on the opposite side. We didn't put Zebra in love.
From Katie.
Katie
gave us that.
But a long call spread in September, I'll join you
It's
there.
a cheapie. It's at the money. Like
it's cheap.
32
Risk one to make one.
Yeah.
I like the debit spread angle because it is 36% IV. There's literally no premium here to sell for undefined risk trades. So yeah, I think you can always, when it comes to a debit trade, you can always manipulate your risk reward much more easily than with a short premium trade where it's take what you can get type setup. So yeah, I'm in 32.5, 35.
Yeah, I'm gonna do it at 2 for $1. Why not?
Sweet.
I'm gonna try and get it filled. Not getting. I'm at 108 now. I'm gonna let that sit at 108. See if we get filled. Very nice.
Cool.
SPX 0 day. Sell the 16 Delta Strangle and make the wings 30 points wide. Andre, Batesville, Arkansas.
Okay, so Andrew in the YouTube chat was asking us to do a 0 day trade. So I'll do this.
Okay. So maybe make it a little bit tighter. Do a 10-point wide.
Yeah.
You could do like the 6350, 6340, 6390, 6400.
Yeah.
I could do that.
$2.
225. Yeah. All right. Let's roll some dice here today, boys.
And once we're both filled, something's gonna happen and the market's gonna drop 100 points. That's what's gonna happen. But
225.
If we have to,
E-mini's up 7, Nasdaq's up 18. No big deal.
If we have to take some losses to bring some volatility back, then fine.
I'm willing to be that goat.
But yeah, we were both filled on the same trade, 225.
Yes. Very nice.
Lovely. What we got next? Snapchat?
Oh, man. If you missed my covered call segment on life cycle of a trade, I held a covered call in here for quite some time, made a couple bucks on it. It was nice. But this thing is a dog. Selling an August call ratio, buy 1 of the 11.5 calls, sell 3 of the 12 calls for 50 cents. We haven't seen 12.5 since early January. August, I kind of like this.
August.
The 11.5, 12. I think you gotta, if you're gonna do this, I would do the 11, 12 and do this for like a 30 cent, or you could even move this to like the 10.5. Only uses $400 in buying power. This we're looking in the August. I might even do like the 10, 11 and a half. 1x3 for 27-cent credit. Yeah, let's do that.
Yeah, I'm gonna go to.
What about the 9.5, 11.5? 9.5, 11.
So I'm gonna buy 100 shares of stock.
Okay.
Because one thing that worries me about Snapchat is this could turn into a squeezy type stock where like people meme it.
Yeah.
So I'm gonna buy 100 shares so that I have no upside risk. But I'm gonna route the 10, 11.5 call ratio on top of it in the earnings cycle, so the 14-day cycle, and basically do that for a scratch.
Okay. I'm gonna do the 9-11 1x3 in the earnings cycle. $600 in buying power. It looks like it's gonna trade at around 10 cents. If I can get filled here. E-mini's up 7, NASDAQ up 17. Buy the dip.
Yeah.
The dip has been bought.
Naturally.
8 cents. Let's see if I can get 8 cents. Come on. All right, so I'm into the 1x3, 9-11 into earnings. Hopefully it doesn't get memed.
Yeah, so I just bought 100 shares and did the 10, 11.5 call ratio in the 14-day earnings cycle.
All right.
If we get any rally, this will be a $300 winner. $200 winner.
Love
Sweet.
Next trade, please.
Costco getting close to 920 support level. I am long. How about a bullish diagonal?
Ooh.
September 930, August 950 for $2,300 debit. So it's a little expensive for us.
Mm-hmm.
But I like the idea. I think if you're doing the 930, 950, one thing to consider here is you're paying $2,500 as it stands right now for a 20-point wide spread. Not the end of the world. Paying a couple dollars over a large product where you have thousands of dollars of extrinsic value, but you do have upside risk here. If Costco rips to 1,000, your profits start to dwindle down to 0. So I think you just have to be cognizant of that, and you can see that in the risk graph.
Mm-hmm.
Everything's good until you get past 1,000, then you start losing money because you've paid more than the width of the spread.
Yes.
So with that said, right now, I think I might move this up. I think I might move it to the 940.
To an out of the money call diagonal. Yeah, I agree.
Yeah, the 940, 960 is closer to $2, but you could also do like the 940, 965. Now you're under the width. You have a 25-point wide spread. You're paying $24 for it. Similar cost. You have a lot more profit potential with this setup than the previous setup.
I like it. I like that trade.
But still expensive for us, but just something to think about.
Yes. Very nice.
What I will do is I will do the 1,000 strike calendar spread.
Ooh.
So
Play for that nice round number. Do they when are their earnings?
I don't see
do they already report?
I think they did.
Oh. Okay. I like it.
So, yeah, I'm gonna do the September, August calendar spread at 1,000 strike for $600.
Beautiful.
Much better. Filled at 673.
There you go. Nice trade. Next trade, please. QQQ, bearish. I'm becoming more cautious about selling premium in low IV environments. I feel you. Bio 565 or 567, 565 bearish diagonal in the SEP August cycle. Always go the closer at the money first. You're buying the spreads. You go 567, 565. SEP August. Sean in Hong Kong. So I'm with you with a little bit of short delta. I too have a call diagonal spread. I am at lower prices. I'm at 555 for my long option, so a little bit more gamma on my position. I'm also short a similar position in SMH. And then I believe I have my SPX wide butterfly still at the end of August expiration. So I am ready for a little bit of a pullback. I have a little bit of a hedge on right now. I'm with you. I agree with you. I think it's prudent to start looking at some little hedges.
Yeah. September 567. 565. So yeah, this one, similar story. You have a 2-point wide diagonal for $6. It's just a calendar spread. This isn't bearish enough.
Yeah, you gotta move the.
I think you got to move it to the 565 long in September and the 555 short in August, or the 556, 557, something like that, where you're spending less than the width of your spread. So if there is an actual move to the downside, you'll get paid on it, because you won't get paid on this 2-point wide that you're spending way more than $2 for it.
Yes.
But I'm already in a SPY downside diagonal, the 630, 615. So that's a big one, a 15-point wide for $8. So I'm going to keep that one, and I'm still with you on this.
Yes. We are in solidarity with you.
Yes. Last one.
Cool. Last one, please. Drum roll.
Mama from Jack and Philly. September 16, Delta Neutral Strangle.
September.
Cookie Cutter.
All right.
So Bob has earnings middle of August. You can see that with the IV bump in the 21-day cycle. So I'm going to be out on this one.
Yes. And it's a
Chinese stock that I don't trade Chinese stocks.
Pretty capital intensive.
It is pretty capital intensive, yeah.
To be naked in here.
3K.
So I'm also going to pay pass.
If you want to do this for earnings, I think you wait until earnings and then you do the September, or you even do the earnings cycle one. But for earnings strangles or strangles within the earnings cycle, it's a lot of risk with less reward, because the premium will stay bid until earnings. So I think you wait until earnings and then recenter it and go with that. If you're going to do it.
I agree. So trades, I got filled on my wheat short put spread. I'm still working the love call spread, not getting filled on that one. I did the SPX 0 day. I did the 1x3 in Snap. And that's it. That's it for me. I had a bunch of the other positions, so we're in the same boat.
Yeah, I did the wheat call diagonal spread. I bought November 560, sold the September 595. That was $950 in risk. Lulu sold a put spread 210, 200, 371 credit. I added an HG short call spread to create the pair with my long natty gas position, short copper. That was the 605 in the 32-day cycle. Southwest Airlines bought a call spread there, 32.5, 35. SPX 0 day Iron Condor, 63.50, 63.90 short strikes, 10 points wide. Snapchat bought 100 shares and layered on a call ratio on top of it, the 10, 11.5 in the 14-day cycle, which is the earnings cycle. And Costco, the 1,000 strike calendar spread, long September, short August. All of those trades I have posted to the follow page already.
Mine will come very shortly.
Yeah. So if you want to check them out, alter them, fade them.
Yeah.
You can click the opposite button, just fade it.
Yeah, no problem. Do you, boo?
But yeah, good stuff.
Cool, good stuff. We'll take a quick little 90. Oh, there's the fast market music again. Very nice. We got it twice.
Yeah.
It was so nice we had to do it twice.
Sometimes you got to do it.
Oh, good. We're going to take a quick little 90-second break, come back with our market measure. We have a market measure on trading bullish strangles presented by the CBOE, and then we're going to come back with Scott for our phone calls, 855-238-2789 or 855-BE-TASTY. That is the phone number you can call to come hang out with us, either talk to us or ask Scott questions or give him suggestions or give him grief for things that aren't yet in the platform. So We're going to take a quick little 90-second break. You're listening to Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Mikey, we are back, my friend. E-minis up for the NASDAQ up 21, the Dow and the Russell actually in the red, the Dow down 46, the Russell down 7 here. Oil sold off a little bit. /CL 6557. You've got volatility futures up 4 ticks, 1810. You got bonds down 4 ticks, gold down $30, pinned at 3,400 here, silver down 19 cents. Bitcoin, the low of the day or near the low of the session here, $3,200 to the downside on futures. Spot down 96, and Ethereum remaining strong, $44. A chop fest, death by paper cuts.
Indeed.
Yes.
Yeah, it is
Painful.
quite painful, but now that we've got our 0-day SPX Iron Condor on,
we have something.
We got something to cheer for here.
Yeah, that'll benefit from this chop fed.
I forgot. I need to put in a GTC order for this one.
All right.
To buy it back for 50% profit, so that I don't forget.
Buying back my CMG puts too. CMG up $1 and change here. Sold those yesterday into the down move. So it took about $50 out of those. Nice little trade. Trying to look through some of my stuff, see if there's anything I can take the money and run on.
Lovely.
Very good. Tesla almost 8.
Yeah.
Big move in Tesla.
Tesla. That's it.
Yeah.
Palantir.
Yeah, we're getting into the faster movers kind of holding the market up here. NVIDIA as well, 174 and change. I think this will be a new high. Yes, a new high for NVIDIA. 5 trillion. Why not get to 5 trillion?
It's on the way. Crazy stock. Crazy.
Yes.
But yeah, it's had a straight up run from the low in April.
Mm-hmm.
Got as low as sub 90.
Yeah.
You had your chance then. 86.
It was very quick. It was a quick chance.
Yeah.
It bounced back pretty violently.
Pretty swiftly. Yeah, it's nuts. It's up 100% in 3 months.
Yeah. Other position I just closed out, IonQ. Volatility coming in nicely there. Stock at 43 and change. Been chopping around 45 handle. Took a couple bucks out of that strangle that we put on us. Nice little trade there. Anything else poking out to you in the market here?
Not really. I mean, we have a bunch of earnings next week.
Yeah.
So that will be an exciting time. I think we'll see some big moves then, but
yes.
Today is shaping up to be quite the chop fest. SPX expected move is 13 points for the rest of the day.
Come on.
It's like how?
It's how. It makes you want to buy that straddle, don't you?
I do, but I didn't.
You know that it's just not going to work. It's tough.
It's very tough. But
tough one.
We'll see. We get a couple more hours of chop here. We'll be able to close that 0 day for 50%.
Yes. E-mini's up 8, high of the session. The morning session, I should say.
Must go higher.
Yes.
Bitcoin continuing to slide though.
It's getting spanked. Yes. Weird bifurcated market here. But we got a nice little market measure. You want to get to it real quick? Trading Bullish Strangles, presented by the CBOE, which is also sponsoring Tom and Tony's event, which is happening right now. I wonder what they're doing in this chop fest of a market. Probably lamenting it the same way we are.
Yeah, it's 8 a.m. in Denver, so they're getting close.
They're an hour earlier,
but they're there.
Yeah,
drinking coffee, having a little pastry,
beautiful
donut,
beautiful,
getting ready. So yeah,
why wouldn't you show up?
In 45 minutes, they will kick it off, and hopefully they can get some trades from the audience there too.
Yes.
But yeah, Trading Bullish Strangles. It works. Done.
Simple. Come on.
No, all kidding aside, this is definitely interesting when you consider the market that we're in, the bullish market, the low VIX. What do you do in a market like this? Maybe you skew your strangles to the upside with bullish delta versus neutral.
Yes.
Maybe not. Let's figure it out. Stock markets keep moving higher despite various global uncertainties. The strength makes bullish option strategies more appealing, like selling naked puts or covered calls, which profit from upward price movement. If you've been selling puts in pretty much anything, you're doing just fine.
Free money.
Unless it's UNH or Chipotle.
There's a couple tails here and there, but...
Yeah. But SPY, QQQ, you're golden.
Yeah.
Golden.
Straight up and to the right. looked perfect.
Yeah. So how do we optimize this or potentially optimize this? We'll take a look. When examining premium income potential, 30 delta puts typically generate higher premiums compared to 16 delta strangles over extended periods. And it makes sense. You're basically removing risk on both sides. You're shifting your risk to the downside. You're replicating your premium in the short call by moving your put higher.
Yeah.
So instead of a 16 delta, you're moving it up to a 30. And we talk about that all the time. Like for earning strangles, like just get rid of one side and move the other side in. Get rid of that risk. Give yourself the ability to make money on delta versus a vol crush that might not happen until earnings.
And it plays into put skew as well. So, selling the 30 delta put is going to be meatier than the combined premium that you get from the 16 delta strangle, which is what you see here, the average premium of $3.80 versus the $3.11 or $3.10 strangle. I do want to preface this too, because you have to take, and one of the reasons why we always talk about win rate with any sort of really long back test, and we're looking 2 decades here, 20 years, a lot of data. The relative amount of premium is way different. So 10, 15 years ago, the 16 delta strangle on SPY, which was, had a 2 handle, 200, was a lot lower than the relative premium now. And so, the premium amounts skew and the P&L values skew a lot towards the here and now because the size of the market has just gotten so much bigger. You have to keep that in mind.
Yep. For those seeking upward participation while maintaining downside hedging, a bullish strangle with net positive delta would be an interesting alternative. How does this adjusted approach compare against the traditional delta neutral strangles that you can deploy in any environment? Let's take a look. We looked at 2 different 45-day SPY strangles over the past 2 decades, 16 delta strangles and 30 to 16 delta strangles leaning bullish. So shifting that put up.
Yeah.
We close all positions at the 21-day mark. Let's take a look.
Got to imagine the long delta helps you a little bit here.
It does. Bullish strangles had better returns, even though they were a bit more volatile and could lose more money on the downside, of course, because you're moving your strike higher. You take on intrinsic value risk sooner than the 16 delta strangle. The put side break even's closer, so market drops have more impact. Return on capital was better than neutral strangles simply because if your put has more premium there and you're not tested as much or as frequently on the downside, you're going to make more money with the juicier short put. Simple as that.
Yes. Yeah. The success rates being just about the same is interesting, which wouldn't be a shock. I mean, you're getting paid more on the 30 delta put and the 16 delta call. That's a meatier position, so you're going to have a much higher return on capital. But you can see your everything else is basically the same here. There's been a bullish skew, but it's stayed relatively range bound between, the standard deviation.
Yeah. And it's not about where the short call is, it's about where your short put is, which is why your return on capital volatility is lower with the neutral strangle. Your largest loss is lower with the neutral strangle.
Yes.
But you would have made more if you leaned a little bullish into a market that is bullish.
Yes.
Makes sense.
Not a shock.
Yep.
Yes.
Next slide, we compare the bullish strangles to just selling 30 delta puts. The strangle made less money and had lower win rate. The call side reduced the profits naturally. The strangle was less volatile and had smaller maximum losses. It's a compromise that gives us some upside while controlling risk better than the naked puts. So, I'm still leaning in the boat of you should always analyze both sides of the trade, right?
Yeah.
If you have a short call on, make sure it's worthwhile. Make sure the premium's there. It can help you in terms of risk management for sure. But in a lot of cases, if you want to lean bullish, maybe you just go with a short put, or especially in earnings cases, like SPY is different, but especially in earnings cases, I think this is a case to make for maybe ditching one side, just leaning bullish or bearish if you wanted to.
Yeah.
But interesting to see the premium is much lower with just the short put. Success rate about the same, higher success rate in a bullish market, of course, but definitely lower return on capital volatility, and your largest loss is slightly lower with the strangle because you have that short call premium.
Yeah. I mean, we know obviously that the market has gone up significantly, and it has certainly been a mostly upside move. But we know from experience, as well as just customers that tweet in or chat in or email in, you know, it's easy to sell the puts and have no problems all the way up. And then when something happens and there's a 1% down move or a sustained down move, that's when everybody gets a little freaked out and has some issues. And so, you know, I know that you're hitting a higher profit with just one side, but you can see selling both sides, although you don't, have as high a return on capital, your P&L volatility is reduced. Your biggest losses are reduced, which, when what seems like 90% of the time the market is up, seems like why would I ever have anything on the upside? It does come into play in terms of reducing your overall volatility of returns in both directions, which over a long period of time is very, very helpful because you're going to go through periods where the shit hits the fan. So you can't always just look at like the highest upside. We get that question all the time of like, I'm bullish here, what's the highest upside? And it's like, well, the highest upside is going to have lower probability. You need more of a directional move. I mean, anytime you have higher upside reward, it's going to be a lower probability trade. And so, there's always that push and pull.
Yeah. And like we've talked about as well, the most important thing is trading small and having a sustainable strategy. And
yes.
Both of these, regardless of which one you choose, both of these are sustainable strategies.
One's not better than the other.
Yeah. It's just,
point.
It's different depending on the market scenario that you're in.
Yeah.
But I think this also shows that you can have a short put on, you can have a neutral strangle, you can have a bullish strangle. They're all going to be decent trades over time as long as you are trading small enough to where you can maintain and withstand any variance.
Yes. When you look at the largest loss numbers, you will see that.
Plus, of course, try to fade the Fed, which is what we're going to talk about in the next slide. So to complete the picture, we also looked at bearish strangles for comparison. We flipped the deltas from bullish to bearish in the same market environment. And these ones didn't do so hot.
Mm-hmm.
So bearish strangles underperformed both alternatives while showing the lowest volatility among all three approaches. The returns were below expectations. The strategy appears better suited for traders holding bearish market assumptions. Now, what's interesting is the success rate is lower, of course, if you have a 30 delta short call and a 16 delta short put.
Yes.
Return on capital volatility was the lowest of these three.
Mm-hmm.
And the largest loss was the lowest. Now, why is that? Stair step up, elevator down.
Yes. So your losses are much smaller relative to the other sets, which means that your distribution is going to be much tighter.
Yeah.
You're removing the tail or some of the tail.
Yeah. You still made a little bit annualized return on capital, leaning short, but I think it brings in the question of like, what is the objective of a strangle? It's to have time pass, volatility collapse, and have the market stay within your range.
Mm-hmm.
Where does that happen the most on a frequency basis? In low IV environments when the market's chopping around and maybe we're drifting higher slowly, this is why you're seeing better results with the bullish strangle versus a bearish strangle. And even in a bearish strangle environment, if the market is tanking, I don't think the bearish strangle is what you want to have on. You want to have on
diagonal spreads,
the micro static delta positions.
Yes.
So
either of these trades, even the bullish strangle of a 30 delta, 16 delta call, that's a neutral to bullish.
Yeah.
The other trade is a neutral to bearish. That's why the probabilities are working out to be positive, to be in line with what you would expect, but they're good, success rates. But that's why they're good success rates, because it's neutral. It's not purely directional.
Yep.
One way.
Totally.
Very nice. Takeaways, left side.
Couple of takeaways here. Bullish strangles have positive delta exposure, so they perform much better when markets go up consistently. We get higher returns, but also accept more volatility compared to neutral strangles. And the bullish strangles sit strategically between selling naked puts and neutral strangles, if you think about it conceptually. We get solid returns from the put side while having much better downside protection and less overall volatility than naked puts alone. Totally get it. And yeah, I think when the premium is there, it makes sense to have something on. I think you have to take this and adjust it for the environment you're in. Like in the heat of the moment in April, was I throwing on strangles and SPY? No, I was throwing on bullish trades only.
Yeah.
So it's like you have to take this for what it is and realize, okay, if there's a sharp sell-off, do I want to have upside risk if I believe there's going to be a reversal? Maybe not. Maybe that's when you go with the short puts for a couple months. Now the VIX is in the teens. It's a much better environment to have the neutral strangles on or the bullish leaning strangles on, in my opinion, because now we're at highs. I think it's going to be harder for us to just continue to rip higher. We might grind higher over time, but a strangle is going to be beneficial to that if that's the case.
We're by the dippers, though, as Tom would say.
We are.
We just buy the dip.
We are millennial.
Silly millennial
silly
traders.
millennials.
They just buy the dip. Worst thing ever. Good stuff.
But yeah, good one.
That was great. Good stuff. 2 good research pieces today.
Love it.
They do good for us.
Coming in strong.
Yeah, very nice. E-minis up 7. You got the NASDAQ up 21. The Chop Fest continues. Dow up 30 now, is actually down. And then the Russell down 8. Nothing else really moving. No volatility. Bitcoin's kind of on the lows, down at 116,000. ETH has kind of stayed range bound. Gold has kind of hovered at the 3,400 mark. So it's certainly been a chop fest of a session. Hopefully, fingers crossed, we get a little bit of movement, take advantage of some things. But we're going to take a quick little 90-second break, come back with Scott live from the Tasty Trade trade desk. And then we're going to be taking phone calls. So you can give us a phone call, 855-238-2789 or 855-BE-TASTY. That is the phone line. We will open those up very shortly. We'll also check out on the chat. So if you're on YouTube, go to YouTube, type in Tasty Live, come to a chat. Obviously, give us a like and subscribe because that helps us very much so. But we'll take some questions from the chat too. If you got some Tasty Trade specific or trade questions, we'll take all of them. So we're going to take a quick little 90-second break. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
But I'm doing 2 talks in Mexico City, and then I'm doing 2 talks in Guadalajara.
I mean, all it's going to take is for this administration to read just one of your past cherry bombs, and you're not coming back into this country.
They don't subscribe to cherry bombs. Oh, no.
You better scrub your phone, honey.
Oh, no.
You better wipe it clean.
This is the same kind of group
We've been friends for, I don't know, like 30, 40 years.
Yeah, that's a long time.
I know.
Because it takes work to maintain friendships, because life gets in the way.
Guys, with women it does.
Well,
it takes work.
Men don't ask questions. Men are the worst. You're like, oh man, my buddy's getting a divorce, and everyone's like, oh my God, why? What happened? You're like, I don't know, I didn't ask. And you're like, what is wrong?
If we have a friend and they're getting divorced, we already know why.
Oh, just pure chaos already this morning. They dress alike, they act alike, they talk alike.
Well, my producer said we all look like seamen, is what he said. Yes, the sailors of yesterday. It's lighter than it looks. I will give you that. I mean, it's...
So is Tom.
I just thought it was unusual that Tom would wear like a long sleeve hoodie in the middle of summer. Why don't you give away that hooded sweatshirt in the middle of summer? Why don't you give that away?
It's actually a summer outfit.
It's a summer outfit?
You would not know.
So I said, I have to see what this is like. And it is a boat-worthy apparel, so I'll ship it down to Florida. But I just wanted to be like my man Tom, see what it feels like to be a big shot and stuff like that.
Will you guys please wear them matching on the flight to Denver next Friday?
What's going on? What the hell am I looking at? What the hell's going on here? What is this?
I'm twinning.
Join us. You got to go white then. You got to get something. Yeah.
No, I don't want to mess this thing up. This is too perfect.
Be like Tom Day here at Tasty Live. That's right. You too could dress like an overlord or just look like one.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Mikey, my friend, we are back. We've got E-mini S&P 500 futures. Well, they haven't gone anywhere. They are up 6 here. We are just chopping around the 6,400 mark. NASDAQ up 18. You got the Dow up 19. The Russell down 9. The Russell bucking the trend today. Oil selling off a little bit from the high this morning. 65.57. Volatility futures have remained at 18.05. Bonds down 5 ticks. You got gold down $35. Silver down 34 cents. Bitcoin continuing to make new lows, down 3,700 on the spot. The spot down 600. Futures down 3,700. Ethereum remaining relatively strong, 3,666 on the dot. Some of the bigger movers in the market right now, you've got Decker up $13 and change after earnings. NEM as well. Earnings trade up $4 and change. GEV, the stock does not go down. It's amazing. Palantir on the upside. You have AMD up $4. Tesla catching a little bit of a bid, $7.50. Even some of the pigs like CMG after earnings up $1 and change. On the downside, Charter, Intel after earnings down $1.84. You have Comcast down $2 and change, but nothing huge here on the downside. Now at a bounce into earnings now, giving back some of that. Coinbase down 7 and change. AMAT down $3. So couple interesting names there, but it is very much a chop fest.
Yeah, there's not much going on.
Yes.
And it's projected to stay that way for the next 6 hours.
Yes, I hear we have some China trade deal news. My Taiwanese sources that I have some are telling me that there might be some on the way. Who knows if that's real or fake? Nothing is really real.
No.
855-238-2789 or 855-BTACY. Phone lines are open. We got a bunch of lines open. Please give us a call. We're also going to be taking questions from the chat. So if you got something to say, post it in the chat. We will pitch those. You can pitch them to us or our very esteemed colleague who we have on the line. Can we play the DDD? DDD, DDD. Live from the Tasty Trade World Headquarters, Mr. Scott Sheridan. How are you, sir? Good morning.
Good, but you sound a little flat. Like it's Friday going into the weekend. Be excited. I get markets aren't moving, but you can only trade what's in front of you.
I'm trying. I'm grasping at straws here. Nothing's moving. I got nothing to do.
I think something else happened. Did you have plans for tonight that got canceled? Did something happen? Something happened because a little air has come out of your balloon.
I'm a little sore. I had a late night of pickleball.
Oh, okay. Okay, we'll leave it. You're glad
no.
your dad's out here. A late night.
No, it's one or the other. I don't have the stamina for both.
Okay.
I can't do both.
So
I chose the 2 hours of pickleball, and I'm a little,
I like it.
Yeah.
The Seinfeld episode where George is telling the story about his girlfriend was telling him that her former boyfriend came over the night before and yada, 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 yada. I'm really tired. And he's like, what does that mean? Yada, yada, yada could be it's one of the all-time greats. It not could be. It is one of the all-time greats. So we'll leave it at that. Yada, yada, yada. You're really tired. I have a question for both of you. Knowing that you were out playing pickleball, my guess is no, but I'll leave this to Mikey. Have either of you seen the first episode of the 27th season of South Park?
I haven't watched it in full, but I've seen clips of it.
Yeah.
And
it is so good. Okay.
Yeah.
We'll just leave it at that. I'm not on social. My guess is it's blowing up on social. My guess is Trump not happy. Let's say that with the episode.
I thought about it, and I was like, they must have been sitting at the table before they when they made this or thought about making. They're like, can we do this legally? Like, are there any ramifications that we need to consider here?
I don't think they care. Yeah. My question is, how did they get this out so quickly?
What do you mean?
That is a great question. Well, you just have to watch what they're talking about in the episode.
Oh, so it's very current?
It's very current.
Okay.
Very, 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 very current. Like, I don't know how they did this fast. They must have had this teed up in some way.
Mm-hmm.
It's great. This is an assignment for as soon as this show's over, log in to your Paramount account and just enjoy the next 25 minutes. It's amazing.
Ah, perfect. We'll take a little lunch break and watch it.
Yeah.
Right.
A little small Cheval, some South Park.
Oh, I got to say, I'm jealous of that. I don't think Small Cheval is as good as it used to be. Still a solid lunch.
It's different when you buy it in mass and you got it like sitting out in the trays.
But we have had it in mass for a long time. I just don't think it's as good. Still a quality burger. My go-to Little Bad Wolf.
I gotta get out. I haven't done that. I know you've talked it up, and me and you have this secret spot too. Shh.
Yes, I know. I haven't done that.
Yeah,
I do need to go. And get that one. I won't say anything.
Yeah,
that will stay between us. Does Mikey know?
No.
You know my secret burger spot.
I don't
down
know
in the basement. That's all I'll say. I will only tell you it's down in the basement. Where you at? Don't let it slip.
I don't want to gatekeep though.
You can tell me later. You can just bring me there.
All right.
that.
Oh, I'll
Just
do
let
that.
it out.
It'll be a surprise, a little mandate.
There you go.
But it's
You guys
not really
you're
like a
gonna
football
have-
place, so we can't really watch like football or gamble or do anything.
Not a football
Well,
place.
we got 1 week until football starts, so
Is that crazy?
Yeah.
it's nuts.
Are you taking the Bears over 8.5? Is it at 8.5 still?
Yeah, Tom was buying them from at 8.5. I got to bet him at 8.5. I mean, what I bet him last year at 8. I think I ripped the ticket up after like the third game.
Yeah. You didn't even want that hanging over your head.
No, I'm like, well, this can't come through, so we'll leave that alone. Listen, I am obviously they're lovable losers, and if you're a Bears fan, which we are, you go, okay, this is the year, but I don't know why this is going to be the year. Ben Johnson, let's see if he can do it, right?
All the pieces are there.
All the pieces are there. The crazy thing is, with 4 major sports, right? You got 4 major sports, plus we can throw in a couple other ones.
Uh-huh.
This is an NFL country.
For sure.
It is crazy how big the
Well,
NFL
you saw
is.
the Packers release like
what was that? They look like Bears jerseys or U of I jerseys. What is that?
Well, no, I was gonna say they released their financials that they made like it was like
how much they make?
750 or 800 million, and when you extrapolate that on all the teams, it's up 10 to 14 billion dollar industry that you've got. Like that was just on like their like concessions and ticket sales and like.
And the owners always say they can't make any money.
They can't make any money. There's no
funding, right?
And like it's like each team is making $1 billion a year.
Check out. Go look at their new jerseys. They're retro. They're like from the 20s or something. Not.
They're like blue and bronze. It looks like.
Oh.
They look like Bears jerseys or U of I.
Yeah.
Oh yeah. Wow.
Right.
Yeah, those do look like Bears jerseys.
Huh.
Yeah. Yeah. All right. More importantly, let's get to business. Let's get to phone calls.
Phone calls 855-238-2789 or 855-BE-TASTY. Phone lines are open. Give us a call, please. Show us some support and chat in the chat. We will throw those questions out. If you got some for Scott, we will take those as well. To your list, sir.
Here we go. Top 20 symbols going through the system. First 40 minutes of the day. No broad-based indices or futures. Over under on Tom watching. I'm going to say 0, but I'm still going to list number 20 for Tom. HIMS, appropriate, at a 41. For everybody else, Tesla at a 6, PLTR at a 26, Intel at a -2, NVIDIA at a 9, AMD at a 21, iBit at a 41, NEM at a 6, Google with an L at a 16, Apple at a 22, GLD at a 25, Meta at a 21, Coin at a 22, Lulu at a 39, Amazon at an 18, CMG at a 9, UNH at a 52, MSTR at an 8, Hood at a 21, Goog, no L at a 17, and number 20 for Tom, HIMS at a 41.
Love to see it. Yeah, Intel down 10%. On bad earnings.
You think that stock ever goes anywhere? Or is it?
No, it doesn't. I mean, it is
purgatory.
Like, seriously, if you want to talk about a pig, like.
It's the number one.
Number one pig.
It stayed between 20 and 25 for.
Forever.
Forever. I can't remember a time it wasn't. It's unbelievable.
For sure. All right. Do we have callers?
Yes, we got a couple callers, but we do have phone lines open at 855-238-2789 or 855-BE-TASTY. Give us a call. We're going to take the first one. We got Mark in Scranton, Pennsylvania. Mark, how are you? Good morning, sir. Marky Mark?
You guys got me?
Yes, we got you. We got you. Good morning.
Okay, good. Good morning. So I have a question about ratio spread.
Okay.
I wrote in a little bit ago, and it was thought of from a market measure comparing J lizards to condors. And I asked the question, why sell a ratio spread when you can sell a naked foot? And here's the preface that I just want to kind of set up. So you could buy a 30 delta, sell 220s, get the same credit for selling a 10 delta using the same buying power. And I'm assuming that we're going to close at 50% profit. So I just want to know, why would you do a ratio spread in that situation?
Well, usually you'll have a better break-even point with a ratio spread because you have your embedded vertical spread. So it should push you a little bit lower.
If you're doing the same delta, but he's looking at a 10 delta, so you're looking at apples and oranges. These are way different trades.
In that case, if the break even is the same, then you just have a greater max profit to the downside. That's it.
Yeah.
I guess what I'm keeping the same is the credit.
Okay.
Yeah. So, but your risk on your naked put is going to be way further out of the money.
Correct.
Yeah. So it's more about having a neutral to bearish, but still making money to the upside stance, where a short put is more static, just anywhere above it, I make this credit.
Yeah, you'll see it'll be a better analysis of what we're talking about if you use the same strike. So look at a ratio versus just a naked put at the same strike. And what you'll see is, you give up some of the credit to buy that long put spread. And that long put spread makes your position a less long delta position. You sell the 20 delta put, it's going to be 20 deltas. You do the 20 delta puts twice and you buy a closer at the money option, you might only have 10 deltas. So it makes it a more neutral position. It makes it a lesser delta position. And we call it an omnidirectional position because with that ratio spread, your max value, your max profit potential is actually against whatever your delta is. So you want the stock to kind of chop around, but go slightly down if you're looking to make the max value on that position.
Sure. I get the profit 10. I just didn't know with closing at 50% profit, we really see much of that.
Yeah. So if you're closing at 50% profit,
the 10 delta is going to move. The naked put's going to move more. Just because it's further out of the money.
Well, yeah, but from a math standpoint, like if you're selling a ratio spread to get more out of it, you're selling it again because you're selling the vertical spread. So I would say it's not going to appreciate more than 50% of the width of the spread unless you're really close to expiration. So I would just factor in your credit received and maybe you take 20% out of your vertical spread and that's your closing GTC order.
Gotcha. Yeah, I think I'm not comparing it fairly, but I was just comparing the credits and managing at 50%. That's where I was coming from.
From those two options, just think of it from the extrinsic value of the position. So anytime you have at the money options, they're going to be higher valued but slower moving, right? So the tail contracts much quicker than the at the money options. And so from a credit standpoint, your 10 delta option is going to decay quicker than your closer at the money ratio spread, but you're going to have a lesser max potential profit on that put because the put, you can only make whatever you sell it for. The ratio spread, the kicker is that you're buying a long spread. So you have, the 50% of the credit is kind of, it's not the whole story because the ratio spread has that long spread.
Understand.
So, but they're very similar trades, I would say, in general.
Okay. Yeah, I was just in it just to make the 50% profit, and I just didn't understand why you would take the ratio spread over the naked put when the naked put would probably get there a lot faster.
Yeah. Yes. Yeah. Yes.
It's because the ratio spreads max. Like you're routing something different. You're not buying it back to close it. You're selling out of it to get your additional profit.
Yeah.
So just play around with that, and you'll see what we're talking about.
Gotcha, guys. Thank you, guys.
Thank you, Mark. 855-238-2789 or 855-BE-TASTY. Phone lines are open. Give us a call. We got anything in the chat that you've seen pop through?
Just about your CMG trade from yesterday. Are you going to close it or are you taking it off?
I did close it.
Okay.
I closed it. I took 55 cents out of it.
Nice.
Yeah, I'm glad I avoided that one on earnings.
Yeah.
Yeah. Scott, you got anything fun coming to the platform soon that we can pump out to the peeps, to the loyal followers?
The active trader is being completely overhauled. That's coming out in short order.
Web first?
It's going to be awesome. It's got, I don't know. I think it's web and software at the same time. It might be web first.
Okay.
But it's awesome. And we've extended our pre-market for stock we start now at 3 a.m. Central Time.
Okay.
Instead of 7. So we've extended those hours. That's in place now. In about 4 weeks, 3-4 weeks, something along those lines, we will be going 24/5 for stocks. Yep.
Is that all or?
I think we're starting. I have to confirm this. I think we're starting with probably the top 100, and then give it like a week or 2 or 3, see how that goes, and then we'll expand it out. I don't know that we will ever go beyond the, like the Nasdaq and the S&P 500. Penny stocks we don't trade anyway, but illiquid stocks we'll probably want to stay away from. We'll see.
Okay. I was hoping that during my 3 a.m. wee break, if I wanted to buy a couple shares of Open Door, I could.
Yes, I would think you'll be good to go.
Okay, sweet.
Because you're a little old for the Open Door trade.
What do you mean? What do you mean old? Who are you calling old?
Okay.
No, I'm in the know. I'm in the Reddit crowd. I got Gus and E that sit next to me. I got Thomas. I'm you. I'm the youthful.
You know what? I gotta go over and sit next to those guys and just absorb some of that content, because it's gotta be good content.
It's unbelievable. It's
right.
It's scary. It's saddening. It's quite entertaining though. But yeah, it's good stuff.
Next week, I'm gonna go sit by those guys for a little bit.
Come on over.
Take some notes.
I always ask you if you'll save a desk for me over on the other side. I tell you that I will always have a desk on our side for you, Scott.
I appreciate that, but when I walk over, there aren't a lot of available desks, so I don't know about that.
Hey, we're coming. We got people coming in the office now. It's a good thing.
It is a good thing. It is a very good thing.
855-238-2789 or 855-BTASTY. Phone lines are open.
Any hints on?
We have. Oh God.
Go on, Scott.
Any hints on what to see in the new active trader? Do you have any little nuggets that you like the best?
No, I don't want to touch it. Just I won't do it justice. It's good.
Cool.
It's good. It's really good.
We got a little Dom in there.
Yeah.
Ooh, was I not supposed to say that?
No, you can say it.
Okay.
You can say it. Yeah, it's coming out very shortly. I believe we are beta testing with a handful of customers into next week, and I think it's the week after. It might be the following week, but I think it's the week after next.
Yeah, very nice. P&L charting. Are we going to have an update to that soon?
Yes. So we are making some enhancements to that. So it's funny because Tom and Tony and we didn't even realize you could do some of the stuff already.
I know you guys using the platform. It's like embarrassing. I can't believe it.
It is embarrassing. So something slipped by me. I admit that. We are making some enhancements, and the big one we are still working on. I do not have an ETA on it, but the big one is to be able to search your P&L for a certain range. So, people want to go back and say, look, for this period last year or the year before, punch your dates in and say, well, what were my P&Ls, for a particular underline. That is it's on our list. I don't know if it is being currently worked on, but that is 100% on our to-do list.
Yeah. We need a Netlick chart.
We're overdue.
Which we have. We need to take out funding from that.
Yeah. Yep. Totally got it. Totally got it. All good.
That was from Tony in the chat. I know Tom doesn't acknowledge the chat. We give our peeps the props.
Do you think he doesn't acknowledge it because he can't read the chat?
He doesn't know where it is. The text is too small, so he can't actually read it.
He has gotten a lot closer. Like he's down here now.
Yeah.
A couple years ago, he was up here.
I walked behind his desk the other day. I know it's computer. And I walked behind when he was at lunch. And I said, your font is so small. Now I know why you have to get so close to your screen. I said, why don't you increase the size? He's like, yeah, I don't like that. I'm looking at him like, I don't, how do you even answer that?
He could have things be much more clear, but you know what? I'm gonna do it. I'm gonna secretly update this 120% zoom level. It was at 100%. We're bumping it up 20%.
He's not
away.
gonna be
He won't know.
happy. He is not going to be happy with you, and I know there will be people there that will rat you out in a half a second.
Oh, for sure.
Hey, I'm fine with it. He can yell at me for his 20% increase in quality of life.
A couple other questions from the chat. They were asking about TradingView, or at least updated charts in our platform. We do have a chart update coming, right?
Yes, and for TradingView, if they're asked about options, I think it's Monday or Tuesday.
So TradingView, you can connect your Tasty Trade account to their UI.
Correct.
To trade through.
Options. Correct. So stocks and futures already, options coming next week.
If you go to the Tasty Trade website, you click on the Help Center and you type in TradingView, there's a full help article on how to connect the account and use the UI on TradingView side to trade through Tasty Trade. So that is there, a very good one.
Correct.
From Tony, so is there going to be a chart on the active trader? Are we going to be able to trade on the active trader interface?
You could definitely trade on the active
like
trader.
options,
I don't know
like
the chart. Not starting with options. It's going to be futures, stocks, and I believe options are next on the to-do list. So, yeah, it's again, if somebody's interested, I should have the email for this. If somebody wants to beta, let me take a quick look. Hold on. Give me 1 second. I'm going to give you an email, and if not, they can just email me.
At Tasty Trade.
There you go. There you go. Send an email.
Even I knew that, and I'm not even on that side.
Thank you. Thank you. So send an email with your email address that is tied to your Tasty account, or your username if you have a different email address, and just that you're interested in being a beta tester for the active trader.
Fantastic. Beautiful. Well, E-minis have gone pretty much nowhere. They're up 11 right now. You got the NASDAQ up 16. You got the Dow up 90. The Russell basically unchanged. Into earnings next week, Scott. What's your thought? Up, down, sideways. You got all the big name: Apple, Amazon, Microsoft, Meta.
I'm having a hard time coming up with a company that's going to miss badly.
Yeah.
So I think the earnings I'm going under the heading of, and I'm going to trade. I assume I'm going to trade the way that they're going to be inside the expected moves. To me, what I'm looking at with this market, it feels like we're rotating out of the big names, and now what we're talking about are the opens and some of these other stocks that people are looking to play. So a lot of the big names seem to have been pumping the brakes here a little bit. A lot of them want the stocks that have carried the market. So I'm still on the belief that pot odds are lower before higher.
Mikey?
I think we'll see some surprise moves to the downside.
Let's get one today.
Ooh.
Yeah. We're gonna get we want a downside move today for 5 or 5.
Looking for Oh, why do you have a bet?
No, because Tom's gone. So the last 4 times Tom has been
5 of 5. That's what he said. A big time. I forgot about that. Yeah, that's not happening. I mean, just look at this market. It's like, come on, a summer Friday. I mean, I think you could safely bet SPOOs aren't going to move a couple dollars for the rest of the day, but who knows?
We got the 0-day Iron Condor on, thanks to fast market this week.
Yes, we do. We do.
There you go. Now, be careful. Remember, not a lot of time to react on a 0-day if something moves.
Oh, I got the GTC order in. Don't worry.
We got one more call. Okay. Can we do it quick?
Sure.
All right. We got Ross in Bulgaria. Bulgaria.
Wow.
Hi, guys.
Hello.
Good morning.
Hello.
Good morning. How are you doing? I'll be super quick as we're at the end of the show. I have a question for Scott. I was talking to Tom about it, but I just wanted to follow up because she said it was with you, kind of. So my country, Bulgaria, is currently on a restricted list, as I understand, which is like a legacy thing from a previous sort of a decade, and he said it's probably you're somehow in contact in regards to the rate to this with the regulator. So I'm wondering if there is any chance that will be removed from that restricted list, or if not, could I register on the website just to preview trade? The current platform that I'm using is really terrible for that.
You cannot register unless your country is allowed. I want to see supported countries. I'm going to do this. Why don't you send me an email? It's scott@tastytrade.com. It depends on where Bulgaria is on the list. So here, unfortunately, you don't need to send me. I'm sorry, I just pulled up our help article. Send me the email. I'll still ask, but it is on Apex's restricted list. So when Apex restricts, typically it's an issue with the U.S. government that they put out warnings. It's called a FATF list or a gray list. So sometimes they move on, sometimes they move off. Send me an email, scott@tastytrade.com. I will have our accounts team reach out to Apex and see if there's something we can do. My pleasure.
I appreciate you all, guys, and I love all the shows. So thank you very much for all that you're doing. And have a great day.
Thank you.
You too. Thank you, Ross. You too. Thank you, Scott, for joining us. Mikey, it's been great. We will be back for the last call today, so stick around for that. We got Liz and Jenny coming up next. You're listening to Tasty Live.
Not Jenny.
Not Jenny.
Not Jenny.
I don't know. Liz and TP. There's two people up next.
Two people.
Goodbye.
Have a good weekend.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
All right, so you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads.
One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Friday edition of TP and the LD Show, the last edition of this week, and it is Flame Shirt Friday, TP. You are looking fantastic.
That's right, LD. We have a lot of criminals out there in the mean streets of San Francisco, and I get to be dressed to impress.
Yeah, you do. And I got to tell you, your simplistic background makes it much easier for us to enjoy the Flame Shirt. In the other one, the background, you almost kind of melt into it because it's all graffiti.
Yeah, I'm kind of leaning in favor of a little bit more straightforward backgrounds, and I'm going to talk to maybe John about who runs the whole thing in the back of taking some glamour shots of the ranch. So I'd be like, so I could put. Now I can't actually do the show from outside. That's a little bit beyond the pay grade, as they say. So I don't know if I can figure that out. But,
TP, I wanted to do a show by my pool, but never really panned out.
That would be fun, but I think the part of the problem for me would be the ambient noise. The wind, the dogs, the whatever.
Yeah. Oh yeah. Because my dog's name is Will Ferrell, and he's this big, and he is an angry elf. So that would be very loud out there.
That would be awesome. Maybe, and I'm not going to make any promises. I'm not going to say this has happened, but maybe the next time I do the show with you, I could do it from. Maybe I could bring Slim into my office.
Yes.
Slim the counter height dog. Slim probably weighs. He's 160 pounds. That's probably more than what you weigh.
I hope it's better. It's definitely more than what I weigh.
Yeah, I'm sure it is. No, his head would be right here, and he's very cute. He's a nice dog.
Would he be good on camera?
Yeah, I think so. Let's say if I were holding a meatball right here, he would be fixated on the meatball and he wouldn't move around. But eventually, he'd listen to the noise a little bit, oh, there's Liz Jerking, she's talking, and then he'd probably drift away or flop down.
Yeah, well, one of these days we'd love to meet Slimmy live on air.
Yeah,
Slimmy the dog. I love that you named your dog after somebody who was an on-air personality.
After him. It was just a coincidence. Living in Texas, a lot of people, the dog names are a little sketchy sometimes, but I thought a good dog name would be Slim, like Texas Slim, Amarillo Slim, that sort of stuff.
Oh, it is way more fun if we think you named him after our old buddy Steve Miller.
Well, yeah, but nobody knows him, so it's like, oh, there's Slim. Besides, it's a good name when you have to yell for him, Slimmy. Of course, we used to have to do that with Slim too. Like right around his showtime, where is Slim? Where is he? Slimmy.
Well,
so
and you always had to make sure he was wearing clothes because Slimmy.
Oh, jeez. All right.
This show's taking a turn.
I thought we'd go off the rails maybe after 10:30, but 10:07, boom.
10:07, we've done it. Okay, I'm just going to give a brief rundown, TP. This is our Friday show. I'm very, very, very excited to have you on. I have received a couple questions that I want to go through with you. I don't have them on slides. We're just going to talk through them. We are going to take live tweets. It's harder to get to live tweets. I have one pulled up that I want to go to immediately. And then we have the recap of a market measures. So Kai puts this together for us. And Jenny and I had said, we asked specifically for this because we don't get to watch every second of every show, but market measures it's constantly changing and constantly evolving. So we actually asked for just the takeaways of the week in market measures. And so what he does, it's going to be a lot of information because of this, because we get a week's worth of market measures where they give us the study and the takeaways. And then I don't want to know what happens in the meat and potatoes, but if anybody wants to, they can go back and watch the market measures, right?
I think that's a great way to do it, because yes, the whole thing shows you the data and the proof of the conclusion, the proof of the takeaways. But for speed, it's show me what the premise is, show me the conclusion, move on.
And I trust, I mean, we've been doing this for 15 years. I trust the research team. So you don't need to show me your work. Like, I'm totally fine with, I don't need to see your work. I completely trust you. So that's kind of where we are for the accuracy of, an hour-long show. Okay, so in essence of time, TP, I'm actually going to jump into one tweet first. And you can put the hashtag LAZJNY. But I figured you could make a comment on this. Now, this is Eric. Great. Everybody's doing their Iron Condors, the SPX 0 DTEs. I love it. I went specifically to this one because here's his question. Happy Friday, IV negative 5.7. I didn't even know that was a thing. So he put in his 2-slot tranches. Everything's fine. What say you about negative IVR? No, it's not negative now. It's 12, but you can see negative.
Yeah. So just remember what the IV rank is. It measures where the current implied volatility, the overall implied volatility of the SPX in this case, where it is in relation to the 52-week high volatility and the 52-week low volatility. With the VIX, which let me pull up on here, which went down, which is trading right now at 15, which is really low.
Are we going to cross into 14? If we cross into 14, that's crazy.
That's crazy. So the point is that if today gives you the new 52-week low volatility, you will get a negative IV rank. Okay. So what happens is if the 52-week low volatility of the SPX was, let's say, 16, because that calculation looks backwards for the previous 52 days, it doesn't take the current day into its high-low calculation. That if the volatility is below the previous 52-week low, you're going to get a negative number, and you can get 100 over 100 if it's higher than the 52-week high.
No, this is, like I said, you are much more versed in this than me. But at one point when we first started seeing the negatives and the over 100s, I was talking to Tom about it. And he's like, we took the fencing off for the day. So he's like, now the next day it'll kind of reset, but the fence is removed for the day, which will give you a negative or a 100, over 100.
That answer isn't exactly right. It's just a matter of whatever. It's a matter of just how the calculation works. And also, this is the important point to make about it. The IV rank is just one piece of information before you do a trade. Okay. I look at the IV rank, and then I also look at the actual volatility, and then I look at the actual option prices and seeing if I'm getting enough premium.
Yes. So 30 days out, I'm just going to kind of go to this because the VIX. I'm going to go to the August 29th. Whoa, wait, 35 days. Let me go a little bit narrower. Let's go to 31 days. So what you're looking at is this 14% implied volatility, right? 14% is low.
Yeah. So it's 14%, and then I'll say, all right, maybe I'm bullish. What do I get if I sell the 6,300, 6,310 put spread? So buy the 6,300s, sell the do that, and I only get 250 for that. Okay, that's not very rich. So okay, maybe I wouldn't do that trade. That's the process.
Okay, and so the reason I'm not saying I cherry pick tweets. I will go back and do all the tweets too, but I liked that question, especially with you on here with the IV rank to answer it. And it's kind of a teaser because take a look at this. We're going to jump into, and I want to make sure we're doing everything today. So we're going to jump into the market measures right now because the market measures the market measures recap has a lot of information, and some of it was about IVR. So it was I was just trying to kind of lead the witness into, we talked about IVR, and then there is a segment on it. So we're going to go into the weekly summary of market measures brought to us by Kai, which I love. Okay. So the first one, the first thing is about the earnings explained, a statistical snapshot. Okay, so here's the study. Earnings season brings high volatility with wider daily ranges and larger expected moves. These binary events are directionally random, with the most popular earnings plays being relatively neutral. That's correct, protecting for an equal chance of an up or down move. The next earnings season is already upon us. What are some statistics surrounding earnings season? What happens in the overall markets, and how random are our earnings? And should we adjust any of our strategies based off these trends? Pretty clear cut, right?
Mm-hmm.
So here is, they give us a little bit of it, and then he's going to give us the takeaways. So I found this interesting. Stock indices tend not to react too much in earnings season.
Because it's all averaged out. That's why.
So, and I know there would be some big tech names that people, a lot of times we'll get emails about saying, Tesla's X amount of NASDAQ. So if I wanted to make a play in Tesla, I could maybe do a move in the NASDAQ. There are some big ones that'll move these a little bit more than the offhand ones. But as a whole, these are baskets. So by design, no one is supposed to move it, right? Too much.
Right.
Okay. And so then testing the companies in the SPX, the average one-day move after the announcement has been down 36%, with almost a 50-50 split of positive and negative returns as shown the day before, which we expect to see, right?
Yeah, that's pretty random looking.
50-50. Earnings could go up or they can go down. Jenny and I like to say they're the wild, wild west. So these are the takeaways, and then we're going to get into the volatility one. During earnings, the top traded tickers had a lower correlation to the S&P 500. It had roughly 50-50 up-down moves, and similar tickers without earnings moved about half as much volatility.
Yep.
Right? Okay. Index IV and single stock IV shows little correlation during earnings. Also, there is a similar average VIX range for earnings versus non-earnings periods. This is all pretty standard. Mm-hmm. And then selling implied volatility during earnings remains effective, as over 75% of stocks overstate their moves. You talked about that yesterday.
Yeah. Well, and I mentioned you in today's Cherry Bomb talking about Chipotle, where they actually had slightly better than expected earnings and were down, 13% or something. CMG got killed yesterday.
Got murderlated. Yeah.
Murderlated. And I haven't been to a Chipotle in, 20 years. Because I live in Texas, I don't go, there's plenty of great Mexican restaurants. I don't go to Chipotle. But
I would say, I'm exaggerating here, but 50% of my paycheck goes to Chipotle, and I don't even eat it. The kids go there all the time.
See, well, and up in Illinois, that's what you would do.
Yeah, because we've no good Mexican food here.
Well, there's some in Chicago. Like La Pasadita used to be great. I haven't been to La Pasadita in years, but anyway. All right.
Are those the massive burritos?
I bought a call spread in CMG, hoping for a bounce, and it's rallying a little bit today.
Let's check this out. Oh, you bought a call spread and you're making money?
Yeah, a little bit.
Okay, look at that. Whoa. This thing has gone nothing but down after it split.
Yeah.
Debunking the everything goes up after it splits.
It got crushed, but that's a massive down. That's a 5 standard date. That was a 5 standard deviation move. Black swan.
Wow. So, TP, while I've got you, here's what I find odd. If I look at this chart, if I cover up CMG and I don't know what it is, so say I don't know CMG and I don't know its earnings, I would expect the rank to be higher.
You would expect that, but if you actually look at what the volatility is right now, CMG volatility like 28%.
Yeah,
isn't screaming high for CMG. It really isn't, and it used to be higher. Obviously, that's why it's a 7.8% IV rank. But the sell-off, once the news about earnings came out, that crushed volatility so much that just because the stock dropped made a huge move downward, the volatility didn't respond. It didn't bounce up. The excitement, the uncertainty was over. Yeah, the stock got crushed, but it's not like the S&Ps. If you saw a chart like that in the SPX, you could almost guarantee that the VIX would be higher, right?
Yeah. Right. So like when I see a chart like this, I expect to see, a very, very low rank. But when you see the exact opposite in an index, that IVR should be through the roof.
And that's kind of what, Kai was saying in that market measure, that the volatility does get crushed after earnings come out. That is true, and the volatility overstates what the market, what the stock actually might end up doing. Not in the case of CMG. That was much lower than anybody expected.
Yeah.
So that's earnings.
Okay, perfect. Now we're going to get in, I think that, oh, sorry about that. The next one is, I think, the volatility one. Let me take a look. Yes. Okay. TP, get on your volatility hats. Okay, the VIX and VIX 1D. Now, are you familiar with the VIX 1D?
Yeah, I'm familiar with it. I haven't looked at it in a long time. I don't trade it necessarily. Is there anything to trade in there?
I don't know. I think it's just an indicator to look at. I don't think you can trade it. So, and this is something that I will occasionally glance at, but it isn't something that I make trades off of. So I am aware of the VIX 1D, but I'm not. This isn't something that drives my SPX 0 DTEs. I do them whether or not the VIX 1D does something, right? So let's go into this. The VIX Volatility Index, published by the SIBO, is a weighted combination of out-of-the-money SPX option prices centered around 30 DTE. You said this exact sentence yesterday. So that's why I love that these kind of bounce off each other. This gives a regulator-friendly approximation of the Black-Scholes volatility on a 30-day time window, helping traders recognize opportunities thanks to IVR and strike selection thanks to expected move. Okay. With the proliferation and rising of popularity of short-term options, SIBO introduced the VIX 1D, which follows the same methodology, but using 0 DTE and 1 DTE options to approximate the 24-hour volatility. Okay. Yep. So it's almost like taking what we talked about yesterday and just shrinking its time frame, right?
Right. So it's what the VIX tries to do is have a constant 30-day to expiration volatility. And so it does a weighted average. Let's say you have 25 days and 35 days. It would take 50% of the 25 DTE and 50% of the 35 DTE. If you had 20 and 60, it would be weighted more towards the 20-day, right? So the point is it's a weighted average around 30 days. The VIX 1 day is a weighted average around 1 day. That's how it works.
Okay. Perfect. And that's good. It's kind of taking your knowledge that you kind of created and just shrinking it. And many traders are familiar with using the VIX to anticipate 30-day price moves. We can translate this experience to 1-day moves by using VIX 1D. Okay. So then here's the takeaways. And I just went to VIX 1D so people can look at it. So here's the VIX 1D. It's right here. It's trading 726. And here's the chart.
Yeah.
So you can see it's very volatile at some points. Like the VIX 1D has gotten up pretty high at certain points. But,
to show the point, Liz, can you please pull up SPX quickly? Now, remember, VIX 1 day, 727. Keep that in mind.
Okay,
now,
727. Now go to SPX.
SPX. And the trade page. And what's the 3-day volatility? 7.1%.
Oh.
So it's an average. In other words, it's weighted towards the 3-day in its weighting system, but it's a combination of 14.5 and 7.1, with most of it looking at the 3-day. I'd have to look at the actual calculation to tell what the weighting actually is, but that's where that 7% is coming from.
And TB, I mean, I know that this says it's a 14% implied volatility in the 0 DTE, and it's got to have some implied volatility in there. Otherwise, the prices would be, otherwise there's no premium in these. So that's the one thing I want to say about the zeros. They always will have a little bit, like a smidge of a higher implied volatility, only because they have to have something in there. Otherwise, there's no premium in them.
Right.
Yeah. Okay.
So that's where VIX 1 day is coming from.
I love it. Okay, so this is the takeaways. Due to their high correlation, the VIX and the VIX 1D ranks rarely differ by much, which you just showed. But when it comes to strike selection, they must be viewed differently. Okay, the 30-day moves displayed the skewness traders have nearly 40 years of experience dealing with. Frequent up moves between 0 and 1 times the expected move, balanced by a tail to the downside. We talked about skew yesterday, meaning puts have a higher volatility than the calls. That's what another discussion that you and I had yesterday.
Mm-hmm.
1-day moves had a generally broader and more symmetric distribution. fatter tails in both directions meant more frequent and bigger expected move breaks. So there's, from my understanding, if I'm reading this correctly, it's saying the 0 DTEs or the 1 DTEs have an easier tail risk, less tail risk on both sides, less put skew, right?
Yes.
Okay. And if you're an experienced option trader looking to take advantage of the extreme liquidity and frequent opportunities in the 0 and 1 DTE markets, make sure to start small. Success will require a new playbook of strategies and mechanics. By limiting risk, you give yourself room to make mistakes while you learn. That's just words of wisdom by Kai.
Yeah, and it's a sort of thing where if the VIX one day tells you something great, use it. But remember, a lot of these indexes, just like we've come up with stuff over the past 20 years, hey, let's try this, let's try that. There are hundreds of little indices that they create and see if they get traction. VIX one day is one of the better ones, I agree.
Yeah.
But I typically just look at the overall volatility of the actual SPX options. So I'll look at that 14% or the 7% on SPX, and that's in the VIX one day. I don't use it nearly as much as the actual VIX.
Do you think that this is like analysis paralysis? Like they're just getting so much information to trade nowadays?
It is. And what I didn't want to do on the show today is dig into what I call phantom volatility. And it gets too much into the weeds. It takes too much time. But remember, we're talking about derivatives of derivatives when we're talking about the VIX and VIX one day.
Yes.
It is a piece of information. It does not determine the trade.
I agree. Kind of keep it simple. Okay, so then here we go. This is the last market measures. Then we're going to answer some questions that I got via email. Then we're going to jump into Twitter. Okay, equity-like bonds. What's the deal? Okay. With traders increasingly focused on tariffs and their implications, bonds have become a hot topic. What key characteristics of bonds should we understand, and what opportunities might they present? Now, TP is our bond expert. He's our volatility and bond expert. Bonds have experienced one of their highest IV periods in history, with their IV ranks and performance mimicking equities this year, which I did not know that actually. How has selling premium in bonds fared historically and then specifically since 2025? Okay, so this is our premise.
Yep.
And then I would argue somebody can go back and look at this if they wanted to look at it, because I was actually shocked by the takeaways here. Okay, so despite abnormally large IV in movement, short premium in bonds has recently performed virtually the same as it has over the last 15 years on average when looking at a win rate. So they're doing average credit over buying power, average return per trade, and average P&L for and CAGR. What is CAGR?
I forget. It's like
I literally almost read that as CVAR, conditional value at risk. I don't know what CAGR is, but that's okay.
Yeah, conditional, I don't know.
I know. So since short strangles share the same characteristics throughout nearly all underlyings, the result of the strategy in one liquid underlying can generally be used to estimate the outcomes of another. So that's true. But are you surprised that given the large IV in movement, that it's performed virtually the same as it has over the last 15 years? Because you always sell bonds. So you always sell premium in bonds, right?
Yeah. So yeah, and so it's the bond ZB really hasn't moved much for the past 3 or 4 months. I mean, if you look at a chart of ZB, volatility is relatively high. So
yeah, look at this.
It really hasn't done anything. What's happening is like Kai was saying in the market measure is that the uncertainty about the tariffs, the uncertainty about will there, won't there be a cut in interest rates, will they replace Jerome Powell, that sort of stuff. There's a lot of uncertainty about what might happen in interest rates, and that's increased the volatility in bond options, but not the price volatility of bonds themselves. You see what I'm saying? Hear what I'm saying? In other words, the uncertainty is reflected in the options, not the future price. Okay. If it were, we'd see bonds moving up and down $5 at a clip, and we don't see that. Well,
and
maybe,
here's the future. Here's the future price right here, right? So you're looking at when we're looking at ZB right now, the price is 113.08, and the future price, the September price, September through February is 112.26. So they have it coming down a bit.
That's the D's.
It's the D. Sorry, yeah.
Yeah, D's is 112.26.
Okay, so D's through. So and then how would I say? Could I say February for the next one?
That is the March. So what you want to look at is go to the left, and right by the expiration, you see like ZBH6 and ZBZ5 and ZBU5. That's the future that those options are priced off of, that they deliver.
So yeah, here's the Z5. These are all U5s. These are Z5s, and that's H6. Okay, so that's where you're looking is what's
right. So it's bond volatility at, let's say with 14, 21 days at 12, 13%, that's pretty high. That's relatively high. Usually it's around, 10 or 11 or something like that. And so
for bond volatility, that does seem kind of high.
It is. And so that's why they're saying it's the highest it's been in a while. But it hasn't translated necessarily into the price. That said, if you also look at ZN, the 10 years, and I look at the 10s versus the 30s, that is, it's 6%. That's also a little bit high, but not as high as the bonds. And so I think, just ballparking with my little eyeballs, the bond volatility at 15.5, is that what it was, 15.5?
It was 15.5, yeah.
Yeah, is very rich compared to 12.5 is rich compared to note volatility. So anything over 2 times volatility, in other words, if bond volatility is more than 2 times note volatility, to me, bond volatility looks high.
And it does look high. So just for a newer viewer or somebody who's just looking at this, can you just do a brief explanation, because we talk about this all the time, why the chart went from, and this isn't a big move down, why it moved from here to here?
So what this is a continuous graph. So it pulls out so.
I'm going to go back to the chart page. It has to do with these.
Right. So if you look, ZBU5 started trading, I don't know, probably last December or something like that.
Yeah, right. Yeah.
Oh, February? February.
It started at the beginning of the year, yeah.
So what happens is ZBU5 is the front month. It's trading or it becomes the front month. It's tradable. That's what we're looking at right now. But when you look at a long-term chart, okay, that needs data before ZBU started trading, it looks at the previous future. So, for example, if you're going back and looking at what was that, March or
this would have been March, right?
Is it August? Well, that's 20. Is that 2024?
This is 2025 is here. So this is
you're looking at like 20 years.
I have the 20-year, but it only goes to, so this is 2025. This is all of 2024. I have a 20-year chart on, but it doesn't go back that far.
So the short answer is that it's the basis between it's the roll. Okay?
The roll.
So
you roll your futures out in time. You have to roll them from this future to this future. And that's why, is there a drag in bonds?
No, there isn't a drag in bonds, but the charts aren't smart enough. They're not smart like we are. They know that, there's a basis in that, so I have to adjust by the basis. That is, if I'm trading, let's say, the June future, the ZBMs going to the ZBUs, there's going to be a basis. Just like, Liz, you were just looking at the basis between the SEPs and the Ds. Right. So
I just changed the chart to, and I don't even know what this is. So $/ZB, and that kind of aggregates it all together with the rules and
continuous and adjusts for the basis.
Yes. Okay. So I just wanted somebody with the layman's eye to hear it from our bond expert that this is not a massive move down.
No, that's just the basis between the old contract and the new contract. That's it.
Okay, so TP, I think we got to all the market measures. I just want to make sure. Oh, hold on, let me just make sure one more. Okay, yep, we did it. We got to all the market measures. Okay. No. Now I will get into Twitter. 2 things that I want to address real quick. Number one, this was actually to me, and I don't think it was asked to you, but I wanted to talk about it on air because I think it could be confusing a lot of people. TP, we've been talking a lot about those iron condors, the 0 DTE iron condors, putting them on at 9 o'clock. And so I think her name was Lisa. She emailed and said, I just can't wrap my brain around how if I win 70% of the time and I lose 30% of the time, how it nets out to around $50. And this is what I said, and maybe you can correct me if I'm wrong, but this is what I said to her. Because if you look at it and you do the math, it almost looks out because it's going to be a scratch. If you're going to win $80 each time and lose 200, it's going to go out to be a scratch. The crux is that not all of them are full losers. Some of them might be winners. You might have a 5% winner that just didn't get taken off, or you might have a 3% loser that wasn't the full 200. That's how it nets out to be $50 each time. Does that make sense?
Yeah. And it's also taking it off at 10%.
Yes. If you don't hit the 10%, like here, I'm just going to put one in. This is $7. Usually, I mean, I know you've been separating yours and getting 7. I've been doing the actual straddle. You usually get around $8. So you're risking 200 to make 80, right? That's typically how I've been setting them up. And in that situation, if it comes off at 10%, but you let it go. So if it's a 5% winner, it just goes. If it's a 9% winner, it just goes. And if it's a 1% loser, that's in there. That's how you get. It's not max loss or $80. That's not how the math works.
Right. And what happens to answer the question, here's what happened yesterday to me. I was short that iron butterfly. Okay.
Yep.
I forget what the strikes were. And I put closed it out for a 10% profit. But so I put it on, market rallied up, both my call strikes were in the money.
But you did nothing.
Forgot about it. I can handle.
You did nothing. You sat on your hands, right?
Yep. So didn't do anything, whatever. I can handle the max loss, whatever. And then what happens? I was actually on the phone with you talking about something else, and it was, 11:30 or something?
Yes.
Quarter to 12?
It was
and
close,
it was
close to
being
noon.
filled. While I wasn't watching, while I was talking to you, the SPX fell back down, and they sucked some premium out of my iron butterfly, and I bought it back for 10% profit. Then okay, done. And I started doing other things. And what did the SPX do? It rallied back up and would have turned that trade into a loser. So to answer her question, that 10%, taking this is the exact opposite of what Wall Street has tried to sell you for the past 100 years. They say, cut your losers short and let your winners run. No. That is the exact opposite of what works in these trades. Take your profits take smaller profits and let defined risk losers go, because those might turn into profits later in the day. That's the way this trade makes money. That's why your son is up on average $50. That's why I'm up money doing that trade. It's not because I'm some genius trader scalping the market. That's not what's happening. It's taking the smaller profit, booking it, put it in the bank, and letting it go and not touching it, versus letting the loser go and seeing if it comes back, because those one-day moves at expiration can be big. The SPX can move $10, $20 in 20 minutes on a Friday afternoon.
And anything goes. Like you said, you waited a while and then you finally got filled. Now, I know Eric was getting filled pretty quickly. Okay, I've got some other questions for you. And this is, I'm going to read this. This could say Love Liz, but here we go. This is from, Arat from LA. Tom Preston, and I quote, Tom Preston is one of the smartest people in the room. I'm just curious why we don't have him on the follow page. And you don't have to answer that if you don't feel comfortable. But that was
I'll tell you exactly why. When we're setting up the follow page, I was originally on there. And this years, like 7 or 8 years ago, and I was on there putting up some trades. The problem, though, is purely technical. At some point, because I am remote and not in the office, they changed some security protocols to make it harder or impossible for outside computers to get into the back-end servers.
Yes, they did.
So I was dropped. It wasn't connecting. So I never get added back on. Okay.
But you know what I was going to say, and I'm actually just kind of glad about this too. But all of us, I think, on this have all kind of have a similar trading style, right? So that being said, you write about it every day in the Cherry Bomb. You write about it. You're being broadcast in a different manner than this. So your trades are still, you're still out there. You still are saying what you're doing, and you're still giving a trade idea all the time. You do it 4 days a week. He's the Cherry Bomb writer every day but Monday.
And so, the cherry bombs are one trade. I do probably 10, 15 trades a day just trading stuff, putting on new stuff, closing stuff, whatever. And what the follow page is good for is just, what's the word? Ideation. Is that a word?
That's a good word.
Hey, TP, 2005 is calling. They want their meme back or whatever it is. So in other words, what am I going to trade today? Let me see what, Fozzie is trading. Let me see what Liz and Jenny are trading. Let me see what Sosnov's trading. Let me see what Mike is trading.
And that's
now,
all
I may completely disagree with the strategy they're doing, but I'll take a look at it.
But you might say, ooh, Mike, AMD. You might not even look at what the strategy is. It just is going to be like, ooh, what's AMD doing? If he's in it, I want to look at it. That's all it's for.
Hood. Yeah, I sold a put spread in Hood yesterday. Stock's up. Did I know Hood was going to rally? Nope. And I think maybe did I see somebody on the follow page trading Hood? I don't know. But anyway, Hood rallied, took a profit, boom, done.
Yeah, for sure.
And
I
that's
like it.
all it is. It's not like the follow page or the cherry bombs or anything, any of this content. It's not like trade recommendations like, oh, you got to do this. No. We want to put ideas in your head about all the different things you can do and to use smart strategies that incorporate volatility, probability, defined risk, positive theta. That's all. That's all this is.
Yeah, we're just trying to have them think. We want them to come up with their own trade ideas. Okay, now this is part 2 from this person. And this is actually, I think I'm going to have to answer this more than you. So we, TP, I'm going to actually go into, hold on, let me try to find my, there we go. So I am going to the Tasty Live website. That's all it is, tastylive.com. And I went to market measures, which you can go right here, go to market measures. So this person was asking, we reference a market measures quite a bit on this show. This is not about the Iron Condor, but it was about how around 10 o'clock our time, maybe 9:30, 10 o'clock our time, there are more 5-minute up bars than there are 5-minute down bars. And because of that, and we used to trade this with you all the time. Do you remember when we would put the SPX and we would just wrap it around the at the monies? We would do it earlier. And then once we got $50, we'd
trade?
Yes, we'd yell Xiao Jun. So I just wanted to show where we got this from. So you go to the market measures, and the market measures is on. I mean, it was a while ago. It was on 5/8. So you scroll all the way down until I'm in March, April. Yeah, I got to get to May, March, February. It's on May 8th. Right here. Best time of day for 0 DTE scalps. I just wanted to show where you can find it. It was on May 8th. That's correct. But this is not the Iron Condor one we're talking about. This is the one that is saying that there are more 5-minute up bars during this period than 5-minute down bars. And we just created a quick scalp. It does not have a trade idea in there. Jenny and I and TP decided to wrap it around the at the monies with the 0 DTE SPX. That's our trade idea from a 5-minute up bar. That's it.
Can I also add just a point to that? The way you trade that I traded, is we buy at the money verticals. Yes. We don't buy futures. We don't buy out of the money calls. Okay, which is kind of what some traders might want to do. Oh, there's more up bars. I'll just buy them. I'll buy futures. No, that's too expensive, too capital intensive, too risky.
Too risky, right? And if you don't get your 5-minute up bar, if you create it like TP's talking about, where you're wrapping it around, if it doesn't move, you don't lose.
Right. So if, for example, if the SPX settles right here at 377, that spread, that 75 call is going to be worth $2.80. Oh my gosh, that's what I'm paying for the spread right now.
Yes.
It's going to be a scratch if it sits right here.
If you don't get the 5-minute up bar. If you do get the 5-minute up bar, you can get out pretty quickly with with a 50%. And that was the Jajun trade. And I love the Jajun trade. Jenny got a little frustrated with it, I think, but I love the Jajun trade because nothing made me happier. I could make thousands of dollars in doing all these other trades, but every time the Jajun trade hit, it made me so happy because I got to go, Jajun!
Yeah, no, it's that physical response.
Yes.
No,
yes.
Jajun is a physical. He generates a physical response in people.
Yes. So that was my favorite, and I don't even get as excited with my at the money iron condors as I ever did with the Jajun trades. So that's where that came from. So thank you very much.
Perfect.
So those were some of the questions. There's one more that I want to make sure that I'm not ignoring, and this is from Lisa as well. Hold on, just give me 2 seconds. Okay, yes. Here we go. Are you ready?
Mm-hmm.
So this is from Lisa as well. She has several naked put trades with the following scenario. I have some profit, but not yet 50%, and I'm not yet at the 21 DTE, and earnings are about 15 to 19 days. Do I not hold through earnings? My question is, how close to earnings does volatility increase to the point that I would want out of the trade? And I'm just going to read this and then I'll let you answer. Is there any tasty research regarding volatility increase as it relates to earnings, as in the number of days prior to earnings that volatility ramps up and decreases my profits? I have opinions, and I know the opinions are not tasty opinions, so I'm going to let you go.
Yeah, I don't think we've done research on that specifically, partly because it's I'm not sure if we have all the data to do it, but I don't think there's a reliable way to see, and I've looked at a lot of these, and I have my own volatility charts, and it's hard to tell if there's any window when the volatility starts to creep up ahead of earnings. Sometimes it happens 6 weeks before, sometimes it happens 1 week before. I don't see any. So in other words, if she is waiting if she wants to get out ahead of an increase in volatility, I don't think there's a specific window that she should be looking for, time when she should be looking for. In my opinion, if volatility hasn't increased yet on those short puts, and she's, let's say, at 30 days or something like that, ahead of that 21 days, don't get cute. Don't push your luck. So if the market is going to, the market knows earnings are coming. Okay, it's not like we know and they don't. Nobody else does. They're gonna start increasing volatility in those front month options. So I don't think it's worth holding them necessarily until that happens. I would either take profits. If you're like 40% profit, that might be enough for you. That might be enough for me going ahead. Going into earnings. Take your 40% profit or roll to a further expiration. Roll out and down.
That was very well said. And I actually think that my key scenario here, and I'm reading it so it's easier for me to say, was naked puts. That's directional. It's neutral and directional. So I have a real hard time putting in, and I know Tom and Tony will do it, but I opened up NVIDIA because they have earnings that are farther out, but they're not right there. So Tom and Tony will sell strangles when they see an IVR, not in an 8 IVR, but if the IVR is higher, they'll sell strangles through earnings with it being this far out. I do not. I have no problem with puts, and technically I have no problem with naked calls. I would prefer a directionalness because, to me, in my opinion, this is running in sand. Can you get there? Does the vol come out? Sure. But it's going to take longer. You can get from point A to point B, but it's going to take you longer with a lot more effort than it would if the vol collapsed without earnings in the horizon.
Yeah, I don't like going out 56 days on those trades. I'm looking to get paid in NVIDIA.
But if she did a put,
it's too long.
But say you had a put and you sold this for, I don't know, you're not yet at 50%. I have no problem rolling it out before 21 days to get out of there, especially in a naked put, to go a little bit farther out. It's directional. You can go through there, take advantage of their earnings. I have no problem with that.
100%. So the short answer is if you're asking the question, you probably should either close or roll.
Take your profits.
Okay. Yeah, take your profit because nobody went broke taking profits.
That's There you go. That's our tagline today. I'm actually going. That's what it's going to be labeled. Nobody ever went broke taking profits. Okay, so I do want to close. This was an earnings trade. I have to roll this out in time. I just want to glance and see if there's any in the money signs. Enphase Energy clearly did not work. So I'm going to actually roll this pretty far out.
Did they have earnings?
I don't know if it was an earnings trade. Yeah, we put it on 3 days ago, so it must have been for earnings. But I'm extending my duration.
I closed mine out a few days ago.
Yeah, congratulations on your wealth.
No, I'm not showing up, but I do trade Enphase. I have positions in that.
I just rolled it out to extend our duration. That's all I did. And I rolled it to the 21 day, which I know I probably should be closing, but I got an additional $1 for it. So I left it.
Thank you. Done.
So that is out. I just want to make sure. Now, TP, is we are going to get into, if I can do this correctly, Twitter. So we'll go top down because you are a crowd favorite, and I want to make sure we get that. Okay, so this is from John. Wonderful to see you, John. I follow TP's trades through Cherry Bomb Daily. That's what I'm saying. He just uses a different medium. He sizes so many of his trades to fit a modest-sized account. So,
right. So, John, that is one of the reasons that sometimes it takes me a while to find the Cherry Bomb trades. So I might do 15 trades in my own account, but not all of them are Cherry Bomb worthy. So I'm not going to do something that, it's a $8,000 margin requirement. It's like, no, people can't do that. That's stupid, because 50,000 people read those Cherry Bombs. Right. I don't know all of them. I don't know your experience level. I don't know what size your account. If you want to trade bigger, so here's a question I have for you, Ms. Deer.
Shoot. Yes.
So. Yeah, I like to focus them in for people who have maybe $5,000, $10,000 accounts.
Correct.
What if on your Iron Condor strategy in SPX, you've been booking some winners? At what point do you start saying, all right, $50 is nice. I need $100. I need $200. What do you do? Do you do more iron butterflies? In other words, do 2 lots or 5 lots like Jack Tucker? Or do you widen them out to take more risk? What do you do?
Okay, TP, I'm really glad you brought this up, because this almost broke my brain the first time I looked at it. In 45, if you're going durational, you keep your size small and you make your risk more wider. I'm just going to show something. So if I was going to go farther out in time, and then I want to bring it back to the zero, and correct me if you don't think any of this. If I was going to do an iron fly here, and I'm taking, X amount in risk, and I wanted to increase my risk. Did I do that right? Yeah, there we go. If I wanted to increase my risk, I would widen it. Say if I'm comfortable taking, a certain amount of risk, I'm going to widen it and still keep my contract small. Hence the trade small, trade often. Even a 1 lot can't get bigger if you widen it. That's what you do if it's durational. But I would love to hear your opinion on this. So if you are going in the 0 DTs, I'm going to throw in the Iron Condor. Here's the $10 wide, very, very narrow. Once again, it's 7. We would have been out for $100 already, because we usually are getting 8. Okay. Mm-hmm. If you wanted to take additional risk, so say you're willing to risk say you're willing to risk $600 here.
Yep.
The old method would be to widen it, right?
Mm-hmm.
But you're not increasing your max profit by that much with the 0 DTEs, because these wings are cheap.
Right. Or the wings are still expensive. That's what it is.
Yes.
In other words, it's because of that skew. Here's sizing your trades isn't one size fits all, okay? Obviously. Yes. But I think you are exactly right. If you're looking at 45-day Iron Condor, if you're going out further, you can widen those wings out. Why? Because 45 days gives you time to adjust, time to roll, time to, take profits if they come, but here's the key. That 45-day Iron Condor is going to take a while to get 10% profits.
Yes.
Okay? And if I'm taking that much risk going out that much time, I need more than 10% on that trade. So it takes a while for that trade to develop. And because it's further out in time, there's more risk with what the SPX can do. Going to 0 DTEs though, okay?
Yes.
That 10% profit happens in an hour.
We also have another school of thought. They'll take 20 deltas and make it $20 wide. So this is also a way to take risk. Is that $20 wide? Yeah. So I'm going to go 20 delta, $20 wide. That's the other school of thought. But this risk, so your max loss here is 17, and you're going to make $275 in profit.
Yep.
That's where this broke my brain, TP, is that if I want to make $280 in profit, I can just double the iron fly, and it's still less max lost.
Yes, because and this is getting into the weeds and of put price, option pricing, things like that. But there's still, as you go further out in the strikes, those puts are still expensive. They're eating into your credit. They're still eating. In other words, doubling the risk doesn't double the credit.
It doesn't.
No, because those out of the money options because the skew gets steep with their 0 DTEs. So the skew is too steep. You don't get a commensurate rise in the credit when you double the strikes.
Commensurate, good word.
So if you want to double your credit, I think it's smarter to do 2 of these 0 DTE iron condors as opposed to widen them out. What that does, it doubles your risk and it doubles your credit.
But it does give you a higher probability of success. It gives you a wider range, and I do think I'm speaking. I want to give both. I want to give both analogies here, kind of playing devil's advocate, because I think if you have a bigger account, like your Jack Tucker's, he does the 20-30 delta, $25 wide, and he does lots of them, right? And he's taking them. His profit isn't 10%. I think he takes them off at like 25 or 30. So he's well versed in risk and clearly has a bigger account, just like the Blue Wackadoo, Eric, they have a bigger account. But in my mind, when I'm thinking about if I want to scale, if I'm going to go from a 1 lot, like my son, if I wanted to go from a 1 lot, if I'm willing, I've grown my account, I've grown my $5,000 account to $7,000, and now I want to take more risk. That's when I would say, I don't know that I'm going to do the iron condor. I'm going to double the iron fly because I'm taking a minimum amount of risk, additional risk in these 0 DTEs.
Right, and the iron butterfly and the iron fly are basic. You can disagree all you want, but they're basically the same trade. You're betting that the SPX is going to move as much as volatility says it might. That's what the trade is.
Yes,
and they have different characteristics. But yeah, for a new trader, especially stepping into taking more risk, I think it's easier to do 2 of these things than widen them out. Okay. And I'm talking specifically about the iron butterfly. And then instead of doing a 10-point butterfly, do a 20 or a 30 or something like that.
And we're specifically talking about the 0 DTEs. We're not talking about durational trades. This is just specifically there. And it is so fascinating to me how the learning lessons because the time frame is so ramped up that it flips over. Because in my mind, TP, and tell me if I'm wrong here, if it's going to go wrong, it's going to go very wrong, right? So if it's going to move, it's not as if the SPX is going to move. Maybe it moves 1 point out and I lose $50, right? If the reason these are going to move is if you get a turnaround and all of a sudden the SPUs drop by 40 points. So both will lose.
Oh, 100%. You mean with the 0 DTEs?
Yes, with the 0 DTEs. So because both will lose.
It gets really binary when you're dealing with 1-day moves, especially around expirations. Okay, it's like holy smokes. The SPX is up 16. It could be down 20 by noon. Okay. So who knows what happened? It doesn't matter. The why doesn't matter. It's the what. Okay. Bang, it sells off. And you know what? Those wider wings didn't help you because it's pressing on those further out of the money options too. So it doesn't. I like tighter wings with these 0 DTEs. Tighter wings and bigger size.
and I know we're not going to get to Twitter, but I have to ask you questions because Jenny's going to kill me if I don't ask you this. So a long time ago, like a long time ago, because we've been doing this for a long time, you were saying, I remember, and I'm not going to put words in your mouth, but there was something about how I pay the bills would be, and I'm using SPX just because it's big, it's liquid, it's whatever. Yep. So if you're going to go out and say, I'm just going 55 days till expiration and selling cheap puts, like pretty far down because your account is
like
enough. Can
two standard deviations or whatever they were. Yeah.
Are you still looking at these as bread and butter trades?
I was doing SPY. I was doing SPY. So it's a lot cheaper. It's not $85,000. And yeah, I'm still doing those. It's been working. I don't make a lot of money doing it because volatility is so low. But yeah, I'll sell like the 520 or something like that, or probably the 530, 525. So yeah, it's and I wouldn't do 56 days. I was doing closer to 30 days.
Okay.
And all this is doing really is replicating a long index fund. That's it. And
you're making more money than you would by return on capital, right? So you're probably going to try to get $1, is my guess.
Yeah, it's something like that. And so put up $7,000 in the 30 days, make 96.
Yeah.
Yeah, I'll still do that. Just do it. I have the money to do it, so I keep doing it. Now it's gotten more expensive over the years.
Oh yeah.
As SPY has gone from 300 to 600. Yeah.
I mean, you're right. I believe we were talking about this. You're right. Around, the 300 level.
Yeah. It's, but it's all that strategy is, there's nothing, oh my gosh, it's so clever. No, it's just, it's a long index fund. That's it.
Yep. But I think you also know what you would do if the wheels fall off scenario. It's pretty far down. It's an income stream. But at the end of the day, in 30 days, what other quote did you give me? You were selling something so far down and you're like, hey, listen, if it gets to this, we have bigger issues than the S&P 500.
Yeah, well, see, that's exactly right. And I also have other trades pointing south that haven't been doing so hot. Okay.
Correct.
So they would be like, oh, yay, finally, So people forget that yes,
that's not your only trade. That's not your only trade. That's not your only trade. You have 15 other things. Yeah.
This is I have piles of stuff on, and this is just one piece of a big portfolio.
I love it. All right, TP. Well, on that note, our week together is over. I'm going to kick Jenny out soon again because I need to bring you in. Flame Shirt Friday needs to be a thing.
Don't say that. I'm already on thin ice enough with Jenny. I don't need you Jenny, we're going to replace you with TP. Oh, that would be she would kill me. She would fly down to Texas and kill me.
I think you're going to get an email because I'm going to be gone for 3 days in August. I'm dropping my son off at college. I'm dropping my son off at college. So then preceding those 3 days, it's going to be sunglass episodes because I will not be able to stop crying for days.
Liz, I don't know. It's a 6-hour drive?
It's a 6-hour drive, but this is what we're doing. So that's why I'm gone for 3 days. He's going with a bunch of parents. So we're dropping him off. We're not staying an additional night. And then all the parents are driving halfway home. We're going to Indianapolis and we all got hotel rooms and we're all going to a really nice dinner.
Fun. And and use just tell him this, that TP didn't start dating until he had been married for 10 years. Okay. So no dating until you're 45 years old. Okay.
I will let him know this. That's good advice. All right, TP, I thank you very, very much for everything. It was a wonderful week. You are a wealth of information, and I cannot wait to have you on again. So thank you very much. I thank you. Tasty Nation thanks you. And everybody out there, have a wonderful weekend. Good luck with yours. I know what you're doing. And remember to trade small, trade often. Laugh with us, learn with us. Watch TP and VLD. Coming soon to a show near you.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddy, Mikey Butler. How are you, sir? Good morning.
Good morning.
Yes.
Things are good. Things are good. Not much to report here.
Okay.
Other than the market being up 35.
Yes. Yes. Tariffs.
Tariffs are gone.
Well, no, we EU 15% maybe agreed upon. Tariff news, baby.
Love to see it. We do have some earnings today, so that's exciting.
Tesla, Google.
Yeah. Tesla, Google.
What are the other ones? There's a couple other ones too. Was it
Southwest, IBM? Chipotle. Yeah, Southwest, Chipotle, Google, Tesla.
IBM. Yep. ServiceNow.
Yeah. Yep, that's it. Handful of them. So yeah, if you have any trade ideas for those stonks,
yes,
let us know in the YouTube chat.
Hit us up.
We got plenty of dry powder, as they say, ready to deploy. But yeah, we're starting off with those stocks for earnings, but next week there's a ton of them.
Mm-hmm.
So let us know what you're thinking. And we'll see if we can get something on here.
I think I might get a little short delta in IBM here. I feel like they're down on every single earning, so yeah, let's see if we could do that. Get that filled real quick.
Well, IBM, wow, they're up $5 right now.
Just doing a short call spread if I can get filled.
Yeah,
did it out in August. Give me a little bit more time. 250 is where I'm stopping. All right, I'm in. Quick little market update. We got, as Mikey said, E-minis up 33. We're at the highs of the day. They just rallied about 20 handles or so to the highs here. They've been choppy throughout most of the session today, but sitting here at the highs. NASDAQ up 20. It's the weakest of the group relative to everything else. Kind of a mix of moves here. You had Tesla, which was down. It's now up a little bit. Google's down a couple. NVIDIA was down at one point today, 167 and change. Meta's been kind of on the stronger end. Apple's been kind of a weaker laggard of the group. So it's definitely been a mixed bag in the tech names. You've got the Dow up 400 and change and the Russell up 28. The Russell, the biggest mover of the day, up over 1%. Oil basically flat here at 65 and change. Volatility coming in significantly here, down 48 cents. The VIX itself, 1552. No vol on the horizon here.
Not any vol.
Bonds down 26 ticks. You have gold and silver both getting killed. Gold down $27. It just moved, or I'm sorry, $47. It just moved like 40 points in the last 5 minutes here. Silver down 10 cents. Bitcoin down 1,000 on the futures spot, basically unchanged here. It just had a big rally as well. It was a buy everything rally there in the last 30 minutes here.
Mm-hmm. Yeah. Even HIMS ripping higher, 13%. What did you say? Peloton?
Peloton was up. The pigs are flying, which piques my interest of just, maybe this being a good place to get a little bit of short delta. If you go to the high option volume list and look at the big movers, it is just piles of duty. I mean, our Replimune group up 34%.
Naturally.
Biotech, you have HIMS in here, Oklo, Krispy Kreme. I know that's been on the Wall Street Bets favorites. You got the quantum stocks, Pony, an ADR. You have Beyond Meat up, 20% or 30% in a span of a couple days. It's that's what it is. Clover.
Yeah, I would say the fact that Donut is up 30% in 1-2 days is kind of crazy.
Yes.
But here we are.
Yeah, I guess.
I haven't done anything in this portfolio yet. I mean, everything that is on the table is kind of within $100 or I've been managing it. I'm waiting to see if we can get some movements here. Nice move in gold to the downside. That's helping my iron condor in the V contract. I got the 3,200, 35 shorts, 20 points wide. And it appears my gold butterfly, 5 days left, will basically just expire worthless unless we have a 200-point sell-off towards the spread. So that'll be a nice $250 winner. But yeah, I'm intrigued to see what the YouTube chat has to say about earnings today and the rest of the week. So let us know. If you want to join us on the YouTube channel or streaming live, just pop over to Tasty Live and you'll see this video front and center.
Yes. I also closed out of a handful of positions. I had a couple Johnny trades. Maybe you'll be interested in those. But I closed out of that target call diagonal spread. Somebody from the YouTube chat gave us that. Took a couple bucks out of that, 100 and change. I also bought in the risk on my Shopify call ratio. Had some questions on that yesterday. It was a trade that we put in the cherry picks. Shopify was down like $2 or $3. I think it's probably unchanged now because everything just rallied. No, it's still down $2 and change here. But I bought in the risk on that, so I now have like a upside free butterfly. I closed out of the NVO call that I had left over from a calendar spread / diagonal spread that we did. MVO having a $2 or $3 move today, so just took advantage of that move, closed that, leftover call out, basically a scratch, maybe small, low profit there. And then I closed out the Eli Lilly short put spread. Somebody in the YouTube chat gave us that as well. So took off a couple winners into this move. I added 3 new positions for my Johnny Trader account. I did kind of a neutral / bullish trade in Google with an upside crab trade. Long the August 195 call. I sold 2 of the 200 strikes in the weekly expiration, bought the wing just to cap the risk on the upside there. Playing for inside / sideways move to the upside mainly. Maybe we pin 200-ish. That would be perfect for the spread. I also did an Iron Condor and an Uber. So I did the 85-75 put spread, the 100-110 call spread. And then in HIMS, I played into the madness here with a call ratio spread, long the 55-60 call spread, and then I sold the 70 call against it for 50-cent credit. So kind of playing that game here. But yeah, interesting move that we have going on here in the markets.
Indeed. Okay, so you got some short delta in IBM.
Yes, I sold a call spread in the August monthly expiration.
Cool.
300, 310, round number.
Yeah.
Stock, I feel like, is usually down on earnings or flat on earnings from my past experience. I know it's had a couple big moves, but I feel like that's my history there.
Hear ya. I think I'm gonna do a downside diagonal in IBM. $8, 10 points wide. Long September, short the weekly. I was just filled at 814.
There you go.
So I'll join you on the downside there. I also posted direct links to the IBM, Tesla, and Google earnings previews in the YouTube chat. So let's look at Google here. I feel like Google. I feel like it's a bullish play for me. Okay. It's recovered nicely from the lows, but there's still some room to the upside. I think there's a lot of concern around Google and the fact that people are going to AI platforms instead of searching things in Google, although Google does have the AI overview. But I feel like it's
baked in.
They'll be able to just withstand. Yeah. But it's also pretty low IV. Like it's at 190 right now. A September weekly diagonal spread is similarly priced to IBM, $800 for a 10-point wide.
Yep.
So I think I'm going to do that to the upside. 813, 1 penny difference. Same structure, 10 points wide, long September, short the weekly. And then in Tesla, I have no idea what to do.
Tesla's a tough one.
Maybe it's an Iron Condor play.
Yeah.
That could be it.
And just, play the range. Do you go September or August?
I think you go August.
Like one standard deviation?
Yeah. Like maybe 300.
I was going 290.
Like if you just do the expected move, 300, 375 for almost $4. And really you just need, even if it's a big move, you just need it to pass through this range. If you do nothing, if you don't touch it, you just need it to pass through the range sometime in the next 23 days and it'll be a profitable trade. Or it can just open within the range and it'll be fine. I think I'm doing that. I think I'm going to do the expected move in August.
300, 290, and then what else? The 370?
375, 385.
All right, I'm gonna move it to the 290, 400 for $3 for me.
Yeah, Adam in the chat talking about Google, people shifting to ChatGPT, the antitrust stuff is still ongoing. These are all true.
Those are all knowns, though.
Yeah,
already in the price.
But yeah, and maybe it's an inside move. If you think it's going to be mixed results, maybe it's an inside move.
Yeah.
But it's certainly on the lower end. Only a 10-point move on a $190 stock. That's low for a big name tech stock. So yeah, Tesla, I'm working that order at 360. I'll let it simmer for a little bit.
Yeah. Don't have to chase. We got time. Got a full hour. 45 minutes now, but you got time.
Yeah. So I'm going to post these to the follow page.
I also just did an end phase short put out in September. I sold the 35 strike at 277.
Little end phase, huh?
Yeah.
Yeah, I like it. I think I already have a position.
Gives you a break even and new lows.
Yeah, that could work. I'll check it out. So yeah, just like that, we've got 3 earnings trades on.
Very nice.
Anything else here? End phase. Wow. Do I go back in? At least this time I'm not feeling this one.
I know.
I don't have a position. I feel like I have to get back in.
Yeah.
Short put?
I just did a naked put 35 strike in September at 277. It gives you a break even at 33, 32, 25.
Yeah.
It's just, volatility is still relatively high. You got a 67 IV rank. 67% implied volatility, 21 IV rank.
I'm going to do the 40.
Covered call?
Yeah.
Ooh. Sure. All right.
Why not? It's $30 stock. What's the worst that can happen other than going to zero?
Oh, no.
Yeah, I'm going to get in at 555. Just got filled on the 40 strike. So yeah, in the money short put is the same as a covered call, but you use a lot less buying power with a short put than the covered call. Filled there.
Very nice. How's your IBIT position looking right now?
It's looking really great.
It's got to be a great trade.
It really is. It's been the best year-long trade I've had, not even close.
For sure.
And that's just because implied volatility has way overstated realized volatility, even though we've seen big moves in Bitcoin.
Yeah.
But when you think about the opening print in Bitcoin for the year, for IBIT specifically, we're talking about a 55 open on January 2nd, and we're currently at 66. So a 10-point move, which is certainly
20%.
not reflected in the implied volatility. If you look at the implied volatility right now, from now until December 31st, we're looking at a 16-point implied volatility, and that's with IV rank at 15. That's a low expected move. When we started this trade, it was about a 30-point expected move, if I remember correctly, which makes sense because if you look at the 500-day cycle in Jan 2027, that's a 30-point expected move, but we're at low IV. We had much higher IV. If we look at ibit.ivr, in January, we had an IV rank. We opened at 65 IV rank. Now we're sitting at 15. So implied volatility was significantly higher when I started this trade. And yeah, we've only had a 10-point move, which is well inside the implied volatility. and we've just been collecting that premium, and I really haven't been in the money at all on this trade. It's gonna be a very exciting visual at the end of the year.
Yeah.
With the green
Big
dotted
one.
lines just going
Gonna be a
way
big
outside
boy.
of the range.
Yeah. Yes, for sure.
Cool. Filled on those 3 trades. Still working on Tesla here. I will not move it from 360.
There you go.
The market will fill me. Maybe.
I know with vol contracting. So this is a weird one. Vol getting smoked.
Yeah.
NASDAQ basically unchanged here. You got some whippiness.
Whippy. How about Kava? Someone in the YouTube chat. Eddie.
Kava.
Potential upswing. They have earnings late August.
All right. We're playing this to the upside.
Yeah, I mean, they absolutely tanked from February to March. It's kind of crazy.
Do like a cheapy diagonal spread.
A cheapy?
9,500.
Cheapy?
Could do that. Into earnings. September, August. 494.
Sure. Could work.
Let's see if I can do this.
Certainly could.
What the buying power is here. Let's see. What about a cheapy crab trade?
Yeah.
This
Someone in the YouTube chat asking about crab trades.
up to 100 maybe.
Is it your favorite trade? Would you say crab or diagonal or other?
I would say the diagonal is probably my my go-to.
Yeah, I would agree. Because diagonal, you don't have risk on one side.
Yeah.
Crab trade, it reduces your risk. You get a lot more IV and premium exposure, but if the move is too much, it can be a loser.
Yeah.
Where a diagonal is not, it's not going to happen. So yeah, diagonal is a happier trade if you're directionally right.
Yes, diagonal is more
works.
directional.
Yeah.
Crab trade is a more neutral trade. I almost think of it as like a neutral, as a more neutral trade than a directional trade.
Mm-hmm.
Diagonal spreads, you're playing for the move.
Yeah.
You know, that's the bigger kicker of the trade. All right, I'm working that. I don't know if I'm ever going to get filled on this. The market's that
I think you
bad.
might.
I'll leave it at 340. I'm not gonna change it.
I think you might. Let's see. Bond market not liking the tariff news.
Guess not. Rates up. Bonds down, rates up. NASDAQ down. Ooh. Was it a buy the rumor, sell the news? No, it's
Down 100 tomorrow.
Down 100 tomorrow on the E-minis.
Well, we're doing the morning show on Friday, so.
And Tom and Tony are
They're
going to
leaving.
be.
They're fleeing.
leaving. Yeah, they're
Fleeing the
fleeing.
state.
They're fleeing.
So I think that will spark some volatility in itself.
Mm.
But yeah, NASDAQ down, E-mini still up. Certainly a sector difference there. Usually when that happens, it's because one sector is pulling down in a big way. So
Bitcoin
if
moving.
you look at the NASDAQ 100, yeah, you've got a ton of stocks that are down over 2%, 1%.
We had Texas Instruments, which had earnings after the close yesterday, down huge, 12%, $26 and change. Big old gap there.
Calculator sales down bad. Yeah, that's a huge move.
Yes.
Let's see. Oklo running today up 730.
Yes.
Weren't we talking about a position yesterday
Yeah.
and we didn't do it?
Yeah.
It's tough.
Yeah. I would like to do something like I did in HIMS, like a call ratio spread here, but you use too much capital. It's a nearly cash secured type underlying $3,000 in buying power. You like are kind of forced to buy a wing.
Yeah. It's tough.
Yeah. One that I'll have to pass on, unfortunately. Good move if you caught it, though.
Yeah. Brandon looking at an AMD inverted strangle.
Okay.
130 call, 140 put in August. After many rolls collected 1042.
Mm-hmm. Got earnings coming up.
130, 140. Yeah, we looked at this the other day.
Mm-hmm.
But yeah, there's nothing. I mean, it's deep in the money. So you basically have short stock right now with a $200 extrinsic value kicker if there's a sell-off here. But yeah, I mean, it's continuing higher. You could move it to September and pick up $4 in premium on the same strikes.
Mm-hmm.
Or you could give up some of that premium and move the strikes higher. So like moving it from a 130, 140 to a 140, 150. You pay a small debit, but you would add a ton of extrinsic value to that trade relative to intrinsic.
Reduce your delta by 32.
Yeah.
Probably a conservative way to approach this situation.
Yeah. But if you're leaning short for earnings,
then
maybe you hold. Yeah. But yeah, there's the nice thing is there's still plenty of premium when you roll from August to September, and that will eventually boost your break evens much wider than your inversion.
Mm.
So
yeah, you'll definitely need, unless you hold it into earnings and you get the 20-point down move, you're definitely going to need more rolls.
Yeah.
2, 3 of them to get back to like kind of a scratch here. But yeah, stocks near highs, maybe lean a little bit short into earnings.
Yep.
I know it stinks right now, but maybe get bailed out on earnings.
Indeed. What else we got here? I like your Hims crab.
Thank you. Do I just lean short gold here, or do I put my put spread back on? Let's see. So it's now marked at 110. I could probably roll the put spread up. So I had the 3,200. Maybe I go to like 3,275. What am I? 15 points. 3,260. Where's 3,275? Yeah, it's still right there. All right, I'm gonna sell this put spread against my call spread into this move. See if I get filled above the mid.
What do we think about an Intel short?
What's that stock trading at? 21.50?
23.
23?
Mm-hmm.
Ooh. All right, 250. All right, so that puts me 630 on this 15-point wide, but Iron Condor and gold. Intel, INTC. It's had a nice little run here.
Texas Instruments worst sell-off since 08.
Ooh.
That's bad.
Yeah. Good, definitely not good.
Not good. Yeah, I mean, Intel, I would lump Intel into the IBM stratosphere. Kind of just...
IBM has gone up.
IBM has gone up.
Yeah, it's moved.
But they're kind of the fringe tech stocks these days.
Yeah, if I was doing some sort of short here, I would, just, if you want to be short the stock, I get it. You could buy a call as an upside because, Intel has a lot of like potential news events of a takeover, buyout, split off, tariff. There's a lot of things that can happen with Intel. So I would cap my risk by buying a call. Whatever your time frame is, sell the stock and then buy a 30 strike call in August. It removes a lot of the upside risk for cheap. Something crazy were to happen.
Yeah. It's a small stock, though. You can do a lot of different things. Let's see here. Tesla 2-day Iron Condor, 10 points wide.
There you go. Instant pain or instant gain. I respect it.
Elon texted me not to expect anything crazy.
Yeah.
I don't think that happens because Elon is going to stir. But yeah, if you do the 2 days, it's just instant payments again. There's no.
Oh, I got my Kava.
Nice. Let's see. With the year-long trade, does that mean you're rolling the position monthly, or are you buying leaps that are a year out? The year-long trade is rolling short premium consistently.
Yes.
So monthly, month to month. But because I know I'm holding it for a whole year, I don't really have strict guidelines with my movement, especially now. But I have said I don't want to have short delta and IBIT. So anytime my short call is about to be tested in the strangle, I just move the whole thing up. So I did that a couple times. Filled on Tesla at 360.
There you go.
Iron Condor. So yeah, there was a couple of rolls I made where I moved the 50-65 strangle into a 55-70. So I've shifted it up. I did that again. I moved it to I moved the 55-60 up into a 60-65. So literally just shifting the whole thing up. Instead of just moving the put up and keeping the call there, I'm just moving the whole thing up.
Where are you now?
Now I'm at the 65-75.
In September?
September. So sitting at the put strike, short call, still giving me a lot of premium with the call skew in there. But yeah, I've collected $21.61 so far, $2,000, and I started with $500 in late December, early January. So quadrupled the premium received, and we're still out of the money with 10-point wide strikes. So we're looking good.
Do you ever consider buying some wings, like 15-point wide wings? You do it for like $1.
You could.
Just to cut buying power if you find yourself in a situation where you need some extra buying power, that's a pretty cheap way to do it.
Yeah, buying wings for $1 would free up $1,400 in premium.
If you need it.
If you need it.
And you want to reduce some risk or whatever, Volatility's still relatively low, IV rank here.
Yep.
You could consider.
Put ratio and natty gas. I am long the micro natty gas contract.
Oof.
So taking some heat today, down 5%. But yeah, if you want to do a put ratio, you can. It's just you got to recognize that it's a huge product. It's a $30,000 product, and it takes $3K in buying power. Yeah. And it does move. But yeah, you can do a put ratio in there. If you're just trying to pick up $300-400, you can do like a 3129 or a 328. But just recognize the notional risk there. Gregor playing Google and Tesla long bullish into earnings.
I like it. I'm neutral bullish in Google. Tesla neutral.
Lovely.
Short premium.
Lovely. Yeah, the PDT rule changing.
It's a huge
bigly.
Huge thing.
I don't know about the reset every 90 days until then. I don't think they're going to change that. I think it's just a wait until the change was made and then it'll open up.
From what I understand, it's probably a next year thing, if not maybe end of this year. So there's still, some time until that gets dealt with, but it's a great development. A very positive shift.
Yes, Whit, I was kidding about the Texas insurance calculators.
Yes.
But clearly they had a very weak guidance for the rest of the year, which is leading to people pulling out of the stock. Handful of trades here. ARM short put at 135. August 1st, so an earnings short put.
Yeah, I don't mind it.
Yeah, I think if you're selling the weekly for earnings, totally fine.
Right by
if you want to pick up some more delta, I would go to August.
Mm-hmm.
And it really just premium. Like if you think it's going to go up, then I would go to August or September and get that delta move in your favor. But if you're just trying to collect that premium, and even if ARM goes down, you're still going to make that money, then yes, the 9-day cycle works. RDDT, Reddit.
RDDT.
Same thing.
Where all the memes are getting pumped.
Yep. Same thing, 9-day, 126 put for 350.
That's some juicy premium.
Mm-hmm.
Too capital intensive for me, but.
Target, August 22nd, earnings.
When does this have earnings? 31st.
96 put.
Wait, this is a wide iron condor. Reddit. Might be able to do like the 15-ish. 120 is a standard deviation. You do like the up to 200-ish. Let's see if I can get filled on this at $3. There we go. All right, 1/3 the width of strikes. I like that.
Beautiful.
Reddit. 120, 110, 180, 190.
Perfect.
Yep.
Target, 96 put in the 30-day. Same story.
Mm-hmm.
Earnings, $2 premium.
Why 96 though?
Just right at the expected move.
Yeah. Kind of low. Yeah, I don't mind that.
Yeah.
I took off some long delta today in targets. I'll wait, but yeah, I feel ya.
Yeah, target, I feel like the IV is low enough to where I would still just rather do diagonal.
Mm-hmm.
Like a 105, 115 for $7. But yeah, the short premium, I like it. Last one, BABA, 108 short put. August 22nd.
My last BABA trade was a winner, which is a shock. $110.
Yeah, short put for $1 with 3K in buying power.
Too much.
It's just a lot of buying power for $1. So I would define risk here if you're doing something like that, but up to you. Okay, Brett's got an Oclo diagonal. Long the 75 September, short the August 85. Was down a bit, now it's up, considering taking it, but lots of time left and believe in the potential. Also considering rolling down the short to take some delta cost basis back.
Mm-hmm.
So 75.85.
Tons of call skew, obviously, into this move.
Yeah, I mean, it's still trading for $5. I don't think you can roll down the call, but if you roll it down, you're probably only rolling it down to the 80 strike, and you're reducing your 10-point wide into a 5-point wide, and you're picking up $1. That's really all you can do there. But I kind of like, because there's so much call skew, I kind of like the idea of just keeping it as 10-point wide. And if this move continues, if this move continues, then you're going to want to have the 10-point wide versus the 5. AJIT, slinging the puts. AJIT. Oh, no, never mind.
That's the name.
They're talking, Cancel that.
Ajit.
Let's see. I'm waiting for GEV to calm himself down to sell a call credit spread.
Yeah, these stocks are going nuts. GV, VST.
Everything's up. I haven't looked at a chart
that
in the last 3 weeks. That's not up and to the right.
Yeah.
It's really insane.
Been a great run, you know?
Wow, even UNH is up $3 again.
Dog. Pig.
For now.
Let's see where my spread. Still right at the money. Stock stinks.
How are we managing the RCL short call spread?
I think I have this in my Johnny Trader account. I forget the exact strikes. I think
Everyone's on cruises.
I think I'm right at the money here. Let's see. Yes, I have the 350, 360. I did it at 220. It's probably marked at $4 or $5. Yep. It's right at the money. 50-50 shot. I have no problem leaning a little short into this. So nothing to do. I like having a little short delta here. I'm good.
Yeah. All right, let's throw on some short delta in either SPX or SPY or the Qs.
No.
Andrew's looking at a bearish calendar diagonal and SPX a month out. So
I got my big wide butterfly that I'm now losing $300 on today into this rally. Looked like it was going to be perfect yesterday.
I'm going to use SPY.
Okay.
I'm going to do a little downside. 630 put.
September.
630. 615.
In August.
So there's the nice thing about SPY and the Qs too is the put skew here. So like you could do a 10-point wide going to 630 and 620 with August. But the difference between the 620 and the 615 is only 80 cents. So I'd rather move it to the 615, give up that 80 cents, have a 15-point wide for $8 versus a 10-point wide for $7. So I'll throw that on right now.
I like it. Do you consider going to the NASDAQ with all the big name stocks reporting? NASDAQ being a little bit weaker.
If you're just looking for like a macro exposure to the downside for tech stocks reporting earnings, certainly could.
555, you could do like the 555, 540, same sort of thing, $8.46. We'll try that. I mean, who gets short the mags into earnings? I guess we are. The sacrificial lambs here.
I think yeah, but I think it's just a good time to put on a hedge, like you've talked about. Low vol.
Pigs are flying.
Yeah. Low vol markets are at highs. It's the cheapest time you're going to be able to get on a 15, 20 point wide diagonal. Yeah. And the highest prices too, highest strikes. So we'll throw on some hedges here. And yeah. Any suggestion for a Lulu up move 60 days out?
Stock has been left for dead.
It's done. Tariffs killed Lulu. Look at this thing, down to 200. But yeah, I mean, the nice thing is the stock's down. IV is down. Earnings are early September. So I think it's more of the same. I would just go with a diagonal spread, something like that, or a calendar spread even.
Yeah.
September, August. Placing your long option in September will help you retain value because it's in the earnings cycle. But yeah, you could do like a 240 or 250 calendar spread for less than $1,000, or a short put spread, something like that. But I like the calendar or diagonal in this low IV environment.
Yeah, I was looking at like just a short put spread, but they're cheapies. Volatility this low, so I tend to agree with Mikey here. Maybe you lean towards a call diagonal.
Boeing is up almost 100% from the April lows.
What isn't?
Boeing is the easiest thing on the board. Like really, it's one of those stocks that's just too big to fail. Anytime it drops, it just always recovers.
It stayed at like 160 for 5 years.
Yeah. It's nuts.
I mean, going back to 2020, COVID, it was, 150.
Then it went back to 200. Then it dropped to 150. Then back to 200. Then went back to 140. Then it's back to 200. It's insane. crazy. This might be. I mean, this is literally this same magnitude as the COVID rally for lows. It's nuts. But yeah, thinking of playing the downside with puts. What do you think in RTX and Boeing? Yeah, I think you just keep it small, keep it defined risk. Same kind of thing with Lulu. Like Boeing implied volatility in September is 30%. It's really low. So yeah, like a September and then August 1st short option. Like you can do a 230, 220 diagonal spread for $7, or you can do a calendar spread, something like that. But yeah, it's on the board. RTX, $155 stock, also on a tear. Yeah, I don't have as much of a bone to pick with RTX, but it's the same thing. $5 at the money options in September on $150 stock. Like this is really low IV. I think I might rather do RTX just because of how low the IV is.
23%.
Yeah.
Monthly. IV ranking 9. I think it reported earnings this morning or yesterday after the close, something like that.
Yeah. Let's see. Roblox down bigly today.
Yeah, I need more. I think I'm right at the money. Yeah. I need
more.
110. I have the 110, 120 in this account. I think my Johnny Trader account is the 115, 125. But yeah, this stock is another one that has this might be the first down tick it's ever had. 50 to 125 in 3 months. Earnings coming up on the 31st.
It's nuts. Let's see. What else we got here? What else we got? Google Crab. 190, 200, 210. August, July.
I went into the weekly for mine. I did it in the Johnny Trader account. So,
yeah, August monthly and then the weekly for the shorts.
Yeah.
So $4 for a 10-point wide.
Yeah, I did a 5 by 10. So I got $5. I got a little bit of extra risk on the upside. I just bought that wing to cap the risk. I could do something here.
Yeah, Google Crab. I like it.
I could do so they had the 190, 200.
190, 200, 210.
Yeah, I like that. $4. Yeah.
$4 where your long call is worth almost $800. So you're reducing basis by about 50%. And yeah, you need an inside out move and you'll be golden.
See if I can get filled here. There we go.
Do Johnny trades only come out on Wednesdays?
Oh, new opening trades, yes, on Wednesdays. But I manage them throughout the week when things are happening. But they all get posted, of course. But the new trades are on Wednesdays, yes.
B. Enjoying the content, hoping to see people in Dallas.
Coming up end of August.
I think that's November.
Oh. Which one's the next one? Seattle?
Seattle for us. Denver is
Seattle, San Diego, then Dallas.
Yes. Seattle, Dallas is October 12th. October 12th, and then San Diego, November 2nd.
Yes.
So yeah, we will see you in Dallas.
Yes.
That's for sure. What did I do with my skewed iron condor and Peloton? Or no, Palantir? I did nothing. If you bought in the risk, If you bought in the risk on the upside, then yes, you're doing good.
Mm-hmm.
Up $100 in profit. Yeah. I didn't do anything. I've just let it rot for 26 days. But
Let it rot?
Yeah. But yeah, we're up 20 cents here. Most likely because I did not buy in the risk into this rally. But we'll let it go. We'll see what happens here.
I am gonna roll up this put that I have.
This must have, I think we got earnings moved into this cycle. Because I've literally had this on for 26 days and it's a scratch. This is why I don't like selling premium on both sides into earning cycles. But I think it was moved into here because I don't think I would have opened this trade for this reason. But now I have an earnings iron condor on.
Yeah, it's fine.
Yeah.
Survive.
Luckily. 10 minutes left here. Quick recap of stuff we got on.
I
IBM.
did a whole lot.
Yeah,
That was
IBM.
rapid fire. That was like
That was a lot.
4 or 5 grand and just thrown out there.
IBM downside diagonal, long the 285, short the 275, long September, short the weekly. Same setup in Google to the upside. Long the 190 September, short the 200 weekly. Both of those are $8.13 or 14 cents, literally. End phase short put in September in the money for 555.
Covered call type.
40 strike in September. Tesla iron condor, 10 points wide with the short put at 300 and the short call at 375 in August. So earnings iron condor, but pushed out 20 some odd days so that if there's a huge move, I just let it sit there, or I'll close the untested side if I can do it for pennies, and we let it sit. And then SPY doing a very scary thing and throwing on some downside delta.
Who would ever do such a thing?
15 points wide, long the 630 put in September, short the 615 in August for 850. So yeah, one undefined risk trade. The rest are defined risk here.
For me, I did the call spread in IBM. I have the short put in end phase, iron condor in Tesla. Sold the put spread in gold against my call spread. I did the Kava crab. I did the Reddit iron condor. I did the Q's downside play, the Google upside play into earnings, and just rolled up my Palantir puts. It's a whole lot. It's a full day right there.
Lovely. Yeah. It's great stuff. Since this segment has opened about an hour ago, we've had a little bit of movement. Even he's still up more than Nasdaq's still red a little bit, but
still a nothing burger of a day.
Yeah, it's sad. Any thoughts on the Dow? Seen rotation over the last couple of days, a nice setup in reaction to EU trade news.
Let's see what's moving the Dow today. Following a big part of that. Cat. Stock 280 to 420.
Yeah, I mean, I like the rotation idea. I mean, if you've been playing the tech stocks and you think you'll see a rotation into other sectors, I like that.
Yeah.
Especially the Mag 7 stocks like Apple, very different chart compared to Microsoft.
Yes.
Yeah, I mean, Apple, Tesla, Netflix has come down a little bit from the highs. So there's still some room to the upside if you think the market will grind higher and these other stocks will catch up. We saw the same story play out with Ethereum and Bitcoin. Ethereum's had a huge move relative to Bitcoin. So yeah, I think Apple is probably where I would go if I were to pick one.
Fall down 3%. 1835. They've smoked volatility. Absolutely killed it. Look at this.
It's sad. The chart saddens me.
Yeah. No more vol. Dead. Over.
Yeah.
Crazy.
And here's SVXY. This is the reverse vol trade. A lot of people ask, how do you play for an upside move in vol? I think you do something like this instead. You wait for the vol pop, like in April. Saw this thing just absolutely tank. And then you just do it small. You could just buy a couple shares. It's up 30% from April lows, which coincides with vol collapsing.
Mm-hmm.
So SVX, anytime vol is just in the doldrums, you'll see SVXY grind higher. Insurance down, AIG, CB, PGR.
Yeah, these are some big moves here. I have no bone to pick on any of those names.
Progressive. Mm-hmm. Yeah, I think that's pretty much it here.
Was there some sort of news that came out? Tariff? Something?
I don't know. Simply don't know. But I've got my eye on AMD. I have a short put at 145 in AMD. That's up 40 cents. Picking up some steam today. I've got my eye on my Google diagonal after the close today. Tesla as well, and IBM. All three earnings after the close today. And maybe we'll get lucky with, like, let's call it a 100-point sell-off in SPY, or at the E-minis, I should say.
Those are outlawed, Mikey.
Yeah.
No more.
I'm trying
Never
to get paid
again.
on a downside hedge the day after.
Yeah.
That's what I want.
Because you ain't going to hold that.
No.
You're going to take that money and
I'm going to
run.
hedge it immediately. If we get another 30-point rally, I'm going to hedge it tomorrow. But yeah, very excited about the IBIT year-long trade. Currently sitting with a 65.75 strangle in September. It's been an absolute darling of a year-long trade. Finally. And yeah.
Cool.
I think we're good.
Yeah.
We can get out of here a couple minutes early here.
What do we got for lunch?
Greek kitchen.
Thank you, John. John always knows the lunch.
The Wizard
he
of John.
always knows the lunch. He's always there for us.
He does.
Thank you, John.
That's exciting. That's good stuff. So yeah, let's go get some Greek food.
Beautiful.
Some skewers, if you will. But yeah, let us know if you got any further questions. You can reach us on the Twitters. I'm at Trader Mikey B, next to Trader Nikki Bat. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Check out the News and Insights tab. We've got earnings previews for all the big stocks. I posted them in the chat as well. And sign up for the Cherry Picks free newsletter as well. That's pinned to the top of the YouTube chat. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
back. It's still Friday, July 25th, 2025. This is Futures Power Hour Sponsor Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, thanks again for joining us here. We're winding up this week. It's a party like the market has no problems whatsoever.
Yeah, I mean, grinding up. So into the weekend, that's a good sign, I think.
I would have to agree. Market's not getting paper hands as we go into the Friday close. Bonds are up, the dollar's up, gold's down. NASDAQ and S&P have hit fresh all-time highs today. What's the problem, Thomas? We're partying like it's 1998. This is an analogy that we've shared here on the show before. We're going to go to the slides, and we'll show the analogy on the S&P 500 chart. But it's a market that continues to want to go up. I know a lot of people are hoping for, looking for an August or September pullback, myself included in some regards. The news flow today, maybe we're getting closer to a trade deal with China. Maybe we're going to get something hammered out over the weekend with the EU when Trump is in Scotland. Ursula von der Leyen is going to be over there as well. Why be bearish heading into a few days off, Mr. Westwater? I guess there are no issues.
Yeah. I mean, the dollar's acting like, the confidence from the trade deals. Gold's acting like, the risk on. So safe haven buying is off. It's a pretty bullish market.
Silver's getting slugged. Ugh. Even Bitcoin and Ethereum are down.
I took the silver trade yesterday, and I'll have to wait for that to come back. Bought the call spread, so.
Well, you and me are in the same boat right now. Today's going to be a day of waiting. Typically, this time of the week, we like to look at the calendar for the week ahead. Next week is a pretty busy calendar. We're going to have to cut this into two, Thomas. Monday is quite light. When we get to the end of the show, you're going to see the calendar for the week ahead, and there are but two releases that are, I don't even think they're worthwhile, but they're on there, so we'll look at them. They're not from the U.S., which even further degrades their impact to any product that we're trading here outside of the British pound. All right, that said, Tuesday, 1, JOLTS openings. The state of the labor market has been in focus. We've seen job openings increase more than anticipated in recent months. Those are supposed to come back in. It's a precursor, of course, to the GDP report that we're going to get on Wednesday morning, which is just delightful, Thomas, because we'll have GDP Wednesday morning, and then we're going to have that Fed meeting Wednesday afternoon. I'm curious, because we have a market that's pricing in 2% chance of the Fed cutting rates in spite of whatever backslapping Powell and Trump engaged in yesterday at the Federal Reserve's Mariner Eccles building. Do you think that the GDP report has a chance to produce a bigger market reaction than the Fed later that day?
I think so, yeah, because, expectations are already that the Fed's not going to cut. But this GDP number could mean a lot to the September cut chances. So I think it will be more impactful.
It's a 2.5% reading. What's interesting about this is if you were looking at an expectation for, say, flat, 0%, and it surprises to the downside and comes in negative, on paper, you would have 2 consecutive quarters of contraction in headline GDP, which would suggest recession, right? We know that Enberg likes to date recessions here in the United States, and those take a while because they look at a few different methodologies. They blend GDP and GDI, and you don't get GDI, gross domestic income, until the second GDP release. So that data won't even be available until August. On the fiscal side of things, Thomas, when you get 2 consecutive quarters of contraction in GDP, automatically anything that's been sequestered is released to provide more aggregate demand back into the economy. So like we're now in this threshold where if you go into a Fed meeting where GDP misses substantially, let's say it's negative 0.1% for the sake of the conversation, now that Fed meeting looks like if they don't cut, they're ignoring the fact that recession's persisting at the top line. And it changes the complexion of what that September meeting looks like, where is the Fed running behind the curve all of a sudden? I don't think we're going to get that, though. The Atlanta Fed GDP now is 2.4%. The New York Fed is sitting around 1.8%. We'll call it 2% or so or even. A Fed that sees 2% real GDP, 4.1% unemployment rate, and inflation that's 2.7 to 2.9% on the headline. That's just not a Fed that's going to signal its able or willingness to cut rates anytime soon.
Yeah, and I mean, if it comes in stronger, then do you start getting the rate cuts for this year priced out, move to next year? It's I think this is going to be the biggest one of next week to watch.
That's not even flashing through my head. What if the GDP report is stronger? Right?
Yeah,
Powell
that's a possibility.
yesterday, Trump said that Powell told him that the economy is in very good shape. Trump was taking that as a compliment. That's Powell's way of saying that we don't need to cut rates.
Right.
Because if the economy is in good shape, you don't need to go to the doctor. Rate cuts are getting the ointment. You don't need ointment if you don't have a scratch. So Powell's saying, like, yes, Mr. President, the economy is performing better than expected. Congratulations. It's him saying, so we can't cut rates. There's no reason to cut rates. We're not giving you your rate cut. The second half of the week, Thomas, we're going to look at the personal income spending data from the U.S. We have the non-farm payrolls report as well. So what a week here in the macro world. JOLTS, GDP, Fed meeting. We're going to have jobless claims, and then we're going to have our non-farm payrolls report. So you now have the smattering of these three big ones, we'll call it, GDP, FOMC, NFP. Which one is the most important of the three to you?
I think I'd say GDP followed by the inflation.
The PCE figures?
Yeah.
So PCE figures are due out on Thursday. 0.3% month over month translates closer to a 3% plus annualized rate. So that's not going to be something the Fed wants to see. So I'm thinking next week we have a world where GDP could be stronger than expected. FOMC comes out saying that they can't cut yet. Inflation looks a little bit stickier and spending is a little bit better than what we've been witnessing. And that's consistent with the durable goods we saw today. You get a decent jobs report. Let's say it beats expectations again. I can imagine next weekend President Trump goes into that weekend a little bit unhappier. But today, everyone's happy around here. NASDAQ, S&P 500 going into the weekend trying to close at record highs. We're a little bit off there as the sessions moved into the afternoon in the NASDAQ. For the S&P, 6423, 1.25 points off of the all-time high. Thomas, we outlined a very silly Fibonacci extension a few days ago, where if we take the measured move, the June 22nd low up to the highs that we had here on July 15th, back down to the lows from the 16th, that does give you a measured move of 6628.79, which seems crazy, but the market seems to be following the 1998 analog, which here on the screen using SPY as the corollary, the yellow line is 1998, tracing it along the current path of this year with the candlesticks. If we're following the 1998 analog, as a lot of other market observers have pointed out, that still means this market has some legs left in it. And if we do have legs left in it and we're following that 98 analog, then getting up towards 66.30 is not as far-fetched as the technicals may be suggesting.
Yeah, this is big because I missed the move in 98.
Did you?
Yeah,
okay.
Yeah. I don't know what I was doing, but
yeah, I didn't catch the move in 1998 either. To be fair, that wasn't me. But 66.30 or so, that gives you an upside target. Volatility has come back up a little bit today, and we do have the meme stock craze still going on. I read a report from Goldman Sachs this morning that I shared here in our research chat about what happens after we have these type of events. Their report says, quote, sharp increases in speculative trading activity historically signal above average near-term equity returns, but poor medium-term prospects. When such trading surges occur, they typically bring slightly higher near-term volatility and often lead to eventual market drawdowns. This pattern has been especially pronounced during the recent period, with the magnitude of the current rise exceeding half the threshold that typically defines sharp increases. So sharp increases are defined as a 3-month change. A 3-month change in this indicator they have exceeding 15 points, or roughly going into the top 5% of observations since 1990. 3 months later, you're getting this juiced activity is what they want to point out, right? You get this big speculative activity burst. For up to a year, it probably means hot. In non-speculative years, 1 year later, the market's going to be higher 8% on average since 1995. If you have a speculative flurry, the market will be 12% higher. 24 months later, okay, Your unconditional return, non-speculative window is 16%. It's only 7% following a speculative increase. And then 3 years later, 24% gain on average for the market, only a 6% return for the S&P 500. So yeah, if we're seeing the meme stock activity now, we're seeing Ethereum rock sell for $300,000. Maybe we're a little early in thinking that the excesses have arrived, Thomas. And that 1998 analogy actually plays quite well because there's still some tank fuel left in the tank of this bull run. And volatility sitting down here, 30 cents off. It's a summer day. No reason to worry about anything. Let's keep running this market higher.
Yeah, I mean, that's a really interesting comparison to 98. I mean, the chart looks pretty similar. And that gives me the itch, you know?
I'm hoping to give no one the itch here. I had to scratch my own, though, in the NASDAQ again this week, because it does appear like we are trying to break out right now. The 4-hour time frame is not giving us the cleanest move, but I would posit that this pull up here, that pin bar up against the 21 period EMA on the 4-hour time frame, this Morningstar candlestick cluster, very well defined, doji, engulfing bar, and now we move up to a new high. Closing through the high of 23,441.75 on this 4-hour time frame would be, I think, accretive to further gains here, consistent with what we're seeing in the S&P 500. And then that gives you a measured upside target of 23,100 less, we'll call it 23,440, 340 points. You slap that on top, that gives you a target close to 23,780. That's why I'm laying into, and I currently have sitting the 23,700, 23,850 call spread on, because this market looks like it's ready to pop. And we do have tech earnings coming up still next week as well. Strong GDP, labor markets holding up, a Fed that wants to cut but can't give it to us yet. That's not bad. Can't hate it.
Yeah. Wednesday we have Microsoft and Meta, and then Thursday we have Apple and Amazon. So the tech is concentrated on Wednesday and Thursday. We got Visa United Health Group on Tuesday. Monday, not too much there.
Wednesday, 8:30 a.m. until Friday, 8:30 a.m. is going to be a heck of a 48-hour window for market participants. It's probably going to be the big last flurry of like that type of concentrated event risk that we have until after Labor Day. So if you are someone who likes the headlines that move the markets, next week is for you. The Russell hasn't given anything else up yet, Thomas. It's still riding the trend line, despite not being able to break out that failed attempt from 2 days ago. I see the April low. I see an attempt here near the June lows. I see our July low where this trend line was reconstituted to. And we're holding that here in today's session. Throughout the entirety of this move higher, this 21-day, the 1 month, and for what it's worth, we haven't defined this in a while. Why use the 21-day moving average? The average trading month has 20.7 days in it. So I'm going to round up to 21. And I use EMAs instead of SMAs because I prefer weighting near-term price action more than older price action. And SMA is simply, we'll call it 21 data points. Each has an equal weight. With an EMA, yesterday's price action matters more than the day before, which matters more than the day before that, yada, yada. So it's a little bit more responsive. So I'm looking for a responsive 1 month moving average, hence 21 EMA. All right, so we have this band between the 21 and the psychologically public popular 50-day moving average. It's been support. It's holding up. It's aligned neatly with the uptrend off the April lows. So bears, I have my own concerns about this volatility seasonal window that's coming up around the corner, with equities being in the 90th percentile already for CTAs. Those are those trend chasing folks. Maybe these are last gasps, and the last gasp is, we still have that with us. So being bearish, it's too early. I took a dive in Ilya's side of the pool, and it's cost me money, Mr. Westwater.
That happens, yeah. I mean, the last gasp could usually be the biggest part of the move too. So, I mean, why try to get short if the trend isn't broken yet?
Why try to get short if the trend isn't broken yet? It's a good point. We still have several hours ahead of us here, and anything can change going into the market close, right? A headline, a tweet, a trade deal. The U.S. and Japanese trade deal is apparently on the rocks. Both sides are differing in interpretation around it. So was a deal actually reached? Sector performance today, split. I wouldn't exactly call it a great day for breadth, considering that it's tech, discretionary. Tesla really helping lift the market. Overall, 4.19% gain in today's session, Thomas, after that earnings call. So dip buyers in Tesla, you, Dylan, people who have been selling put spreads, they continue to be rewarded. Are you looking to the tech companies next week, like your Microsoft, to help keep this rally going? I mean, part of me is hard pressed to see how Microsoft could be doing any better than it already is right now.
Yeah, I think they're important for sure. I mean, definitely given the concentration on Wednesday and Thursday between Apple, Microsoft, Amazon. I mean, obviously, if they all do good, that's going to help, the market move higher. Maybe we get one disappointment in the mix. I mean, earnings have been, I think Bloomberg said 83% of companies so far have beaten expectations. So, I mean, if we're extrapolating out of that, we'd expect, maybe one of these four to disappoint. But I think overall this could help, drive sentiment higher.
We have started to get the updates for this week. FactSet just actually put out their latest earnings insight report, which is free on their website. Just Google FactSet earnings insight. We are seeing right now, there we go. So now 34% of the companies in the S&P 500 have reported actual results for Q2 25 to date. 80% have reported actual EPS above estimates, which is above the 5-year average of 78%, as well as above the 10-year average of 75%. If 80% is the final number for the quarter, it will mark the largest percentage of S&P 500 companies reporting a positive EPS surprise for a quarter since Q3 2023, when it was 81%. In aggregate, companies are reporting earnings that are 6.1% above estimates, which is above the 5-year average of 9.1% and below the 10-year average of 6.9%. Historical averages reflect actual results from all S&P 500 companies, not the actual results from the percentage of companies that have reported through this point in time. So, I mean, I think what we're also seeing here, and I quoted this earlier this week, the blended earnings growth rate was at 5.6% at the end of last week. As a result of this week's earnings, it's been bumped up to 6.4% for the second quarter. So this week's earnings are actually really good. This is an improvement from when Tom, Tony, and I talked on Tuesday morning. We did our earnings, state of the earnings, as we made our way into the season when only 12% of companies had reported thus far. This is a tick up. So for folks who are watching their earnings as a guidepost, companies are beating. The margins are nice. The margins are actually probably the best part of this. S&P 500 earnings are producing margins, net profit margins above 12% for the 5th consecutive quarter. The last time that we saw profit margins above 12% for 5 consecutive quarters, Q2 21 through Q2 2022. That was a pretty good run for the stock market. If you were long from Q2 21 up until the start of Q2 22, right? I don't think we can count this market out yet.
Have equities ever sold off after such a robustly strong earnings season? I mean, I would think more oftentimes than not it rises after something as strong as this. But I think this also tells us, American companies are so far being able to navigate a volatile landscape. I mean, especially given trade restrictions and things like that. So, CEOs and stuff, they've been able to, keep the ship afloat through all this volatility in the landscape. And, I think that's a pretty positive sign.
Industrials here are going to be closing perhaps the week at a new all-time high. we can look to the banks, which will be closing at a new all-time high. Also head over to technology, which would be closing at an all-time high. Banks, industrials, technology. What about telecom? XTL's off a touch here, but telecom 2 days ago was closing at an all-time high. I mean, these are, and it's stone throws away still. These are the names that you see in bull markets leading the pack higher. And you could throw in an SMH in there if you'd like to, which, again, just a few days removed from a new all-time high and bouncing at its 1 month moving average, which has been very strong support April and May into June here, now again in July. We encroach upon it, we rally off of it. The trend is strong, even if there was a little bit of a pause here the past few sessions. So when you see this type of leadership is the point I'm getting at, as we typically bang on about. Volume's low, volatility is low, sector leadership is all consistent with bull market. I'm gonna really kick myself hard. I'm gonna just like bonk myself on the head, Thomas, if this market rips throughout August, and I let my seasonal scaries sully my summer session. I don't know why I alliterated like that, but we should probably go over to bonds. What say you?
Yeah, I mean, SMH, a little held back probably by the Intel drop. Intel, it looks like it's not a top 10, but it's up there near the top 10 for weighting in SMH. I think the market just wasn't happy with how the CEO projected, the business model going forward.
Do you see Jensen Huang's comments yesterday about compensation for NVIDIA employees?
No.
Oh, it was absolutely fantastic. He was being asked, is it difficult to see that there are folks who are getting these mega contracts, these AI deals, right? They're being paid like professional athletes, $200 million a year from Meta, $250 million a year, something like that. And Jensen had two comments, one of which was more pragmatic, and that was, well, if you think about it, if you're willing to buy an AI startup company, one of these LLM labs, for $100 billion, and there's 100 people that work there, what you're really buying is their brain to solve this problem. So why not give that person $1 billion over 5 years? Okay, that's kind of smart. But when asked, is it difficult to see that other layers are doing exceedingly well? And Jensen Huang said, no, I've made more billionaires on my management team than any other CEO ever. Which is like, okay, that's true. Also, yeah, the people that work for NVIDIA who've been with you from the early days, they're well taken care of. They're doing fine. And I thought that was a pretty smart comment.
Yeah, I'm sure they're well taken care of.
So this Treasury relief continues. I can't help but notice today feels like a Buy America kind of session. Stocks are up, bonds are up, the dollar's up, and gold is down. It's on the other side of all these trade deals. We've seen the long bond here try to carve out a little bit of a higher low right around 113. You've been looking long bonds. How do you feel about the long end of the curve going into the storm of macro abbreviations, FOMC, NFP, GDP next week?
Yeah, I think if the data, suggests the economy is still really strong, there's two things here that are at play. I mean, how it impacts the Fed rate cuts. I mean, if the Fed cuts rates, bond prices go up, but a strong economy could dissuade them from cutting rates, but it also, inspires confidence in the confidence for the U.S. trade, given that, that has kind of fractured recently with fiscal concerns and things like that. So it's kind of like there's two factors that are kind of working against each other here. But I think a strong American economy at this point and trade deals coming in is probably going to push bonds a bit higher by just inspiring some confidence back into the U.S. trade.
20.1 IVR here in ZB. There's a little bit of technical momentum building. We got that MACD buy signal yesterday. Nice little hammer candle there up against that 1 month average. We're not quite turning through the 50 here, but this is a promising little set of price action that, if we're thinking about building around a move off of the mid 112s, you can make the case that there is a bit of an uptrend in play right now on a short-term basis. So for folks like you who are leaning directionally long, this actually feels a bit better, healthier of a chart than it has in some time, right? We break the downtrend, we poke up, we're carving out a higher low now. That's a positive development. I ultimately think bonds and notes are going to stay range bound for the foreseeable future and just churn. So we get to move back up into 115 or so, probably lighten the load if you're long deltas. Similarly in notes, right? As we churn our way through the midpoint of the trading range that we've been in for the past, the year. You get up towards 111.5. It's a good place to reassess any short iron condors, short strangles that may have been working for the past few weeks. I think that's quite frankly the best thing to do. So directionally neutral, leaning net long when ZN dips below 110.5, leaning long ZB when it dips below 113, but directionally neutral by and large.
Yeah, I'm waiting for like another day or two of moving higher, and then I'm going to take these positions off, and then maybe go into more of a neutral strategy.
There's also, could we just say, let's assume that this is a chart of real consolidation. The triangle is indeed the correct interpretation of the price action. That could mean winnowing here for the next few weeks into the end of August. So I don't think we should get really too bold or bared up right now, but directionally neutral with that topside kicker. Here for me in ZB, 28 days to expiration. The call spread side of this that was purchased a while out. Unless something terrible happens, I can't see that working out. So I'm going to take a small loss there. The directionally neutral in ZB itself, though, why these strikes? Well, in part, think about where the chart is. We hit a low in April, or rather May, at 109 and 20 ticks. This particular trade would mean we're really going to have to see something bad happen again to the degree that we did in April and May. Is it possible? Yeah. But I'm going to take the underside of that now. It's working. No convexity, but it's working.
Yeah. I mean, going over to like, do you have any view on Japanese bonds right now after that election last week? I mean, there's both parties seem like they want to increase spending now.
Japanese bonds are the most interesting aspect of this whole global bond saga, I think, because Japanese liquidity underpins so much of the global market. I would argue, and I think a lot of other people would argue as well, that were it not for Japanese yield curve control throughout the 2010s, global interest rates would have been higher otherwise, in part because global investors have the ability to shop for their products anywhere. And if I can go out and issue debt in Japan at very low rates with a currency that's depreciating, it behooves me as a foreign country to have low rates as well to stay competitive. And because of that choice out there, because Japan is anchoring the global bond market, treasuries are trading 50 to 100 basis points lower than they would have otherwise been in the 2010s. Same thing for European yields, even though you have your Eurozone debt crisis. But let's assume like that all that's true. Now the Japanese market is unanchored. There's no more yield curve control. And it's blowing out at the long end because of fiscal concerns. They have a terrible demographic situation. The population's older than it is young. More and more money is being spent to catering to that elder population, and it's forcing governments to push money away from the younger side of the equation. And that's why this tax cut is so popular, because who consumes things in Japan? It's going to be your younger and middle-aged folk, not so much your older folk. And so they want relief. They want to be able to. It's a whole problem. So yeah, I think that keeping an eye on Japanese bonds with respect to treasuries, it makes a great deal of sense. It's a big problem for the yen, which we're going to get to in a little bit. Maybe it makes U.S. treasuries relatively more appealing. But one thing that we have not touched on for next week, which does not make its way into our calendar, is the Treasury's quarterly refinancing announcement. the QRA. That is also next week, Thomas. And there are rumors out there that Treasury Secretary Scott Bessent is going to pull a page out of his predecessor's playbook and rebalance debt issuance more towards T-bills and away from notes and bonds. The idea there being that a new Fed chair will ultimately lower rates in the future, and that will bring down longer end yields. So why issue that longer end debt now when those long end rates are going to be lower in the future? Okay, so we just ride this out with bills for the next 8 to 9 months. Yellen did this a whole bunch. And maybe that creates some scarcity at the long end of the curve. It's not a primary reason for why I'm trading long ZN and ZB with a kicker, right? Outside of the Iron Condor. But it does stick in the back of my mind that supply moving forward in notes and bonds could actually be more meaningful, driving and providing a support for prices here.
Yeah, that makes sense. I mean, it's the QRA is always, I think the last one was pretty unimpactful, but this one's going to be a little more so.
Yeah, the last Treasury QRA announcement comes in the midst of all the tariff talk, so it's a different can of worms here. Okay, let's go to the worst part of the market for us today. The metals, at least for me. I don't like it when gold takes it on the chin, nor when silver takes it on the chin. And when they both take it on the chin, it hurts me especially so. This is an increasingly ugly chart, Thomas. I mean, folks at home, if you're listening to this, what does this tell you if you look at things technically? The uptrend that's defined us for this entire year, really going back to the lows we had post-FOMC in December of 2024, that's being challenged in a very meaningful way. Is it time to throw in the towel on our aspirations of a golden future, Mr. Westwater?
Yeah, I think I mentioned yesterday I'm going to be looking for a drop here coming up, and 3,200 might be the place I'm looking to reestablish some long exposure.
Why 3,200 in particular?
Just that swing low from May. I think that could give us some support. I think ultimately a pullback's going to be temporary. It's going to come amid a risk-on tone like we're seeing right now, trade deals being developed, but then the focus will ultimately shift towards, all right, rates are likely going to be coming down, especially next year with a new Fed chair. So then, the mid to long-term view overshadows any short-term concerns for a pullback.
Well, with the 50-day here, it's coinciding neatly with the uptrend from the December, April, June, and what may be the July swing low. As our friend Ilya might say, if you really think about technical analysis, supply and demand doesn't exist on a diagonal. It's more of a horizontal thing. So in accordance with that, you talk about that late June swing low, 3307.40. That's a first stop, but 3,200 is really the place of your interest, and that comes in here, 3208. So if we were to just step our way down here, maybe even a little bit higher, if we could just point to some of the highs we had here in early April, you could see how there could be places the market falls, bounces, falls, before finally settling in. Comments had come in, is this a quadruple top in gold? Quadruple tops are not things. You have double tops, triple tops, quadruple tops. We don't really call them something like that in technical analysis, or quadruple bottom. Maybe they've invented a new term, Thomas. I'm not aware of it. I would just treat this as a triangle, a symmetrical triangle that may be breaking down. And could that call for a return to the base? Yeah, but I wouldn't be playing for it right off the bat. My final point of observation here, as we break down, volatility is trending lower. And so necessarily, if we are believers in the idea that gold prices and gold volatility are contemporaneously related, volatility up, prices up, volatility down, prices down, we have to acknowledge that previous pullbacks in gold volatility have been both precursors and contemporaneous indicators for weakness in price. So the fact that vol is falling out again today, we've seen readings in the teens as we're threatening the uptrend here. it does make me squirm a little bit. I'm not ready to abandon the longs, but 33.90, and we got to say goodbye.
Yeah. I mean, I'm not going to reestablish any longs until if we substantially hold this, uptrend, get back above the 1 month moving average, maybe get long again there. But for right now, I'm waiting for the pullback. I think, it could take anywhere from months to a couple weeks to develop, maybe into late August, like you mentioned. But yeah, I'm going to wait on gold right now, especially being long silver. So I don't want to double up on assets that are somewhat correlated.
Silver is very fun today. I'm a masochist. You can tell because I'm wearing a Knicks t-shirt. Being long here is not great, but rolling out a few days ago is saving a lot of pain, which I think one of the indications, when should you roll a position? 2 sessions ago, we had silver prices that were sitting up 0.5% at one point of the day, and I noticed that the position wasn't gaining much ground. Right, 0.5% gain in silver, I should be up several hundreds of dollars, not up 75 to $100. So I got out, I rolled out. There's obviously some pain on the board here today. Is the uptrend done? Is it time to throw in the towel on this latest iterative, silver trade, where it's basically just, okay, roll the position, buy something that's slightly out of the money, give yourself enough time. Look, I'm not going anywhere. We talked about this, right? The 62 versus the 90, what's now 95 days to expiration. If you go out 62 days, the long 42.43, which is basically the 1 standard deviation move. Now, today, it's an $835 potential max loss. If you go out to 95 days, 42.43, where I'm situated, it's currently a $1,020 max loss. So it's a little bit different than a few days ago, granted, when it was about $120 separation. But for an extra 33 days, is that difference in max loss an extra $100 or $200 worth it? In my view, it was. So I'm going to stick with this because 95 days is a very long time, well beyond the typical tasty window. Below 37.70, that's where I reassess and say, you know what, this is a top. We have to wait for a deeper flush. Maybe that's 35.36. We'll call it 35.75 to 36, where we've seen resistance and support otherwise. But for now, time is our friend. I'm going to stick with this because it's not 5 days to expiry, it's 95 days to expiry.
Yeah, I'm in the 95 too, and that's a reason why I'm not sweating this position today. There's plenty of time, and that's one of the reasons why I joined you on the 95. You got, time could be protective in a way when you go a little further out.
This is one of the charts I've seen people sharing on Twitter that silver is about to crash because it's a rising bearish wedge. Maybe, maybe not, but it would be an uptrend break either way. So one level at a time, 37.70, 36, and play it there. By the way, 37.70 down to 36, that's not a small move. You're talking about a 5% pullback in silver prices. That's why I would want to step away. I don't want to deal with a 5% pullback in silver prices given the size of this particular contract. Thomas, talk to me about copper. You've been dabbling in this on and off. You were long, you got out, it ran up, then came back in. Do you have FOMO? Are you ready to jump in again? Are you ready to call a top here? It's a 53.9 IVR, so we can't look too far away from it.
Yeah, I mean, I caught a good, a good chunk of the move. Not all of it. Could have definitely taken more out, but I think when I got out, it was a fine spot to get out there around 5.7. I think I bought around like 5.5, somewhere there. So I don't know. Yeah, this is, we hit a new high from the previous one where it was made on a 1-day big surge. And now we are coming back, near the 5.7 level where, you had some intraday selling happening. I don't know. What I'd like to see is kind of maybe a new base established around 5.7, maybe hold that 1 month moving average, and then maybe get long again. if we broke below that 1 month, then we could potentially see that move from earlier this month getting unwound. But yeah, I'm going to wait for now. I'm not taking a position. Going to wait and see where we end up.
The highs here, not the immediate high when the tariffs were announced on July 8th, but the highs that we had on that 4-hour time frame shortly thereafter, overnight in Asia, those come up closer to 573. When we look at the chart here since July 23rd, we've attempted a pullback to about 573, and we couldn't quite get through there. And the most recent pullback here over the past, say, 8 hours encroached 573, but not yet. I'm not in here, but if we see 573 breached, there is a very legitimate case to be made that we have a workable, tradable top here in copper prices. And the margins are a lot more reasonable now than they were just 2 or 3 weeks ago, where this position would have cost 3-4 times as much to put on. A 59% probability of profit, short the 595, long the 6, a short call spread at 62 days to expiration yields close to a 1-to-1 risk to reward ratio underneath it, risking a little bit more than you're looking to make. And the max profit's pretty close in line to the buying power. Obviously, at this level, at 578, it's a different pricing than what we'd see if we got down to 573. But if we were to break through 573, that's 5 more cents away. So it would be more equivalent in pricing to doing something like this: short the 605 or the 6 and long the 605 on your short call spread. That's a 62% probability of profit. That's still a decent risk to reward at 525, 725. So copper finally is back in the arena where it's tradable. It's a 53.9 IVR. I think this is watch list for next week, Thomas. Today, we probably don't break down and get the opportunity to make this trade. But if it were to happen, there's something here to trade around 6. I don't think we're going to 75 or 100% tariffs. And I think there's an understated chance that maybe Trump reins those back in, given how he's getting deals on everything else. And copper is one of those goods where we consume way more than we produce, and opening up new mines takes years and years and years. So this is not a problem that will be solved through executive fiat anytime soon. Am I off my rocker here?
I mean, that's the big risk, right? Is if Trump backtracks on these copper tariffs, what are you going to see then? Are you going to see prices drop all the way back down to 5? I mean, I would expect some considerable weakness. So that's a risk if you're trying to get long this trade, is Trump could just tweet out any minute that, copper tariffs are off.
Sorry, headline just flashed in front of my eyes. That not market related. Energy mostly weaker. Well, it's market related, but not for this show. Crude oil is where we're at, Thomas. And it's a thing of beauty. Why is that? Because we are basically pinned at the midpoint of our trading range post-Liberation Day after the Israel-Iran 12-day war. This is exactly what we want to see. This is a broken record for the past week, or 2 actually at this point, where we've just been saying, we're stuck to the 1 month, which is right near the midpoint. And so short iron condor is the way to go, because outside of geopolitical risk, oil tends to just churn. It's churning. Say, la vie, this is what we want. Adjust course or keep on plodding forward?
Yeah, I have an order in right now to get into an iron condor at the 54 days at 60.5 and 68. I think that's a pretty good range we stay in between. It hasn't filled yet, but it's you're risking 1 to make 1, costing you 193. So it's not a bad trade at all. I don't think crude prices are really going anywhere quick anytime soon. We've had some headlines. I mean, maybe the GDP report, you get a really strong GDP report, but I don't know. We've seen like the copper or the oil fuel suspension restrictions for Russia. That didn't really move the market too much. It's just, it's holding this range really well. So I think it's going to continue to do that at least through the next few weeks.
Keeping in mind, what would a short iron condor position look like at 54 days? It's the closest to 45 right now. 72, 74 on the short call spread side, 55, 57 on the short put spread side. Where does that put you on the charts? It would basically mean that we'd have to clear out the lows that we had in April or break through the Iran-Israel war highs for this trade to not work out in some form or function. I think that's a pretty good bet to take right now still. I don't see us, unless the Israel-Iran war pops off. Did we go from 64 up to 74 in one day? We had a little bit of time to clear the deck. It wouldn't be a comfortable position, probably at a loss if volatility expanded to the degree that it did there back in mid-June. But you would have at least an opportunity to make a decision. Do I want to stick with this, or do I need to back off and find some exit liquidity? It's one of the reasons why I like it. It seems so reasonable right now, given the grand scope of things. And it's still 21.4 IVR. It's not the best trade, 4-to-1 risk to reward, but you got to take what the market gives you. And I'm going to approach it this way too. Still, we got time. 54 days. So much time.
Yeah, and 21's a lot better than where we've been at some in points recently.
Yeah. Natural gas has been a source of love and frustration for both you and me. How are you feeling about natural gas today as it tried to retake that low here from July 9th, 3.193, and today, after hitting 3.2, we immediately reversed?
Yeah, I'm not feeling the greatest about it. We are now negative on the day. We had a little bit of a momentum earlier, but after a sell-off like this, you do want to see in natty gas a more pronounced and quick, acute retracement. So, as long as we're holding above 3, I'm going to keep. I have a short put spread on at 3. It's 62 days out, so plenty of time there. The position for me is practically unchanged since I put it on a few days ago. On the other side, I do have a straight long on the micro NG contract, so MNG. That is not really doing anything for me yet. I'm going to hold it into next week, and I'm hoping for is these weather models for especially the Northeast have been really tepid. So I'm hoping that, they have bottomed out in a way, and we get some heat coming back into the Northeast for the forecast. And with a short market like this, I think that could definitely, if that happened, I think we could see, that big retracement happen next week. So going to keep it on with the assumption or the hope that these weather models turn at least a little more bullish, and then, get these positions into profitability, take them off perhaps, and reassess from there.
Yeah, I hear you. I hope you don't get your warm weather though, because it's what's the heat index here right now in New York? I think it was 104 earlier.
And it's sticky out there.
Yeah, 106 right now. Feels like 106. That's gross. Yeah, energy bills last month were wild. It's like, how come energy bills are twice as much as they were? Oh, right. Okay. Yeah.
Yeah.
We shut down our nuclear power plant in the area, and prices have gone up since then. Great planning, folks.
Yeah,
so we have natural gas.
One good thing about Illinois, Exelon has fought tooth and nail to keep their nuclear power plants online in Illinois. Illinois is the top producer of nuclear energy in the country.
It's funny you bring up Exelon.
Right.
Yeah, and more. I just saw that there's a Palisades plant maybe coming online in Western Michigan now. Was approved today. Maybe I misread the headline, but something from Secretary of the Energy, Chris Wright, was out regarding the Palisades nuclear operations. Exelon is a company that you and I have talked about for a few months now, because it was able to catch that, big wave up in the AI run in the first part of this year. And it's holding above 42. So we had the 42, 47 call spreads on previously. This thing looks like it has formed a beautiful base and is getting ready to turn higher again. Not quite futures, but something to think about. Maybe I need to get back in right now, Thomas. It's been a nice little period of basing for the past few weeks. All right, so we're moving off of energy, and we're going to turn our attention to the dollar here, where our king dollar is rallying a bit more. Donald Trump said this morning that he prefers a stronger currency, but he understands why people like a weaker one, thinking about manufacturing and generally speaking sales. S&P 500 companies, they do bill in US dollars overseas. So if your clients now have a stronger currency, they can buy more of your products. It's a nice thing sometimes.
Yeah, but if you're taking a vacation, it's not good if you're a vacationer.
No, stay local this year. Go down to Florida or the Ozarks if you're in the Midwest, Lake Michigan. The yen here, what a fascinating turn of events this past week has been. Earlier this week, U.S. yields were going up and the dollar was weakening. Today, U.S. yields are going down and the dollar is strengthening. So fiscal fraud and fright, that's no longer in the dollar's corner. It's back over to the yen following its little baby post-election bounce that caused some indigestion here. And the empty bottle of Tums is the evidence I provide as Exhibit A. But you talked yesterday. Nice little observation here. 1, 2, 3 days in a row where we try to get back over that 1 month average hump, and we couldn't do it. Not on a closing basis. We've now since turned lower, and we've basically erased all of the election gains. Should I have the confidence to be leaning long puts here in 6J still?
After we talked yesterday, I tried to get on a long put spread for 6J, and then I had to leave. So I took the order off. It didn't fill. And of course, today you come in, you see it's lower. I think it still has some strength to take out here, maybe retest those the lows from earlier this month at least. But the confidence in the US dollar, there's a lot of risk here because number one, Japan, I guess you could say political turbulence there. Number two, we could get some numbers for the U.S. that restore some of this confidence for the U.S. dollar trade next week. So, I still like a short here. But I think next week, if we come down to those levels, that's going to be the make or break. I think if we breach the July low, definitely more weakness ahead.
People should check out the Financial Times reporting on the U.S.-Japan trade deal because it seems to be unwinding very quickly. Given some of the news that has come out, we don't have time to cover that here, but it's worth the read. Also, why is it worth the read, Thomas? Because it means when we get the actual trade deal, it's a new headline to pump the market in the future. So, isn't that the game? Dangle out the trade deal, market goes up. No, it's not official yet. Market comes in a little bit, 2 steps forward, 1 step back. Keep throwing out the breadcrumbs, keep giving reason for people to chase things higher. Calendar for Monday. Is there a calendar on Monday? If these 2 items were released and no one was there to see the release, would anyone know that they happened? I don't think you have much to pay attention to on that particular docket, as it were. In terms of the Treasury auction schedule for next week, we are in the middle of a Federal Reserve week, which typically means it's not going to be that exciting. And sure enough, 2-year floating rate notes on Tuesday and 7-year notes on Tuesday as well. The following week, you're going to have 3 10s and 30s again. That's when it's noteworthy. Tuesday, Wednesday, Thursday, August 5th, 6th, and 7th, respectively. But now the calendar next week, it's JOLTS Tuesday, it's GDP and FOMC Wednesday, PCE and personal income Thursday, non-farm payrolls Friday. All of the earnings, sincerely, Thomas, Wednesday morning, 8:30 Eastern until Friday morning, 8:30 Eastern. It's going to be the most 2 exciting days that we'll have in the market for event news, earnings, data until after Labor Day. So get it while the getting's good. Make hay while the sun shines next week, folks. You and I are done here today, though, which is excellent news because the week of Westwater has concluded, and I want to thank you for filling in for both Jamal and Ilya on so many different programs. I'm not going to be back later today, but I'm going to be back for First Call on Sunday with Tom. Tom and I are doing those now together on Sundays. So please catch me there. With that said, I hope everyone has a great weekend. So Thomas, you and I are done, but Tasty Live programming continues next because Dr. Jim Schultz is in the house. He's here with From Theory to Practice. Get a coffee, grab some lunch, tune in. See you soon.
See you, everyone.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies? Excuse me? I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears?
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
This is From Theory to Practice to LMNT sponsorships. Welcome to the show. We are going with the absolute power move today, going right to the top of the totem pole with the citrus today because, hey, man, primetime players got to make primetime plays. We went right to number 1 today. The citrus is the unquestioned number 1 in the LMNT can lineup. And so go get yours today so I can work on this sponsorship. I actually have no affiliation with the company whatsoever, but hopefully that will change here in the near future. So welcome to the show. You've only got 70 or 72 more minutes of this, so it'll be over before you know it. So don't even worry. If you're watching over on the Tasty Live Network, then you should bounce on over to YouTube, because if it is real time and if it is right around on Friday, July 25th, 2 o'clock Eastern. You can hop in the chat. You can communicate with your brethren who are also watching the program. And you can, of course, celebrate if you are a bull for the 57th day in a row and commiserate if you are a bear, because it is another all-time high heading into the most important week of the markets in financial global market history. So, Josh, bring us into the chat, or bring us into the market, I should say. We're already in the chat. So if you have a question for me, drop it in the chat box, because the earlier you get it in the chat box, the higher the delta, the higher the likelihood that we'll get to the question. And we're extra long today. We're all the way to 3:15 Eastern, 2:15 Central. So if you have a question for me, today would be a great day to pop it in the chat, because I feel like even with the VIX at 14 or whatever, the VIX at whatever it's at 13, 11, it's all the same, right? Even with volatility suppressed, I feel like our expected move on number of questions that we get to, it's expanding. I feel like instead of like 1.2 to 1.4, it might be 1.8 to 2.1. So if you get it inside the chat early, there's a chance that we may actually get to it. All right, so even the S&Ps up 23.5. Risk-free asset, also known as the NASDAQ futures, which is technically an extremely high-risk product. But, man, practically on the streets, man, it's about as risk-free as they come. NASDAQ up 56 today, but you can lose a ton of money in the NASDAQ, just to be very clear. For people that are brand new to the show, I get emailed about that all the time. And, so my official response is it's an extremely high-risk product. But we all know the truth. The boomers up 175 on the day, and then the Russell 2000 futures index up 4 on the day. So the Russell's lagging behind a little bit. Actually, it's kind of lagging behind a lot of it. I mean, the Russell's really struggled. We'll take a look at that here in a second. But you've got bonds up, you've got notes up, oil's down a little bit, UB40's up a little bit. The shifties, man, the shifties. Guys, check on your local neighborhood shifty, because it's not been great for the shifties out there. Down $37 today. Another kind of kick in the pants for the gold bugs and the gold bros out there. Silver, I think, is also getting smashed. Yeah, silver is actually getting hurt a lot more, which that's very common. I mean, silver is going to be the bigger mover of the two. And so on up days, it typically goes up higher. On down days, it typically goes down lower. That's a pretty standard run-of-the-mill relationship that we would expect to hold on most days. Of course, it's a living and breathing thing. It's not always going to be the case. But generally speaking, silver is more volatile than gold. Just like generally speaking, the Russell is more volatile than, even the NASDAQ. And I mean, the Russell is more volatile than the S&P 500. I mean, that's usually the way that it is, but of course it's not like that every single day. And so you've got the British pound is down, got the euro is down, got the volatility futures down 13 cents. So not too much of a sell-off in volatility for the market, obviously printing another all-time high. I mean, this is another all-time high. I mean, it may not be the tippity-top tick today, for a little alliteration from all of my English majors that might be watching the program. I know we typically rope in a ton of English majors. That's obviously going to be the demographic that we are targeting here on this very program with, gimmies and gotchas and, neverthelesses and things like that, and irregardlesses, of course. But the volatility being down 13 cents, volatility in the spot market is down 23 cents. Man, look at this, guys. It's brutal. The VIX is 1517. That's 15.17. If I look at a chart of the VIX, and I want to come back to look at the Russell here in a second, man, that is bad. So did it get? No, it didn't get under 15. So it actually bottomed out at 15 even. So we did not see, the 14.99 print, which we actually saw yesterday. You can see right here, the low on the VIX yesterday was 14.95. And so, again, guys, if I'm ever complaining about the VIX at 23, somebody come and get me. If I'm ever complaining about the VIX at 29, like, somebody come and get me, because this is some brutal stuff. And not only is the VIX at, 14, 15, whatever, but, man, there hasn't been a lot of back and forth movement. Because remember, the VIX, I mean, it obviously measures back and forth movement to some degree, but it's really just kind of measuring the size of the range. It's not technically measuring the velocity of the moves and kind of the, the number of back and forths within the day. Although my own personal, so here's a little something outside of a textbook. Here's a little something outside of an equation. My own personal take is that even when the VIX is higher, and basically choose any number above 15 today with the VIX at 15. So 17, 19, 25, whatever. Even though that is really just telling you that the range has expanded, it's not necessarily giving you any information, at least not in the original VIX calculation. Now, maybe there's been an updated one. Maybe the VIX interns have been hard at work. I'm not sure. I'm not necessarily aware of any updated VIX calculation. I think it's been the same that it's been for the last 80, 90, 95 years or so. And so I actually also think, though, there's a lot more back and forth even within the range. And so I think that because volatility is heightened and the search for equilibrium, the search for what the fair value should be in the markets is kind of on high alert, that you also end up with a lot more back and forth. Now, maybe that's obvious to you, and maybe you're like, well, that's obviously going to be the case when, volatility is higher. But again, that's not technically what the VIX is measuring. It's just measuring, the implied volatility, the range of the stock over the course of the next, 30 days. When you're talking about the VIX, you're talking about S&P 500 ranges over the next 30 days. And so, but I also think there's a lot more back and forth. And so, I guess I'm not super surprised that there hasn't been as much back and forth, but sometimes we actually do get rewarded, if you will, with the VIX at 15, the VIX at 16, the VIX at 13 and a half, whatever. But there's also still some back and forth. There's also still some opportunities to get in, get out, sell some premium, do some scalps, whatever you might be doing. And, you can maybe potentially make a couple of beans. But nevertheless, here we are with the VIX at just over 15. So, all right, so let's go into – let me take a closer look because we got so much time today, guys, so much time. And there's not too much to do. Like, again, next week, most important week in global financial market history. But today, today is nothing. Like, today is like there's just nothing to do. We've got a couple things to talk about, with Google and maybe GDXJ and whatever. But basically, by and large across the board, it's mostly a nothing burger that's happening inside of what we've got going on. So, but if we go to E-mini S&Ps, and I bring up the, we actually are at the tippity top. Look at that. Look at that. Tippity top. Tippity top of the ES is 28.75. We are at 26 and a quarter. And so we are 2.5 points away from all-time highs. And again, you can only find this on the Tasty Network. Like, you are only able to find this live in real time right here. So aren't you glad you joined the program today? Like, aren't you glad that you're part of the team today? Because you can't find this anywhere else. Like, this is going to be obviously exclusive to Tasty Nation. And so even the S&P is 2 points off the tippity top. The NASDAQ, I think, is maybe a little further off the tippity top. So the NASDAQ is at 435, and the tippity top is 476. Ah, man, the citrus is so good. Like, it's not close, guys. It is not close. So if you are not an LMNT consumer, if you value things like health and things like longevity, right, and things like electrolytes, right, I would give it a look. I would absolutely give it a look. Citrus is number one. Like, I saw somebody in the chat yesterday, by the way, I scanned it after the show, and I forgot that there was actually a fifth flavor. Like, I've forgotten, and somebody mentioned it in the show as it being one of their favorite flavors, and I was like, oh, man, make me barf. Mango chili? It's still really good because it's LMNT, but it is clearly number 5. Like, it is clearly your number 5 starter that you just called out from AAA because you got nobody else that can throw that day. Like, that's your mango chili or mango lime or whatever. I think it's mango chili. Like, who ever thought mangoes and chilies together should ever be combined in anything? A food, a drink, whatever it might be, those two things should remain separate. But man, LMNT, they went for it, and I think they missed the mark on that one. But yeah, citrus is number one. If you're going to give it a crack, go citrus or go black cherry lime. And I think you'll be very happy. But the high on NASDAQ is 76, so you're 30, 35 points off the tippity top. And so it's basically right there. But look at the Russell, though. The Russell is not anywhere near the tippity top, if I'm not mistaken. So let me go into, how do I do this again? I think it's $/RTY to get me the continuous contract. Look at that, man. It's like a breath of fresh air. It's like a citrus or a black cherry lime. It is the antonym to mango chili. So if I go to, I think it happened. Did it not happen around the election? I think it did, right? So that would be, if I go back, just 2 years, it should give me what I'm looking for. See, there you go. Yeah. Look at that. Right after the election. Yeah, that was right. So you're looking at right around Thanksgiving, it actually topped. So yeah. So your tippity top on the Russell is 24.77. So, I mean, you want to talk about laggards. You want to talk about something, just kind of clearly falling behind. You've got the Russell 2000 index is still 200 points. That's 10% off of the highs. Like, that's really surprising in an environment that, it's just shrugging off everything. Interest rates are eventually going to be cut. And like, oh my gosh, it was so comical. Oh man, to see the Trump Powell thing yesterday, I didn't even watch the whole clip, but I did happen to see like maybe 10 or 15 seconds of it. Oh my gosh, it was so, if you haven't seen this, you got to watch this. It's just so funny because Trump pulls out this thing about like how much the building cost or whatever. And I can't remember what it was $2.5 billion or $3 billion, whatever. It doesn't matter. But he was talking about the number. And as he was citing the number, Powell's just standing there like shaking his head like that's not right. Like that's not true at all. Like that's literally factually incorrect. And I'm dying laughing. I'm like, this is so funny because this is like classic Trump, man. This is so good. And so anyway, it was really funny. And it doesn't even matter what side of the aisle you might be on, left, right, or center, or neither. None of the above. I just think it was a very comical exchange between Trump and Powell at the Federal Reserve yesterday. And but anyway, I digress. And so we're still 200 points off the tippity top for the Russell. So lots of work to do there on the small caps. I'm a little bit surprised though because again, interest rates are going to get cut at some point. Whether it's I think the probability of a cut next week is 0%. I think it's quite literally 0%. I think September is when the first cut is projected at this point. And so obviously all eyes are on Powell's language. All eyes are on Powell's tie color, of course. And so we just have to kind of wait and see. But anyway, I digress. So I'm digressing off of digressions at this point, but that's good. It's a Friday show. It's an extra long Friday show with Citrus LMNT. I mean, this is it, man. This is shooting from strength, as they say. And so, all right, let's go in here, though. There's a couple things I want to do, and then maybe we'll get to some extra questions today, man. I see you guys. In the chat, man. Look at you guys. I see Brian Dowdy's in the house, Tomas in the house, Sam L, Margin Walker, Sergio in the house, Theta Trader in the house. Man, Theta Trader, I appreciate you, my friend. Ash in the house, Emmett Morrison in the house, man. Ed Bickford in the house. Margin Walker back in the house, man. Look at you guys. Fala's in the house, man. Donna Ski in the house. T-Port in the house. Man, look at you guys. I'm going to get to as many of you guys as I can. And I feel like we haven't gotten to as many as I would have liked the last couple of days. So maybe today, since it's kind of slow, let's try to get to some more of y'all. I think maybe we'll do that. But the two things I do want to talk about here are, let's talk about Google for just a brief second. Because, I mean, this trade is working out really nicely now because Google is up another $1 today, which is perfect. It's just kind of existing. It's just kind of, remaining solvent. That's pretty much all we need. Just kind of stay where you are. Don't really kind of rock the boat in either direction and just kind of take it one day at a time. And so with Google at 193, the strikes here are 170 and 220, which are great. We sold the strangle for 472. It's currently marking at 285. You could make a case, and it would be a pretty strong case at that. Take it off, Jim. Take it off. You're up almost $2 on the trade. I'm not going to do that because of two reasons. Number one, we're in September in this strategy. We're not in August, which would make a very different case, of course, because that would be 21 days to go. That's the situation we're in with GDXJ, which we'll talk about here in a couple of minutes. We're in September. There's still lots of time to go. I feel like we've gotten a nice little kickstart into a really, really nice trade. And I talked about this. It was maybe a few days ago, maybe a week ago now. When volatility is low and you're looking for things to do, I kind of think that adds a little bit more support to going for your original profit targets on your existing positions, as opposed to taking them off early when they perform extremely well. I mean, Google, it's only been 2 days. We're already up, 40% of max profit? I mean, you could make the case that, strategically I should take it off. You could even make the case for all the, Tom Sosnoff groupies that might be watching. Hey, the optimal move is to take it off. I would counter with there really is no optimal in the world of trading. It's all gimmies and gotchas, man. It's very difficult to find the point of true optimization, right? Irrespective or even irregardless for my English majors that might be watching the show of what Tom might say. Hey, it's 2025, man. You can do whatever you want. 2 + 2 can be 4. It can be 5. It's whatever you need it to be. There is no point of optimization in the world of trading, in my humble opinion. I think there's better and there's worse, but usually it's gimmies and gotchas. And usually it's, all right, I really like that gimme and I'm willing to take on that gotcha. And so for me right here, what are the gimmies and gotchas of this specific position? Well, I think that Obviously, if I leave this trade on and things get crazy next week, which again, this is the most important week in financial market history, things could get a little crazy. If that happens, then, all of a sudden this could, the green could go away. It could start bleeding red and things like that. That's trading. That's the risk we always take. But the gimme is, man, this is now a nice trade. I've gotten through the binary event. I've gotten a little bit of volatility crush. We're moving a little further down the decay curve. It's only another 10% away from, my profit target. And it's like, man, as a premium seller that's trading high volatility, that's trading high probability, again, remember, what are we signing up for? What are we signing up for? Modest winners, giving our losers duration. That's the basic idea. Okay, let's go one step further. What does that actually mean from like a P&L, like X's and O's, like numbers at the end of the day standpoint? Well, it means A, your winners are going to naturally be smaller than your losers, just naturally. Even if you stick to all your profit targets, your winners are going to be smaller than your losers. Like, we're not a cut your losers tight, let your winners run type of, trading mantra or philosophy. We're actually the polar opposite of that. And so when you sign up for that, you have to understand that in order to make those numbers work in the end, I am going to need a high probability. As the EMA S&Ps are now at the tippity top, 28 and a quarter. That's crazy. That's super crazy. I'm going to need a high probability in order to make those numbers work. If I don't get a high probability or a high enough probability, the numbers are not going to work. Doesn't matter how many times I ring the register. Doesn't matter how many W's I, cash in and put in my back pocket, because my winners are just not enough to overcome the losers. Okay. Going one step further, you have to understand that if you're taking trades that would otherwise be 50%, now, of course, it can reverse, turn into a loser, like, I understand that. But if you're taking trades that would otherwise be a 50% of max profit winner and cashing them in at 40% and cashing them in at 43% and cashing them in at 31%, you're heading down a little bit of a slippery slope. Now, maybe you're ready. Maybe you've got those shoes, those hiking boots with like the nails in them and all that stuff. And you're like, man, I'm ready. I've been waiting for this my whole life. Well, then that's good. That's good, because you've got to be very clear on how things are changing. You're going to need an even higher probability in the end to make the numbers work, which, again, we're equipped for that. We're ready for that. But you just have to know that that is indeed what you're signing up for. I can't tell you how many emails come across, how many live conversations I've had with traders over the years around this very idea. Like, hey, Jim, like, I feel like I'm managing a bunch of winners. I feel like I'm doing this. I feel like I'm doing that, but I'm just not able to move forward. I'm just not able to kind of, put anything together consistently from like a P&L standpoint. And I think one of the big things that usually comes up when we dig a little further, beneath the surface there is this idea of taking the winners off even too early. Like, you can take them off too early, in my opinion, because again, if you're always ringing the register at 10% of max profit or 15% of max profit, like, yeah, you're going to have a win rate of 98% or 99%, but you may not have anything to show for it, because once you get that first, 400-point move in the NASDAQ against you, like, it all just goes bye-bye. Like, it all just gets wiped away. So again, just to understand, kind of what you're up against. So for Google here, there's 9 minutes. There's 9 minutes of, we're not going to do anything. We're going to sit. We're going to sit in the trade, and that's going to be that. All right, let's go to GDXJ. So GDXJ is, so we're at 21 days to go in GDXJ. And so that means it's probably time to do something, especially given the fact that it's undefined risk. When you have defined risk on it 21 days to go, it's a different ballgame, in my opinion, because you can't always roll for credits. So it's not as simple and it's not as clear. Not to mention, I mean, the whole point of 21 days to go is to kind of avoid and mitigate gamma risk. Defined risk strategies don't really have gamma risk because you have the long leg that's already mitigating the gamma that's coming from the short leg. And so it's like, I don't really need, that's a bit redundant for me to go in and necessarily feel a ton of pressure to take things off or move things around at 21 days to go. If you can do it and it's a winner, it's economically significant, you can roll for credit, whatever, do all those things, that's all well and good. But if you can't and you're just stuck with a position, then you're stuck with a position and you stew in the bathtub of filth, as we like to say. But with GDXJ here, this is totally different, of course, because it is an undefined risk position. It is a straddle where we have the 69 strike, 69 put, 69 call. And we are now above the tippity top. Look at that. 64.30, 64.29, 75. Man, again, you guys can't find this anywhere else on the internet. It's only here. It's only live on the Tasty Network. And so I'm really glad that you guys tuned in today, because no one else knows about this. Like everyone else is just walking around completely aloof to what's going on in the market, but you guys are in the know. And so, man, that's really, really super amazing. But if I look at this straddle in GDXJ, you can see that we're up about $1.17 on the trade. And so is this at our profit target? No, it is not. Our profit target would be 588 times 25%, which, man, to do that live on the show, let me text Julia really quick. Now it's going to be around $1.45. Julia's probably enjoying her Friday, or probably actually no, Julia is enjoying her Friday. You know how she's enjoying her Friday? By working her tail off. That's what she's doing, because Julia is an absolute, she is a studette, right? All the things that she's done, all the things that she's doing, she is an absolute all-star. And so she loves it, man. She's just, again, primetime players making primetime plays. That's going to be Julia Spina, but I'm going to say that's about $1.45. And so again, give or take. We're not quite there yet. We're about 25 cents off the mark. And so the question becomes, should I leave it on? I just on my soapbox telling you guys not to take your 50%ers and turn them into 40%ers, not to take your 25%ers on a straddle, turn it into a 19%er like what we have right here or whatever. And I'm about to take this trade off. And the reason why is because we're at 21 days to go. And the reason why is like now you're starting to get, into kind of gamma risk territory. Now, I've said this before on the show too, and it's also true. Is 21 days to go really that different from 18 days ago? It's not. Is 21 days to go really that different from 16 days to go? It's not. Is 21 days to go really that different from 14 days to go? It's really not. If you actually look at the mathematics, you look at the curve, you look at curves, I should say, you look at the different, decay and how things change over time, somewhere between 21 and 14 is fine. But again, 21, it's got a nice little jingle. It's easy to remember. Again, we've already, the sunk cost on 21 days to go is so high that we can't possibly move off of that marker. But I just want you guys to know, if you were in this situation and you felt kind of motivated or encouraged by my little soapbox diatribe a few seconds ago, and you're like, yeah, I think Dr. Jim might be onto something in terms of managing my winners too early. And you're looking at this trade, you're like, I'm going to hold this guy because I want to get my 25%. If you want to hold it into next week, I actually think you're fine. I think 18, 17, 16, 15, 14 is probably totally fine. And so I'm going to take it off, though, because, again, I do think there is also something from a habit building standpoint, from a consistency standpoint, especially if you've got, if you've got lives, you've got friends, you've got other things you're doing, you've got jobs potentially. It is Friday afternoon at 2:20, right? On a Friday afternoon, many of you are probably at work, and many of you are spending time with us alongside doing your job and crushing it at whatever it is you are doing. So that's amazing that you are multitasking. I am obviously at work here with you all. And so if you want to hold it, you could. I'm going to take it off, though, because 21 days to go is kind of a nice little marker in the sand. And, it makes Tom happy. So let's go ahead and, which isn't necessarily my goal, but it also doesn't hurt. So let's see here. Let's go to 471. He does sign my checks every couple of weeks. So, these LMNT cans ain't going to buy themselves, right? And especially since Autumn's about to put the kibosh on all of that when we go through the August budget numbers. So let's see. Let's go to 473. We can free up a little capital. All right, so we got filled at 473. That's good. We can free up some capital that, of course, we can light on fire next week, which is good. And so, all right, let's see here. If I go to is there anything else? Man, is that it? Am I going to get to y'all? Am I going to go past the point of no return that is engaging with the YouTube comments? I love it. I live for it, man. I 100% live for it. I don't think there's anything else to do. Chipotle is coming back up 45 cents. Autumn's leaving me, by the way. Man, she's been leaving a lot lately. Like, does that mean something? Do you guys think that might mean something? It's going to be 16 years in October. And I checked Polymarket this morning. I checked Call Sheet this morning. And it's about a 68 delta that we get to October. She's gone this weekend with her girls to do a bunch of planning for homeschool this year, because we homeschool our kids because we want them to be super weird and super awkward. And so Autumn is Autumn is going off. It's only like a half hour away, and we're going to drive her there after the market closes today. she's going off for like a weekend with like all of her like homeschool mom friends, and they're like barricading themselves inside of this, this like super nice, like on the beach condo. Like, like it's so funny. It's so hilarious. I'm like, y'all aren't gonna be working at all. You guys are gonna be sipping banana daiquiris like by the shoreline. Like, I know how this goes. Like, you're gonna pawn it off like, oh, we gotta build curriculums and we gotta this and that. It's like, y'all aren't gonna do any of that stuff. But it's okay. She works. Speaking of working her tail off, she 100% deserves it. But anyway, she's gone for the weekend. And so it's just gonna be me and the kids this weekend, and so it's gonna be super amazing. I have a feeling that we may be partaking in some Chipotle potentially this evening, because and any parent out there, whether you have parents of multiple children, whether they're small now or they're old now and you remember when they were small, it's so challenging to find a meal or a food item that all of your children like. Like, that's very difficult, right? And so if you have any more than one child, like, you know exactly what I'm talking about. When you start getting into multiple, we have 3, of course, it just becomes, more problematic. Well, Chipotle happens to be one thing that they all like. So they like different things there, but they all like it. So for me, it's like super easy. Otherwise, I'm like, man, I'm not going to like Chick-fil-A and Chipotle and, Engine number 9 for burgers. Like, I'm not doing any of that stuff. We are going to Chipotle, and I know that they're 3 days old. It's okay. Like, we've just come to accept the fact that those chips, they ain't going to be fresh. And that's just the way that it is. But Chipotle up 45 cents today. That's pretty nice. And so, all right, let's go, though, because I'm just going to keep yammering on. And that is going to be that's going to be not so good for anybody. Let's see here. Let me surprise and delight somebody in the middle, towards the end. Man, I don't know. Let me see if I can find somebody. Here we go. And again, there's no rhyme or reason to this necessarily. I don't want to spend too much time scanning, but I find something that looks like it could be an interesting thing to talk about, whether it's a trading question or it's just a funny comment or whatever. It could go in a number of different directions, but I like this one a lot. So Weiss, what's going on there, Weiss? I appreciate you, my friend. Thanks for being here. Weiss says, happy Friday. This is towards the end of the YouTube chat, and then I'll get back to the beginning in a second. Happy Friday, Dr. Jim. I have a question. I have a September Hymns 55-strike straddle from a good fight. I'm currently losing $3 on it. Do you have any advice? Keep, close, manage. Okay, so Hymns. Ooh, that's nice, man. 57. Excuse me. The one thing about the LMNTs is it does kind of it makes me want to keep burping. And so that's one of the downsides. It's one of the gotchas, I guess, of doing this live on the show. So I usually do a pretty good job of curtailing them before they leave the airwaves there. But if one of them sneaks out, you guys will know why. So Hymns, 57. You've got a 55 straddle, you said? Okay. And you're in September? Okay. Okay, so first and foremost, right, there's the pink elephant or the purple elephant in the room, I should say. August 4th, earnings for Hymns. That's coming up in, 2 weeks, I guess? Okay, so 2 weeks. Yeah, I mean, right now you're down $3 on the trade. I know Hymns has been crazy, and you said yourself without sharing details, which is totally fine, that it's been quite a fight. I think this one is actually pretty easy, Weiss. I think you take it off. I think you 100% take it off. Don't get greedy. Like, don't try to squeeze out more juice out of this. It's been a good battle, like you said yourself. You've been able to work this thing back, and I'm sure it's been a ton of work. Like, you've probably clicked the mouse at least 5-6 times. You're only down $3 on the trade. I would take it. I would take it. That's not. I mean, that's a $5 wide vertical spread in Amazon or Google that doesn't come back. That's all it is. That's not a big loss for really any account size. If you've got 10 grand, that's not a big loss. If you've got more than that, then it's obviously going to be a much smaller loss. And so that's what I would do when it comes to this strategy specifically. I think you take it off. I think you move on. And you keep some powder dry for next week. Because, again, next week is going to be crazy. It's going to be completely bonkers. And by that, of course, I mean the VIX is probably going to go down to 12, maybe 12.5 sometime next week. So hopefully that helps there, Weiss. A little surprise and delight there in the middle. And so I hope that helped a little bit. I do see a couple people talking about mango chili being really bad. Either it is bad or it sounds bad. Yes. I haven't tried it. I can't say. I don't know. I've seen it in the beverage cooler or whatever. And I'm like, man, no. And what's funny is I'm not the only one. Like, obviously, the citrus thing only has like 1 or 2 left, right? Even the grapefruit salt has like 1 or 2 left. The black cherry lime, out of stock, right? Even the watermelons, like they got 5 or 6, but it's clear that they've been, they've been rummaging through some inventory. Mango, chili, lime, they got cases stacked up in the corner. And my man at Vitamin Shop's like, yeah, we've had those for about 8 months. I'm like, I know. I'm like, I don't know why they came out with this, but they did. They did. And so, all right, let's see. Brian Dowdy's in the house. What's going on there, Brian? Hey, Dr. J. I rolled my TLT today since it's at 21 days ago. Yeah, good call. Oh, it was mine too? I think you might be right. Yeah, look at that. Thank you, Brian. That's great. So I'm going to do the same thing. And I'm not going to think about this. I think we just roll it out and keep this strike the same. And thank you for bringing that to my attention. I actually hadn't even thought of that. Totally slipped my radar. And so let's roll it out to September. We'll pick up, it looks like about 77 cents. This is, oh, by the way, this is one of the most powerful things of undefined risk strategies that you don't always have with defined risk strategies. Whenever you want to roll it out in time, whenever you want to extend the duration of the trade, you're going to get paid for doing that. You're going to get compensated for doing that. And that makes sense, right? It makes sense because, again, remember, who's taking all the risk on the trade? You are. Whether you're short a put or short a call, you're taking all the risk. So if you're basically agreeing to take on that unlimited amount of risk for a longer period of time, you have to be compensated for that. You have to be rewarded for that monetarily. And so that's why you see rolling undefined risk strategies always for a credit. It's always going to be some positive number. Now, in theory, it's always for a credit. And in practice, it's for a credit 99.5% of the time. What are the times, the 0.5% of the time when you can't roll for a credit? If you have something that is super, super, super deep in the money to where it's basically just like stock now, those markets are typically wider. In the money options are wider, and the reason why they're wider, by the way, is because the deltas on those options are higher, right? In the money options obviously have deltas that are greater than 50. And if you're deep, deep, deep in the money, it's 80, 90, 95, 98, whatever. That's a super high delta. Well, remember, there's another side to your trade. There's a counterparty to your trade, a dealer, a market maker, like some algorithm, some robot, Optimus Prime, whatever, on the other side of your trade. Well, if it's a market maker or liquidity provider, what are they going to do the instant that they take the other side of your trade? They're going to hedge off that directional risk, so they essentially have no directional risk, and they're effectively just buying bids and selling offers, all day long. Well, if you're trading it in the money option and putting it out through the pipe so that all the different counterparties can see that option, you're asking them to take on more directional risk that they now have to hedge off. That's harder for them to hedge off because they need more shares, they need more futures, whatever, to hedge that off. And so to compensate them just a little extra, just another, it's not much, just an extra skosh or two, they're going to widen out the spreads a little bit on the super deep in the money options. And so that's why, in fact, here, I'll even show you guys. Let me do this roll really quick. This is a tangent, but this is actually I think a halfway valuable tangent. They're not usually as valuable as this one. And so if we go into we could do TLT, that's fine. It's going to be the case with most options. If I go to, so let me show you. So if I go to, if I'm on the call side, so I'm on this side of the market, right? So I'm on the left-hand side of the screen on Tasty Trade. You've got the stock at 86, right? So the at-the-money strike, the at-the-money call, look at the spread between the bid and the ask. It's 2 cents wide, right? 2 cents wide. That's what you would expect to see for an instrument that is so liquid like TLT. You're going to see this with SPY. You're going to see it with QQQ. You're going to see it with AAPL, like whatever, right? Okay. Look at what happens, though, once you get beyond 95 delta. It could even start happening before that. But 95, 97 delta, 98 delta, look at the spreads. Again, this is not my opinion. This is not conjecture. This is not just some random, comment in a subreddit, which we all know is about as high quality information as you can get. But right there, 15 cents. 18 cents. So the one looks like it's about 15 cents, pretty consistent across the board. And so that's a pretty big difference, right? When you're talking about 1-2 pennies for the at-the-money option, you're moving to 90, 95 delta, you're at 15 cents. That's a big, big difference. Do it yourself. Pick any stock, any ticker, do the same thing. Look at the at-the-money strikes, look at the markets. Those are essentially going to be the most liquid options, I would say. And then move to the super deep in the money options on both sides. You're going to see much wider spreads. And so So anyway, when you have a super wide spread though, and you have a super deep in the money option that you might be carrying, like a super deep in the money put, because you're fine, just holding it as long stock, which I've talked about on the show many times before. When you go to roll that to the next cycle, you may notice that you're not able to get a credit. You may notice that it's even money, potentially even a 1 penny debit. That's because of the bid-ask spread differential being so wide on those in the money options. So that's the reason why that happens, and that's why there's a bit of a difference, when you go and take the journey from theory to practice. And so, so that's TLT. All right. So, but thank you, Brian. I appreciate that. I actually didn't see that. That was not on my radar. So Sam L's in the house. What's going on there, Sam L? Best way to wrap up the week with the infamous, underappreciated, and forever entertaining Dr. Jim. Man, I appreciate you. Man, look at you. Man, I'm going to send you that cash. And again, because you put all three in there, I'm going to send you the triple. I'm going to give you the 3x bonus on the cash that we talked about. So thank you so much, my friend. You guys make me feel very appreciated. So thank you, guys. And I appreciate you. I appreciate you. Sam L, you are part of the core position. And so thank you, my friend. Sam L says, Doc, the meme of the year. Oh, yeah, Uncle Jay clashing with the president during the Fed building, the renovation tour. Yes, I know. That was so funny. What are we even doing here? Trading or watching a political sitcom? I saw a lot of people, a lot of people said this could be a scene out of The Office. I saw that floating around the internet quite a bit. And I'm like, yeah, it 100% could be. I've seen the whole Office. It's obviously amazing. It might be number one in my books. But I could see, Trump would be Michael Scott. And if Jerome Powell was like Jim or something, like that scene has happened so many times, where Jim is just shaking his head as Michael Scott's doing whatever he's doing. And so I'm like, yeah, that was really, really funny. And so Tomas in the house. What's going on there, Tomas? Tomas says, hey, Doc, we appreciate you as always, man. I appreciate you appreciating me. I had a question about 550 August 15, December 31 put calendar spread on QQQ for a 1435 debit. Okay, I opened the trade as a hedge and intend for it to continue to be used as such. The August 15th 550 put has lost almost all value. How would you typically manage this trade? I was thinking roll the 550 August 15 put to September 19th. Yes, that's what I would do. So you're in QQQ. Yeah, you've got the stock at 567, right? So this is giving you a little bit of downside, a little bit of a downside hedge. The 550 put in the front month, which was August, has dried up. There's nothing left. So you're thinking about buying it back and, establishing a new front month. That's exactly what you should do, right? And that's what makes calendar spreads, even diagonal spreads, really powerful, in that you have multiple opportunities to reduce basis over time. You have multiple chances to kind of keep selling against that back month. And so I would do exactly I wouldn't change what you're doing. I don't even really need to look at it, because I like what you're doing. Like, that's 100%. That's right out of the calendar playbook. With calendars, it's not usually a strategy where you're getting super innovative and super creative, in my opinion, because it still is a defined risk strategy. But yet that doesn't mean you don't have plenty of opportunities to continue to reduce basis, because you do, which you're seeing here, right? August dried up, you sell September. September dries up, you sell October, right? You kind of see how it works. And so, as long as QQQ stays around here, or, it stays out of the money, it's going to be pretty easy for you to do that. And so, yeah, I like the move. I wouldn't change anything with what you're doing there. And so, Sam L says, Doc, did you go all in on Best Buy? No, I did not. Someone just grabbed 1250 of the March 20th, 2026, 85 calls at 249. That's a smooth 300K. Was that you with the bold long-term vision? No, because I'm not even sure I have a bold short-term vision with Best Buy down 14 cents today. And so we have our 100 shares, and, they haven't necessarily, been treating us too well, as the P&L Open Bros like to remind us of, which, again, that number doesn't matter. And so we're not going to look at that number. But if you look at Best Buy here, yeah, we're going to sit tight. But that should apparently help us out. But it's not doing anything. It's not moving the needle at all. Like, was it moving the needle earlier? Hold on, let me look and see. If I go to Best Buy, let me look at a chart of Best Buy. Yeah, this thing's been getting clobbered all day. Now, maybe in the morning it was helping a little bit, I guess. It was at a high of 68.21, but still, that wasn't up very much. And so, I don't know, whoever bought all those calls is kind of in the pain trade himself or herself as well. And so, sadly, though, that was not me. Margin Walker in the house. Hey, Dr. J, what's up, my man? What's up with you? I appreciate you, man. I appreciate you. I traded my first butterflies this week thanks to your awesome tutelage. I took a small loss on Intel, but I had a real good win with NEM. Thanks, my man. Man, you are welcome, my friend. And so NEM, Newmont. up $4. Wow, I've never heard of Newmont. Let's take a look at this stock. What is the 4-star liquidity? Wow. Okay, so 4-star liquidity. Newmont. What do they do? Can somebody help me in the chat? Put in the what does Newmont do? What kind of what is their widget? What is the widget they sell? What is the widget that they service? Like what is Newmont? Is it a mining company? For some reason I want to say Newmont Mining. Maybe that's Newport. Maybe that's neither. If I go to Newmont though, let's go to the trade page. If I go to like September. Okay, so all right. The markets are not the greatest in the world. You know, for a 4-star liquidity, I expected them to be a bit tighter, honestly. I expected them to be a little bit more narrow than what we have right here. Again, always go to the at-the-money option whenever you're trying to gauge and evaluate the liquidity of whatever stock or index you might be looking at. A Newmont, you know, an EWZ, like whatever it might be. Go right to the at-the-money option, and you can see, all right, the at-the-money option, 10 cents wide on the put side, 10 cents wide on the call side. Now, it's also not super surprising to actually see the liquidity improve when you move out of the money. So perhaps I misspoke earlier when I said that the at-the-money options are going to have the most activity. And maybe it's the slightly out-of-the-money options. I actually don't know the answer to that. I do know that around at-the-money, slightly in the money, slightly out of the money, and at-the-money, that's the sandbox. That's where everybody's playing. When you start getting like super like off the reservation on the outskirts of town, like you're deep in the money, you're deep out of the money, now you're in some other sandbox altogether. Like, so now it's like, man, there's not too many people playing in this sandbox. They're probably drinking, you know, mango chili over here. I should probably, you know, get over to the main sandbox. And so when you go a little bit out of the money, though, on the put side, you go a little bit out of the money on the call side, you can see the liquidity actually improves. And so that's, you know, that's good. That's promising for Newmont. I'm going to pass on this right now, but now I got a new thing that's on my radar, pun intended, with Newmont here. And so that's good stuff there, Margin Walker. I'm really glad that you had some success with butterflies. Just remember, this is not the foundation. This is not intended to replace, you know, the oatmeal and peanut butter and blueberries. Like, it's there every day for lunch for a reason. It is the core position. Like, it is the foundational axiom of what we're trying to do, right? Expect to move butterflies, fun to take a shot, take a directional stance, whatever. That's all well and good, but don't try to, you know, insert that in to be your new foundational element. I think that might be a mistake. So Sergio's in the house. What's going on there, Sergio? Appreciate you, my friend. You know that I do. Brian says hardly have any trades on, and not really finding something new to put on after taking ETHA off. So you took ETHA off. Hopefully you got a little bit better than where I'm at right now. I'm only up, you know, 40 cents on the trade. And so I'm going to sit tight right now. There's no reason to take this off. Plus, we can call ourselves a crypto bro for a little bit longer, which is nice. And so maybe that they will include me in their group in the future. That would obviously be good for me. But ETHA, I'm going to sit tight and do nothing. Maybe you got a slightly better exit price, Brian, than I would be able to get right now, which is possible, of course, if ETHA was even higher. Was it? Well, hold on. Let's go to the chart here. Okay, yeah, okay. So there were some opportunities the last couple of days. I mean, you had ETHA up to almost 30, it looks like, right there. So yeah, so you had a couple of opportunities to get a nice profit on this trade. Again, because I'm only trading live on the show as much as I possibly can, I'm going to miss a lot of things like this, but it's worth it to me from a learning standpoint, because that's my number one mission with this. That's my number one goal. And that's why also with like my P&L and stuff and, you know, and the show account, it's like, yeah, I mean, I guess it matters, but it's not the number one thing, because again, I'm only trading live on the show. And so I've sacrificed that in exchange for what I hope is better and more valuable instruction and education, and showing you guys the gimmies and the gotchas and things like that. And so hopefully you feel the same, or at least not too differently, or at least not so differently that you click off because your boy needs that watch time. But Joe says, hey, Dr. Jim, happy Friday. What's going on there, Joe? Appreciate you, my friend. You know that I do. Gasman says, hey, Jim, good luck with the LMNT sponsorship. Yes. So far, nothing but crickets. But LMNT, citrus, is number one, just so that everybody's clear about how I feel. Forget about all that stuff I said earlier about mango chili. Like, that never happened. It's kind of like that day when I came on here with the weekend IG thing. It never happened. Never happened. That's just a little private conversation, amongst friends. But Joel James, but seriously, don't get mango chili. Like, it can't possibly be good. But Joel James in the house, Dr. Jim. Since there are no longer going to be down days, let's just do some naked puts on Wolf. Yeah, so we know Intel went out of business last night. That means Wolf has to be, there's no way. It's got to just be gone, right? Poof. Wow, look at this thing, man. You just can't kill it. You can't kill it. Wait a minute, I've never actually studied. Hold on a second. Look at this. I've never actually studied the previous. Look at this. Okay, hold on a second. Because y'all got me into Wolf. This was not my own idea. Now, not that my own ideas are any better. They're usually about on par with what I did here in Wolf. But at least I can take ownership over it. This one was y'all. Like, this one was 100% y'all. Look at this. You guys got me in Wolf right around here. You guys got me bullish in Wolf right around here. Now, I'm no technician, right? I'm no Tim Knight. But that chart don't look too bullish. Right? I'm no Head and Shoulders guy. I'm no Elliott Wave expert. But when I look at that does not exactly breed a whole lot of confidence to the upside there. You got Wolf. Wolf was 34 last year. 34 last year. Y'all got me buying it at 3. Y'all got me buying it at 275 or whatever it was. And yeah, okay, short-term contrarian, whatever. But guys, man, we're talking about Wolf. Like, we're not talking about Apple. Like, we're not talking about Chipotle. Like, man, we're talking about practice. We're talking about Wolf. Like, man, that's bad. That's real bad stuff. Yeah, I'm going to pass on that there, Joel James. But I appreciate you, my friend. Maybe a little bit less now. But I still do appreciate you to some degree. So Theta Trader's in the house. Theta Trader says, Dr. Jim, are you getting bared up yet? I need a read on the Florida man. Orca financial indicator. Yeah, I'm not getting bared up yet. You mean bared up in the market or like bared up on Florida? Because this is obviously, look, I'm going to give you guys the inside scoop, right? Forget about everything you've heard everywhere else. Like, I'm here. I'm in St. Petersburg. Like, this is the truth. This is all you need to know. It's paradise 9 months out of the year. It's paradise 9 months out of the year. 3 months, which we're smack dab in the middle of right now, it's not the most amazing. Like, you can't breathe. Like, you never want to go outside. Like, it's all those things, right? It's still not as hot as Memphis, Tennessee, where I went to, graduate school for my doctoral degree from the University of Memphis. That is the hottest place on earth. But this is a close second. This is kind of like a citrus, black cherry lime type of, comparison. 9 months of paradise, though. Yeah, sure, you got hurricanes, and yeah, sure, you got this and that. But it's like, man, you just got to man up. Like, you got to man up a little bit. Like, if you don't have a bunker, that's on you. Like, if you're not ready for that with, a Bluetooth, wired in bunker, then that's 100% on you. And so I don't know what I can do for you there, Theta Trader, but we're ready, man. I'm not bared up on Florida. And I'm not even bared up on the market, man. If you can't beat them, join them. That's the only way to play it. So Ash Finn in the house. What's going on there, Ash? I appreciate you, my friend. Says, the chat is working again. Nice. Thank you for being here, my friend. And Ash has been crushing it, by the way. He's been doing, I think you've been doing some Iron Flies and some Iron Condors, kind of some Liz and Jenny specials, if I'm not mistaken. I've seen some of those things come through my feed on Twitter. And so Ash has been absolutely crushing it with what he's been doing, taken from Liz and Jenny, which obviously is a great, great source of knowledge and a great source of information for not only the knowledge and the understanding, but like tactical suggestions, like Iron Flies overnight. I think you did like some in ES like overnight. Man, that's awesome. That's so awesome. I love to see it. Love to see it. But thank you for being here too, my friend. Margin Walker, what's up, Tasty fam? Good to be back in the chat. Hope you all having a good week, man. I appreciate you, my friend. Samuel says, since it's a long show, who are your fitness YouTube influencers, Doc? Greg Doucette yelling harder than last time. Yes. We just flickered. The electric just flickered. Okay, I think we're good though. So I really like the 3DMJ guys. I like Berto Nunez. I like Eric Helms. I like Jeff Alberts. I like all those guys. I really like Jeff Nippard. Jeff Nippard is really, really solid. I like Steve Hall. Steve Hall is really good out of the UK. And so those are the main guys that I might follow. So those would be my guys primarily. Greg Doucette, I know the name, but I could never pick him out of a crowd. And so, Cliff Wilson. Well, he's not really. He's big in the natural bodybuilding world, and Cliff's great, but he doesn't have a lot of content. And so let's see. James Bond number 4 says, "Happy Friday. What are your thoughts on Tesla post earnings? How would you trade it now?" Yeah, let's take a look at it. I mean, I still have my butterfly on from earnings the other day, but it's too little, too late, man. Tesla went up $10 today. We need like 3 or 4 more of these days. But unfortunately, I mean, it's about to expire right there. And so sadly, this guy is going to come to a close, this little Tesla project. But hey, I mean, it could be worse. I mean, it's only a $4.96 loss. Again, you have to contextualize all the losses and all the wins, right? You have to this is 1.5% of the account. It's like, okay, is that great? No. Is it amazing? No. But is it catastrophic? No, it's not that either. And so it's always important that when you have losses or you have wins, or maybe you get on a streak of some kind, you have to, on both sides, cold or hot, you have to contextualize what's going on and try to keep recentering yourself, pun intended, right? Try to keep bringing yourself back to all right, where am I at right now in space? Where am I at in terms of what I'm trying to accomplish with my account, what I'm trying to accomplish from a learning standpoint, from a P&L standpoint, from a risk standpoint, from a trading activity standpoint. There's so many different metrics, to look at that I think it's always helpful to kind of, one of the things that I started doing this a few years ago, actually. It's been incredibly helpful. So a lot of people ask me if I keep a trading journal, or let me back up. A lot of people ask me, should they keep a trading journal? And so my response has grown over the years. In the beginning, it was always yeah, I think this would be great. I think that you'll learn a lot about yourself, and I think it'll just be a good investment of your time and all those things. That's all true to some degree. But the problem is, and anyone who's done this knows exactly what I'm saying, man, it is a pain in the rear. It is a pain in the keister unlike any other. Might even be worse than mango chili. If you're keeping a trading journal and you're keeping up with it and you're super active trading, a handful of times a day, most days, that's going to be very, very difficult to fit in around the edges of your life. That's just the truth. That is the truth. And so I haven't kept a trading journal in a very, very long time. But one thing I have done, I've done this now for the last couple of years, I would say, voice memos in my phone. So voice memos in my phone. Things are working, things are not working. I'm on a hot streak, I'm on a cold streak, whatever. Voice memos in my phone, man, and it's way faster. It's way faster. And you get the emotion. You get kind of, even if it's just an audio, you get a little bit of the nonverbals with pauses and excitement and desperation and whatever's in there. It's man, I'll listen to some voice memos from a year ago, 2 years ago, whatever. And I'm man, wow, I've really grown, or I haven't grown, or it's why am I not doing that? Or it's what am I doing? Whatever. If you want to improve as a trader outside the X's and O's, outside the strategic maneuvers, one thing that I would strongly encourage you to do is start taking voice memos and do them on some type of regular basis. You could do them every week. You could do them once a month, twice a month, whatever. I don't think it needs to be daily per se. But some of you are my overachievers that are watching, you're about to get after it. You're man, I'm doing morning, I'm doing afternoon every day. Hey, go for it. But just make sure you get the whole spectrum of what's going on. The slow days, the fast days, the up days, the down days. I would get everything to give yourself a nice smattering of the different emotions, because it's all going to be in there, man. It's all going to be in there. The fear, the greed, the hope, the desperation, the overconfidence. Oh, that's a good one. That's a real good one. The overconfidence. You'll hear it in your own voice, and you're going to be yep. Then I got gorilla smacked, because that's the way it had to be. So James Bond, but Tesla, yeah, I mean, I would probably be bullish right now, James Bond. So I would probably play this thing to the upside still. I think that the reaction from earnings was maybe a little bit overdone, and I see lots. I mean, with the AI stuff and the robot stuff, I think that Tesla's so much more than just a car company now. That I think the car numbers matter maybe the most, and I think that that's what's going to essentially drive the train. But I mean, Elon, for as crazy as he is, I obviously think he's a genius, and I think he's really going to figure it out. I think he's going to figure out a way to kind of deploy AI and robotics and maybe lead both of those spaces potentially into the future. And for the shareholders, I think that could be really, really positive. At least that's how my father-in-law feels, right? So maybe he's right, maybe he's not right. And so anyway, my father-in-law owns a bunch of Tesla. We've talked about this before on the show, and I have not brought him up recently, but he's still doing quite well. Let's see. Drizzo. Dr. Jim, what's going on? How would you manage a long 311 call and a short 315 call in gold? So a call spread in GLD. Okay. Okay. So you have a long call spread on. Okay. This one, great question. There, Drizzo. I think it's Drizzo. I like Drizzo a little bit better to kind of, it summons up like our 1990s like rap scene with like, you got your Biggie, you got your Tupac, right? You got all that stuff. It's like, yeah, get a little Drizzo in the house. And so the nice thing about this, Drizzo, is, gold's down today. Obviously, you didn't say what expiration you're in, but I'm going to assume you're in at least August with 21 days to go, if not September with 56 days to go. But what I'm going to say applies to both. I would do absolutely nothing. Absolutely nothing. So the great thing about vertical spreads, long or short, is you put the trade on, and then it's a do nothing. It's a set it and forget it type of situation for the most part. If you get to 21 days to go or inside of 21 days to go and you can roll for a credit, then go for it. But if the position is kind of, too far gone, which would be the case here for GLD, because you got the stock at 307, you're 311, 315, you need it to be up around 311, 312 to be able to roll this for a credit probably. So right now, you're just in a sit and stew type of scenario. Like you sit, you stew in the bathtub of filth, and you just understand, hey, if I have to take max loss, then I take max loss. That's why it's so important to size correctly on entry. That's why it is so very important to make sure that you are controlling position sizing on entry when it comes to, your defined risk positions. And so that's what I would do here. I would do nothing. And I would just say, hey, you've still got 21 days to go if you're in August. You've got 56 days to go if you're in September. And so lots of time to go. I mean, gold is down $3 today. I mean, gold's moving 30, 40 points a day, pretty much every day now, it seems like. And so, you've got the gold futures are trading at 3,400 basically. For gold to move 20, 30 points in a day is just not a big move for gold. And so that's essentially going to be a $2 or $3 move in GLD. And so it's not going to take much there, Drizzo, for this thing to come back. And that's what I would do. That's what I would do. I would sit tight. I would do nothing. And that's going to be that. So Emmett Morrison says, hey there, Dr. J. I need some help getting out of a GC put spread that is 100% in the money and expires today. I had a closing order in for max loss that got rejected. Now I can't put in a closing order help. Okay, I think I know the answer to this because we experienced this together on the show. I think it's because the orders, because the gold markets are closed now. Like the gold option markets. I think they close at 12:30. Like I think that they're done at 12:30, so you can't trade it after 12:30. And so on expiration day, which it sounds like you were in, then you just need to understand that those things need to be closed before. I'm pretty sure it's 12:30. Don't quote me on that per se, but use that as a reference point and then find the exact number for yourself. In fact, somebody pop into the chat right now and put in the official time so we can all benefit from this. And I'll scan after the show and I'll see what it is. I'm pretty sure it's 12:30 though. So that means that spread has essentially expired in the money, which is okay. Like it's fully in the money. It's, both sides are going to essentially offset from an assignment. You can have some assignment fees, whatever, but it's a modest amount, which is not something you want to do every day. But again, that second range rover, like we got to build up the capital for that. Like it ain't going to pay for itself, right? So those assignment fees, like every little bit counts, right? But the good news is they're both going to expire and you're going to get the maximum value for it, even though you weren't able to close out of it early. And so I'm like 100% sure that that's what happened to you there. And so Ed Bickford in the house. Ed, I think I may owe you an email. I'm still a little bit behind on my emails, and so I appreciate y'all's patience. I really, really, really do. Ed says I'm selling at 50%. 2 questions regarding defined risk and 50%. Happy to help there, Ed. Was there a technical study that determined it profitable? Does it make a difference as pop is say above 80? Okay, so 2 questions. So number 1, yes. There's been a number of studies done on this. Now, when you say technical, I don't know if you mean technical like in a technical analysis type way, or if you mean technical like in a formal research-backed way. I think you probably mean the latter, so I'm going to answer it as such. Yes, the research team has looked at this so many times, like 6 ways from Sunday. So if you go in, Ed, to the Google machine and you punch in, Tasty market measures, vertical spread profit targets, Tasty market measures 50% of max profit, whatever, you are going to find, it's 14 years. It's 14 years of research. Like in the archives, you're going to find study after study after study. They've looked at this so many times because that's essentially what has informed, all the mechanics that we have. Like that's the reason why we do all the things that we do. But then your second question, does it make a difference if pop is say above 80? So Do you mean 80 on entry or 80 at the time of closing? I mean, I don't typically look at the probabilities of the trade like as they unfold over the life of the trade, but I know some traders do. I just typically don't, and it kind of gets back to what I was talking about the other day with too many cooks in the kitchen and just too many things to monitor. You have to cut it off at some point, and that's one of the things that I've personally cut off. I don't know the answer to your question, to be honest with you. I'm not sure. I don't know, and so I can't say. I can't say one way or another. Again, you could potentially maybe Google that and see if something comes up, but I don't know. And one of the things that I learned being an educator is that when I don't know the answer to a question, I just say I don't know. Like rather than, oh my gosh. So here's a funny little story. So Ed, I hope that helped at least the first question. So I'm a second-year doctoral student. I'm a second-year doctoral student. I'm teaching like my very first class ever. Man, I am nervous like you could not even imagine. I mean, I'm just sweating. Like I walk in, haven't even started, I'm dripping sweat. Like again, it's Memphis, Tennessee. It's July, right? It's 170 outside. It's 125 in that room with max AC on. I'm dripping sweat, just puddles beneath me, right? Have no idea what I'm talking about, and I'm supposed to be the guy. I'm supposed to be the one that's leading the pack. I'm like, this is a mistake. Anyway, doing my class, get a couple questions, whatever. Everything's going fine. I'm like, I'm actually going to survive my very first class. Near the end of the class, young kid asks me a question that I did not know the answer to. And you know what I did? I fed him the biggest line of BS I could possibly muster. And he just ate it up, man. He's sitting there just nodding his head like, yeah, he's taking notes. He's writing it down. He's like, oh, this is good stuff. And in my head, I'm like, yeah, this is some good stuff. The problem is it's all wrong. None of it's true because I wasn't man enough. Like I didn't have the confidence to say, man, I don't know. Like, I don't know. Like, let's try to find out together or whatever. Instead, man, I just fed him hook, line, and sinker. And of course he ate it up because he didn't know better. So, man, now I'm like, now this kid, I felt so bad after that. Because I'm like, man, this kid is going to walk through the rest of his life with false information. He's going to walk through the rest of his life with false information that I knew was wrong. It wasn't like I wasn't sure. It wasn't like I was like, okay, this could be right. I knew it was all patently false. And I just fed it to him because it sounded good. And, man, I felt so bad after that. So the next class, actually, I sat him down before class, and I'm like, hey, I want to change. I went and got the answer, like, in the 2 days between classes. I'm like, hey, I want to kind of revise. I want to revise my answer from yesterday. He's like, okay. So he pulled out his notes and he started like writing underneath the previous notes. I'm like, nah, let's just throw that away. So I crumpled it up. I threw it in the trash. I'm like, let's start over from scratch. And so I gave him the right answer. So I righted the ship. But I learned in that moment, I'm like, never again. I'm never doing this again. If I don't know the answer, I'm just gonna say I don't know. And so that's where I'm at on that second one there, Ed. But anyway, I digress. Wow, the show's almost over. We only have 10 minutes left. That's about right. And so let's see, Emmett Morrison, let's see, Sergio talking to Emmett. That's good. Margie Walker says, I've had that issue before. Oh, and I had to raise my limit 5 cents. Okay, I think it was talking about the GC thing. I think it was gold expiring would be my guess. But Margie Walker says raise it by 5 cents. And then Rancher, hey, Dr. Jim, how are you? What's going on there, Rancher? It's out with the old and in with the new over here. What's going on, my friend? ACHR short put 11 strike, 56 days out. Purposely very close to at the money. I wouldn't be upset if it went south and I was assigned. Okay. I mean, again, that's one of the great things about, the short put. I mean, you've got Archer Aviation. Okay. I mean, if you're okay owning the stock long term, then there you go. I mean, that's one of the huge benefits of short puts, in that you can go ahead and take the stock and you can hold this thing long term. So I like the strategy. Again, I mean, you said it yourself in the question stem, kind of in the comment there. You're okay holding it. You're okay doing this thing for the long term. And so I like it. I like it a lot. I mean, it's a good way to get into a position. Did you say what cycle you're in? Yeah, 56 days to go. I mean, the 11 put, wow, you got some nice volatility in there. I mean, you're getting $1.25 for an $11 stock. That's pretty good. So Archer Aviation must be in the news in some way, shape, or form. And so, yeah, I like it. I mean, that's a classic strategy. It's a classic strategy to sell puts as a way to establish a longer term position in a given stock. And I don't hate it. I mean, yeah, I'm not like in love with it either, but I think it's fine. I think it's totally fine. And so, yeah. Let's see. Margin Walker talking to Emmett about equity options and futures. Yeah, equity options and futures are going to be very different because, again, I think the gold options close at 12:30. But you guys hook it up. You guys hook it up in the chat and let us know what the actual number is. In fact, here, I'm going to scroll down really quick. Did anybody say what it is? Well, somebody said they closed the gold at 2:30. Oh, okay. Huh. Oh, I see. It looks like 1:30 Eastern. Okay, so maybe it's 12:30 Central. I just saw a random comment where somebody said that my voice memos must go 2 hours. I can't scroll back to figure out who that was, but that's pretty funny. They're pretty consistently about an hour and a half, and so sometimes I'll be like in the. I leave voice memos to myself all the time, because when inspiration strikes, like for an idea that I have, like for the show or for like the skinny or like my live talks or whatever, when inspiration strikes, I'm like, man, I can't lose this. I've got 20 seconds. You guys know what I'm saying. It's like you've got 20 seconds, 60 seconds max, and if you don't act on it immediately, it's gone. It's gone, man. It's just absolutely gone. And so we'll be doing random things, and I'll just like step aside, right? Very similar probably to how Superman felt when he had to, transform from Clark Kent into Superman. I'll step aside and I will leave myself a voice memo about said idea. And so I do that all the time. So if I'm gone for like more than like, an hour 15, then Autumn knows that it's probably a journal entry. And so let's see. Now I lost where I was. I figured that would happen. Okay, there we go. So Theta Trader says, was there a study that said 50% of max profit was profitable? Yes, I've conducted this study multiple times with repeated results. Same with 40% or 60%. I close those trades and receive cash. Okay, so I'm not sure if you're being funny there about just closing the trade and receiving cash. But I actually think that, I think there's so much truth to what you said there, Theta Trader. And you may not have been trying to be funny. That may have been serious, as I could be misreading the situation. But you're kind of, you're sneaky. You've got the clever humor that we all appreciate. I mean, it's right around the B- level that we've all become accustomed to. But it's clever at times as well. And so I do think, though, there's some wisdom in what you said. So as far as figuring out, so Ed, you were asking about, 50% being profitable and being having some weight behind it. In my opinion, I think there is nothing that is more valuable than I refer to it as forward testing, and I think that's not my term. I've heard that term used before, but it makes a lot of sense. Like back testing to me is fine for giving you like reference points or whatever, but it's not necessary. It's similar to like paper trading. It's not really going to give you a good indication of how you might perform because there's no emotional, there's no realness to it, there's no money on the line, there's no dollars at stake. Like forward testing is the way to go. So if you are curious, Ed, or anyone else for that matter, about a vertical spread, 50% of max profit, whatever, I would forward test it. I would say, okay, now you're not necessarily keeping like a, full-blown trade journal, but hey, for the next 100 vertical spreads that I do, I want to actually track these. And maybe it's 200, whatever it might be. And then you'll give yourself some data points that, yeah, maybe it's not, the SPY data going back to, 2007 or whatever that the research team has, but it can be your own data that can still be incredibly valuable. And so I actually think there's something there, Theta Trader, which is maybe what you intended the whole time. So that would be even better. But let's see. Rancher says, what's Verve? I just noted that they are halted, and I have no idea. So that's probably something that goes in the garbage, just like that kid's notes from 2006. Verve Therapeutics. Okay, so hold on. Trading halt reason not available. The trading halt started. Wait a minute. Started last night at 7:50. That's weird, huh? I don't know. I don't know anything about Verve, and so yeah, I got nothing for you on Verve, and so I'm gonna have to pass on that. But Margin Walker says Verve Therapeutics is a clinical stage biotech company focusing on developing gene editing therapies for cardiovascular disease. I mean, they have essentially just front loaded that description, which it looks like you took straight off of their website, with all the buzzwords they could possibly manage. I'm surprised they didn't weave in AI. Like, I'm really surprised they didn't kind of weave in like a Wegovy or something that would be potentially make that even more powerful. But nevertheless, there you are. Oh yeah, here we go. Ash Finn says mango chili sounds awful. That's what I'm saying. Margin Walker says copy and paste it from AI. Okay, so it's copy and pasted from AI, so the AI is already assumed. So there you go. A rancher says mango with Takis. Takis. Oh, like the chips? Or they're like, not chips, but they're like almost like bugles or whatever. I've never had them. I've seen them at the grocery store, so I can't comment on those either way. But Fala says mango chili is a very Mexican dish. Oh, it is? Oh, so that's a common thing? Okay. That's an interesting combination. And so I'll have to ask my my brother-in-law. So Autumn's sister's husband is half Mexican. And like, you know, he's got the Mexicans, his dad's Mexican and his wife is like white American. And so like their family, like their Mexican family is huge. Like, I mean, they basically fit right into the huge family Mexican kind of stereotype. They're great people. Like I've met most of them, hung out with them several times, and it's always so much fun to like go hang out with them and all that kind of stuff. And so I'll have to ask them next time if mango chili is kind of, if you're giving us some truth here, Fala. I'm assuming you are. But sometimes, you know, the internet's a little crazy. You got to double check some people. And so Theta Trader says LMNT is salt and citric acid with a nice markup. That's exactly right. You can do the same thing with Morton Light Salt. Morton Light. Oh, man, tell me the VIX is 13 without telling me the VIX is 13. Y'all having Morton Light Salt? You're not even going pink Himalayan? And then you said, oh, and tap water? Bro, tell me the VIX is 11 without telling me the VIX is 11. We're doing tap water now? You're not even getting me a fridge filter? Like, you don't have to get me a reverse osmosis system. You don't have to get me like a Clearly deal. But, man, we're going with not even a fridge filter at this point? Data Trader says you can save yourself some money. You certainly can. And pick up a few niceties along the way with, you know, some chlorine, you know, some boron in the water, you know, some other things. So that's fun stuff. Donna Ski says, happy Friday, Dr. Jim. I'm here to listen and learn from your show. I don't have any more trades I need to close today. That's good. It's always a good feeling on a Friday. And put this in your voice memos, right? It's always a good feeling on a Friday when you're done for the day. Now, it's not as good if it's a red day, right? It's not as good if it's like a blood red day. But if it's a green day, and, you know, you're able to kind of shut the books down and just kind of enjoy the rest of the afternoon. You could do it with, you know, a banana daiquiri. You could do it with a mango chili. You could do it with that, you know, disgusting concoction that Theta Trader just threw in the YouTube chat for us. You can do whatever you want to do. This is your world. But that's good stuff there, Donoski, for shutting it down today. Very good stuff. And so let's see. Rancher says fresh mango sprinkled with tajin. I don't know what that is. And lime is the stuff. I don't know what tajin is. Let's see. Oh, Rancher and T-Port. It's from the Fed's own website. Oh, it's $3.1 billion for the whole project. You're talking about that thing with Trump and Powell. Yeah. Not just the last building, as Powell was claiming. So you're saying Trump was right? Maybe he was. I don't know. But I mean, he's a little fast and loose with some things. But let's see. Okay, Fala says the folks in Mexico put chili and lime on lots of fruit or even beer. Well, that makes sense. I mean, Coronas are like, I mean, you typically put lime in a Corona. Which I don't know if like Corona's like, if Mexican people laugh at that, like they may very well laugh at that, but as like a white American guy, like that's what I associate in my head, which could be totally wrong. I get it, but that's the connection that I have. Let's see. Rancher says, yes, it's delicious. I come from that lineage. Well, there you go. I don't even need my brother-in-law's family. I got you guys, man. You guys are 100%. You guys are the real deal. And then, let's see, man. I'm totally out of time, though. Wow, I'm out of time. Man, look at you guys. Look at you guys in the chat. Man, YouTube is going to think that this is some quality programming, and they're going to be dead wrong. Dead wrong, but you guys came to play today. You guys 100% came to play today, man. I appreciate you guys. Don't forget, we are long on Monday and long on Tuesday. So come back Monday, come back Tuesday. We've got lots more to cover on both of those days. But, guys, I appreciate you guys. I appreciate you guys so much. If I can ever help you, please shoot me an email. I'm jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We will see you guys on Monday.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody. Happy Friday. Well, this has been quite a week for a lot of reasons. And we're at lifetime highs again. What else? For the bulls, it's like tailwinds galore. The trade deals seem to be happening. The whole Liberation Day craziness seems to have become just completely irrelevant. That was smoothed over. Earnings are coming in without any real shockers. And everybody's happy. So, it just keeps notching up new highs all the time. Under the surface, there's some cool stuff going on. And I've been having a bit of fun this week with this market. So let's look at the charts together and rest up this weekend, because next week is like the last final hurrah as far as the earnings season goes. So let's jump on in. As always, we start with a spider, and as always, it's up. Here, of course, is the April 7 bottom. We all remember the weekend before. It was right on the heels of Liberation Day, and everything was collapsing. It bottomed just minutes after the opening bell. It really bottomed the Sunday before, if you look at the ES. And then it's been up ever since in sort of two broad stages. One was this just like snapback, explosive recovery. And since then, in more of a calm manner, like so. And you can tell in a way, if we can just anthropomorphize these price bars, this is a more confident chunk of time than this one. Why do I say that? Well, it's a bit of a mix. There's a lot of red mixed up in the green, a lot of uncertainty. It went up, but it was more halting and got scared here and there. Since then, it's just been just like relentless and just a fervent rise higher. So here we are, lifetime highs on the spider. Diamonds, kind of the same deal. We'd had a lifetime high close on Wednesday. We're in that neighborhood now, but we're just kind of, for the past 3 days, just kind of hanging out in that zone. And this is the gap up we had on Wednesday. Even more dramatic is XLI, which used to be pretty much in lockstep with the diamonds, not anymore. XLI has been especially strong. And you can see here kind of the same phenomena, this snapback, explosive rally, kind of this halting, timorous movement here, and then this resolute push higher to lifetime highs day after day after day. And of course, a particularly strong sector continues to be finance. XLF, the financial sector, lifetime high intraday, almost certainly a lifetime high close. And the gap up on that one was down here where this dashed green line is, and it hasn't dared cross it since then. So all systems go in bull land. Yesterday, the only really notable earnings was Intel, INTC. That's down pretty hard. Whoever was hoping for a big recovery on this was probably disappointed. As I mentioned yesterday, it's been kind of an interesting history with Intel. Back in the 90s, it was the NVIDIA of its day. It could do no wrong. Intel Inside was everywhere. And everybody used the chips, and it was just a phenomenon. It was the absolute blue chip of the Silicon Valley. It hit some real rough sledding here, lost a tremendous amount of its value, the vast majority of its value, and has been trying to recover since then, and did so with some success, but that kind of ended back in 2021. And since 2021, which was the lifetime high of Intel, it's moved from the 60s down to it's barely hanging on, is almost in the teens now. So it's lost 2/3 of its value in just the past 4 years, which for a tech stock is a pretty poor showing. And so then more recently, for basically the entirety of 2025, it has been just banging around as a $23 stock plus or minus a few bucks. So today's drop is pretty big, but it doesn't really change the fact that it's still in that year-long range. So yeah, down she goes. NVIDIA is plunging by 4 pennies right now. It's basically an intraday lifetime high. It's kind of just marking time here. There's no particular reason this should be moving. Intel, of course, has zilch to do with NVIDIA's world. So we got a little doji up there just kind of hanging out doing nothing. SMH, the semiconductor ETF, is also down by the tiniest little bit, just a few hundredths of a percent. It's been pretty dull for the past few weeks, as you can tell, just been kind of meandering around this zone, really nothing to compel it one way or the other, just holding on to those massive gains that it had enjoyed for April, May, and June. What else is going on? Well, over in Japan, EWJ, we didn't really look at this a couple of days ago when it was really soaring, but EWJ exploded higher on Wednesday. On Tuesday night, I guess it was, they announced a tariff deal with Japan. EWJ jumped to a lifetime high. It made another lifetime high yesterday and has burned off a portion of that. We're down a bit more than 1% on Japan. In other parts of Asia, China, which I shorted FXI yesterday, this is down about 2/3%. And my rationale of this was pretty straightforward. It's all about this trend line here, which goes back for decades. And just time and again, repeatedly, you can see again and again and again, we've approached the blue line and then beat a hasty retreat. And so that so far so good on the FXI short. Over in metals land, it's kind of doing what I expected, which is burning off some of those big gains recently. I have described it someone ineloquently as pooped or weary or exhausted. I still am a big believer in metals long term, but it's gone really far, really fast, particularly stuff like palladium. And we are burning off some of those gains, kind of backfilling. And so here's silver SLV. We've burned off pretty much all the gains from earlier this week. So we've sort of undone the week. We're back to last week's prices. OUNZ, which is an amalgam of gold and silver, is also down about 0.9%. This is the key up here. It can't seem to, it has not so far mustered the strength to push past that resistance. And if it does, I think we'll have a whole new leg up in this bull market. As I said, palladium, which I've been kind of obsessed with for a few months, this had kind of a halting climb here and then has really just exploded higher without hesitation. But that stopped on the 18th. It essentially opened at the high and fell for the day. And so we've been slipping on that one. We're pushing back into this green zone down here. And this could stay weak prospectively until almost 100, down there where that gap is. So there could still be plenty more weakness there. And platinum, represented here by PPLT, also plenty of potential room to the downside. This is a very gappy instrument because it's quite thinly traded, so it doesn't make quite as much sense to look for a gap as resistance or as support. But we could, kind of worst case rough it out roundabout where that green zone top is. And it's kind of a different angle to the whole metals thing is the XAU, the gold sector, which, as I pointed out before, is in this very long, like over 10-year wedge like so, and we remain way up here, mashed up against this level, which I think, if history is any guide, and the entire premise of my charting is that history is a guide, this is expensive and way more likely to move lower than higher from these levels, because 11 years say so, instead of just hope and bluster and narrative. The price data indicates it's very expensive right now. So that's XAU. Over in the non-tangible world, here's Bitcoin, which is taking a pretty decent hit. It has lost thousands of dollars since last weekend. In the grand scheme of things, nothing really, just a little bit of a shave. It peaked here when there was that sort of whole flurry of pro-crypto legislation going. It peaked at just over 123,000. We are about a little over $6,000 below that right now, but percentage-wise, it's pretty modest, about a 5% shave. It's still bullish configured unless it cracks below, I would say, something like 109,000. It starts to look pretty ill. But it hasn't done that. It's nowhere close to it right now, so that's just conjecture at this point. MicroStrategy, which is almost completely dependent on Bitcoin for its own fortune, is softened up as well from its own price peak, like so. And Ethereum, the number 2 coin up there, what we've been watching on this one is this peak here, which it didn't even manage to get close to. So this is, and that's not a lifetime high. The lifetime high is way, way, way back here, a good 4 years ago. More recently, this lower dashed red line represents the peak back in March of last year, and a couple of times in December of last year, and close to it a few days ago. It's weaker than it was then. So if Bitcoin starts selling off, I expect Ethereum will sell off rather rapidly. In the healthcare world, these have been so bashed and battered that bargain hunters are starting to show up. United Healthcare, which has had a calamitous fall, has been beat down to this level. And particularly earlier this week, there was talk of federal investigation, but it's up a little right now, about 1.3%. It looks very, very unstable. I mean, that there's precious little support on this chart. And, I know it's been bad, but it does not look particularly oversold to me. CNC, a bit more of a case for being oversold. It hasn't had the negative press to the degree that UNH has. It sold up very hard all through here, and it's finally having a little bit of a fight back. So for those who dare to catch the plunging knife, that could be an interesting one, and they're doing it today, over a 6% pop in CNC. Okay, got a couple minutes left. We'll pick up the pace and just bang through some cash indexes here, just kind of see what's what. The Dow Industrials, the NDU, very close to a lifetime high, not quite there yet, would not take much. The transports, however, still look very vulnerable to a slip. These look bad. Irrespective of what the Dow 30 looks like, the Dow 20, the transports look very, very prone to a fall. Mostly, I'm sorry to say that things look like they'll just keep going up until they stop going up. There's very little to say about stuff which just muscles its way to lifetime highs virtually every day. Things like the S&P 100, the S&P, and there's the 500, here's the 100, the OEX, the NASDAQ 100, the NDX. I mean, it's just, they're like Hercules right now. I don't know what exogenous event could possibly stop these, but trees do not grow to the sky, but so far they have. And then the CompQ, the NASDAQ composite, same deal. It's so strong even that this trend line here has been rendered moot. My supposition was that it would provide some kind of resistance. Nope, it is just so strong. It just keeps plunging higher. Isn't quite the image we want, but there you go. But all in all, the thing is that fear has completely left the building. Can't even be found anymore. The VIX has plunged back into the 15 zone, pretty much as low as it's gotten for years, except for some rare exceptions where it gets to 13-ish, 14-ish, but it has been beaten down to a level which Insurance is cheap, I would say. Anyway, that is the bottom of the hour. That is the end of the week. July ends on Thursday. We'll have the Fed on Wednesday and lots of earnings going on. So I appreciate your time and attention, and you have a good weekend. And I'll see you on Monday. Bye-bye.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
But I'm doing 2 talks in Mexico City, and then I'm doing 2 talks in Guadalajara.
I mean, all it's gonna take is for this administration to read just one of your past cherry bombs, and you're not coming back into this country.
They don't subscribe to this. Oh no!
You better scrub your phone, honey.
Oh no!
You better wipe it clean.
This is the same kind of group. We've been friends for, I don't know, like 30, 40 years.
Yeah, that's a long time.
I know.
Because it takes work to maintain friendships, because life gets in the way.
Guys, with women it does.
Well,
it takes work.
Men don't ask questions. Men are the worst. You're like, oh man, my buddy's getting a divorce, and everyone's like, oh my God, why? What happened? You're like, I don't know, I didn't ask. And you're like, what is wrong?
If we have a friend and they're getting divorced, we already know why.
Oh, just pure chaos already this morning. They dress alike, they act alike, they talk alike.
Well, my producer said we all look like seamen, is what he said. Yes, the sailors of yesterday. It's lighter than it looks. I will give you that. I mean, it's...
So is Tom.
I just thought it was unusual that Tom would wear like a long sleeve hoodie in the middle of summer. Why don't you give away that hooded sweatshirt in the middle of summer? Why don't you give that away?
It's actually a summer outfit.
It's a summer outfit?
You would not know.
So I said, I have to see what this is like. And it is a boat-worthy apparel, so I'll ship it down to Florida. But I just wanted to be like my man Tom, see what it feels like to be a big shot and stuff like that.
Will you guys please wear them matching on the flight to Denver next Friday?
What's going on? What the hell am I looking at? What the hell's going on here? What is this?
I'm twinning.
Join us. You got to go white then. You got to get something. Yeah.
No, I don't want to mess this thing up. This is too perfect.
Be like Tom Day here at Tasty Live. That's right. You too could dress like an overlord or just look like one.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm, listen up, y'all, get out the damn storm.
Mikey, we are back, my friend. What a slow grind of a day we have on our hands today. Going into the end of the week, we've got E-mini S&P 500 futures up 26. It's been a slow grind. Big old nothing burger pretty much all day. You got the NASDAQ up 67, the Dow up 205, the Russell up 9. You've got oil selling off a bit, /CL down 82 cents. You have volatility futures 17.90. You got bonds up 12 cents, 12 ticks, gold down 33 bucks, silver down 86 cents. Bitcoin bouncing a little from the lows. It's down 2,100 on the futures, spot down 7,000. But man, this has been a nothing day. I mean, E-minis, do you have a guess on the amount of contracts that have traded?
A low number.
Give me a guess. What do you think?
In the futures?
Futures.
500,000.
You're right there. 596,000 at the moment. We'll get above that, but you can see I added the volume bar here. It's been abysmal volume today. When you look at SPY and the Qs, nobody is touching any of these. I mean, you see the big bars, obviously, when we were on the downside. SPY, 39 million shares in the Qs, a little bit less than that, 24 million. I mean, it's a nothing day. It's been a absolutely nothing burger of a day. Crazy.
Yeah, this is the lowest volume we've seen in this active contract.
Oh, yeah.
Easily. So, yeah, the last two trading days, we've had a 40-point range combined. Sadness. Now, I just need this thing to sell off 5 or 6 points and get that 0-day iron condor out of the money.
We had not a moment of a sell-off today. We thought we would get the Sosnoff sell-off, the flying, being away from the office, Sosnoff sell-off. Got none of it today.
It's very sad.
Very, very sad. In terms of movers in the market, looking at the S&P 100 list, not a ton of names on the downside that really have much of an interest to me. Intel, you got T-Mobile selling off a little bit after yesterday's rally into earnings. You got Texas Instruments continuing its downside. CVX is in there, Pepsi, IBM. I mean, these are kind of fringe names in terms of our trading. On the upside, Tesla, kind of the bigger name to the upside. Palantir up $4 and change. AMD strong. You got Ford and GM in there. It's been a grind fest. Rotation, dispersion.
Yeah, someone calling out Fix in the YouTube chat.
Fix? Is that a ticker?
Yeah.
FIX?
Now.
What is this? Comfort Systems USA.
Construction company.
Wow.
Apparently.
You're long Fix. You're having a fun day. Up 22%, $126.
The market is crazy right now.
Yeah.
Everything is on the table.
Interesting one. Fix.
But yeah.
Never heard of that one.
Literally. Although the markets were calm, we did get a lot of trades on this morning.
We did.
Yeah, I did a lot of stuff this morning. So got into a wheat call diagonal, long November, short September.
And these are all on the file page. I'll pull that up here. So
yeah,
you can see them here. So you got wheat.
We got a short put spread in Lulu.
Yep.
210, 220 in September. Got a short call spread in copper, the 605 in August. You got a call vertical spread in Southwest.
Yep.
You got a 0-day iron condor in SPX. It's like 3 points in the money.
We're right there.
You get a tiny little sell-off here. Maybe that'll work out. Snapchat, 100 shares of stock and a call ratio on top of it.
Mm-hmm.
And then
Costco,
the Costco calendar at 1,000. Long September, short August. And then AMD closed $140 winner. That was a short put. Ahead of earnings. I'll get back into earnings probably with a diagonal spread.
Yes.
And then FedEx closed $155 winner with a call diagonal spread there.
Very nice. Yeah, I cleaned up some positions as well today. I'm in the SPX Iron Condor, hoping for a little bit of a down move into the close today. Snapchat, I did that 1/3 ratio. Pretty interesting trade here, so you can check that one out. I'm long one of the 9s, short 3 of the 11s into earnings. I closed out an IonQ position. That volatility came in really significantly. Tesla as well. I closed out the ETH Iron Fly that I had in the cherry picks the other week. That one worked out perfectly. We caught that move, took about $50 out of that. A nice little return on capital. But yeah, today it was tough to find new opportunities, and it was also tough to find positions to close because nothing was really moving. You have had the vol contraction over the last like 2 weeks, which I've been slowly taking advantage of. At this point, I've got nothing on.
Yeah.
I got some downside plays, and I'm just kind of waiting for something to pop up.
Yeah. I mean, I took off some positions today, but I added 1, 2, 3, 4, 5, 6, 7 positions, and I still only have 15, 20 positions. So I added a lot today. Small trades.
Yes.
Still looking for some market movement, but yeah, just putting on small stuff, almost all defined risk. The only undefined risk trades I have are the micro natty gas long contract.
Okay.
And the IBIT strangle.
Yes. Your IBIT strangle must be looking nice with this little bit of a bounce.
Yeah, the IBIT strangle looks great. It's been the shining star in this portfolio for sure. Yeah. But yeah.
It's been a good
trade. That's it. Just 2 undefined risk trades. I have 100 shares of Snapchat, but that's basically a defined risk trade.
Yeah.
With such a low stock price. But yeah, just trying to layer on some stuff, layer out of stuff, get some downside hedges on into all-time highs and low VIX, and see what happens.
Yeah. On the high option volume list, we have been using this as our reference for what memes are flying. There's really none of them today. I mean, you have the Tesla leveraged ETF in there, which I don't even consider really a meme. You've got Open Door as well for the 3rd or 4th session in a row. But Decker, which was an earnings trade that was after the close yesterday. A lot of the stocks that have been flying, some of the quantum stocks, some of the rocket stocks, some of the random AI stocks, Beyond Meat, which had a, 20% rally, 30% rally, maybe even more. What is that? 30, 40% rally. Some of those have come back down to earth, which is, probably good to see for market strength.
Yeah.
So.
Totally.
Yeah.
Tom and Tony just wrapped up a couple of hours ago in Denver.
Yes.
It was a hit. Saw some pictures. If you go on the Twitters, you'll see some pictures if you look at any of our accounts.
Mm-hmm.
But yeah, congrats on them getting more in the books.
If you want to come hang out with us,
yeah,
we still have our sign up for Seattle. Me, Mike, and Katie.
Mm-hmm.
It's a beautiful time.
It is. And Seattle's beautiful too.
Yeah.
tastylive.com/events. I got it pinned at the top of the YouTube chat.
Yes.
Totally free event. Sign up and come say hi. Yeah. This market, please just go down 5 points.
Scramble everything. Thank you for the IonQ trade. I appreciate you. That's the chat coming through. They always have bangers.
Chat does come through.
Yeah, if anybody's got something interesting that they're trading, throw it in the chat. I am more than willing to take some suggestions for potential underlyings to get into here. We have right now, I think, our biggest move in the NASDAQ. It's only up 60, just sold off about 10 points here. Volatility continues to just get smashed here. It's down 21 ticks. We're at 1785. You think we see... Because we have all the big earnings next week. I imagine you think they're probably going up. Inside up. Is that your feel or maybe?
If they're going to go up, I think it's inside up.
Yeah.
I don't think it's blowout up.
I agree.
And I think if there's a downside move, it's a blowout downside move.
Okay. So
just because there's going to be some surprises where companies that have rallied through this craziness with no regard for anything are going to post some kind of like,
or maybe it's just a buy the rumor, sell the news type thing where, it's good. All the numbers are good, but the stock goes down. That's totally, that's totally on the table too.
Last quarter too.
You think next week we get like a sub 17 VIX futures? The VIX itself is at 15 and change right now.
I think we get a little pop next week.
Ooh. Yeah. I think that's the contrarian.
The writing's on the wall. We've seen some big name companies already reduce their forecasts for the future, and we've seen their stocks tank. Look at Chipotle, IBM,
yes,
Intel,
yes,
Southwest Airlines. All these stocks tanked after earnings. So I think you'll see some that sustain. You'll see some that go higher, of course, but I think there will be some surprises to the downside in a pretty big way. Which is why I think we get a little pop in the VIX next week.
In terms of the big name stocks, not much movement across the board when you look at Apple basically unchanged on the session. It's down 6 cents. Amazon was down 20 or 30 cents. NVIDIA has had some two-sided action today. It got up to 170, 472, which was a new high. It sold off a little bit from there. You had Tesla up $18, $19 at one point today. It kind of gave up some of those games. Meta went from green to red. Netflix even got green at one point today. It's now basically unchanged. I mean, the big names are not moving at all. Microsoft was really the only one. It seems like it goes up $5 or $10 every single day. So just a grind, man. And tough.
Yeah. So some people asking in the YouTube chat, what about Intel short put into the sell-off?
Okay.
Yeah, I think if you faded the earnings move and you think they'll recover, there's a lot of stocks that have gotten some haircuts here.
Yeah, we did that I sold the CMG puts yesterday, which worked out today. Intel is a little tougher. I guess when you look at it from a return on capital standpoint, selling a 20 strike put for 90 some odd cents on $300 in buying power isn't horrible. It's just, that's a grind to get 30 or 40 cents out of that. That is you got to really hang in there.
Yeah. I think with Intel, I would just sell an in the money put. I would sell the 21 or 22.
That's like
get some more
covered
meat.
Call.
Yeah. Cause then if you get the 2-point rally, instead of your 90-cent option going to a 30-cent option, your $2 option goes to a 90-cent option.
Mm-hmm.
So you make more on the same move, of course, because you have a higher delta. So yeah, I think something like that. What are we doing for Amazon?
I do not have a position currently. I saw somebody put in CoreWeave. Do you remember that stock flying around? You know what it's trading at now?
No.
115. It was 200 or it was almost 200.
Yeah.
It's come down $70. You think that's a put sale?
I don't think so. It's had three green days in the last month and a half.
What about like a put ratio spread?
I'm not touching this thing.
Yeah.
But put ratio I like better than the short put just because you protect yourself more. But yeah, the premium here is pretty good. I mean, you can do a pretty wide put ratio here.
Yeah.
It's just, do you want this risk? Undefined risk.
Amazon 17 IV rank. It's had a really nice rally to the upside. I mean, we're just a skosh from highs. Kind of looks like what Google was setting off for. I mean, Google had a really nice rally into earnings, bounced on earnings, and then kind of sold off here. They're very similar charts, not at highs. Like you've got Google, Apple, and Amazon that have not really participated with the NVIDIA, Microsoft explosion to the upside. So maybe that's a play there.
But yeah, we'll definitely be trading earnings. We'll trade a ton of stocks next week for earnings announcements.
Mm-hmm.
PayPal call spread 80.85.
I think I'm gonna bite the bullet and just start a little upside Amazon play with a little upside crab trade. These are the ones I like to do into earnings. If I think it's an inside up move, so I like to buy, close to at the money, a 235 is what I'm looking at here in September. I go out to the weekly with the earnings expiration. I try to sell right around the expected move, so 245 around a 20 delta. I sell 2 of those, and then I buy the wing, the 255 wing, just to cap the amount of buying power I'm using on this trade to be equal to whatever the debit is. When you look at this trade, you can actually move it forward in time. So using the analysis mode here on the right side, you can push this out in time and see kind of how your risk profile changes. So if you think this is like an inside up move, but you don't want to, play it with a ton of downside risk, this is sort of trade to kind of put on. Even if the stock stays inside and down, you probably make a couple bucks on it anyway. So that's the kind of setup I like here. Same thing I did in Google, which was a home run. Had a couple emails congratulating me. I had to congratulate them because it's their money. So, as Tom would say, you don't take my losses and you can't spend my winnings. So your trade. It's your trade, not my trade.
True. How about Akamai, AKAM, short put?
These are the signs that we're itching for a move, for some volatility, for something to happen, is when we're looking at Akamai. Okay, trading at 80. What are we thinking? Bullish?
Yeah, short put is
look at these markets, dude.
Trading question. Yeah, the markets are not good.
These are completely untradeable.
September's okay.
Yeah, but
kind of forced to go to September.
Yeah.
But you have to sign up. You have to be willing to sign up for markets that eventually get to $2 or $3 wide.
Yeah, that's a no-go. That's a no for me, dog. Yeah. Look at this sell-off. E-mini's only up 23.
Ooh.
It's a crash. Are we getting bailed out on our SPX?
Yes, we are. We are actively getting.
We got bailed out on the last one we did when we hosted the Friday session.
I totally forgot about it, and I looked and it expired like 50 cents out of the money.
It was perfect. Yeah. I had a butterfly. So did you do an iron condor? I think you did an iron condor.
I think I did a broken wing butterfly. That's what I did.
Oh.
It was a broken wing butterfly that expired like 50 cents out of the money.
I think I did mine where I was like staggered because mine expired. My $5 wide spread expired basically fully at the money. It pinned it right at the end of the day.
Yeah, this is good.
This is good. Yeah, let's see. I mean, this would be a nice little win for us. I actually peeled off the short put spread. So I bought that put spread in for like 5 cents just to take off the downside risk. Why would anybody do that? To take off downside risk? I mean, there's no downside risk in this market anymore. So, I gave up 5 cents on that, but hopefully we get we get bailed out on this one.
I'm just watching the red in the money symbol go away and come back.
And the good thing about SPX is it's cash settled. So, it just settles to whatever the intrinsic value is, if there is any.
There's 7 minutes left, and there's still $200 of extrinsic value in this option.
Yeah, well,
So yeah, just expire here. I might get my GTC hit, honestly.
What'd you have a GTC for?
$1.15.
Ooh.
So if there's literally like a 3-point sell-off, it'll hit like that.
Oh, cancel it. Live a little, dude.
Even if it's...
Cancel the GTC and live a little.
I'm living right now watching.
Just money, dude. Money. Come on.
But no, this will be profitable as long as we don't go above 63.92.
Yeah, we're right there.
Yeah.
So cancel that GTC. What if you get a 1 second sell off?
That's what I'm saying. It might just fill before our eyes even see what happened.
E-mini's up 25, NASDAQ up 55. You got the Dow up 197 and the Russell up 7. Volatility 1790. Not much has changed, unfortunately.
Yeah. Scanning the YouTube chat. Let's see here. Iron Condor on VKTX. Viking Therapeutics.
Oh, yeah. I remember when this stock was going nuts.
25 in September. 25, 27.5. These markets are just so wide.
But it's a biotech. You don't want to mess.
40, 42.5.
You don't want to mess.
The problem with this is if you get filled, which it looks like you have, you might have a hard time getting out of this.
You can't.
Because I'm just watching the price right now and it's ticking around 10, 20, 30 cents just by looking at it because these markets are so wide. But hopefully it works out for you.
Can't mess with that.
Yeah. Anytime the markets are $1 wide between the bid-ask spread, we usually just avoid it just because even if we're right, we might
E-minis down only up 20. NASDAQ up 31. Look at this.
Oh, wow.
Bail us out, baby. Look at this move.
I canceled the GTC.
That's got to be the biggest candle of the day.
I just went from a scratch to a $180 winner in
there you go.
Seconds. But it wouldn't even fill because my put spread is probably creating problems with that.
Yeah, you just route the call spread. I mean, your put spread is probably... We close it now with... No, you wait. I mean, we've come this far. We got 5 minutes left. 5 minutes for $50. It's $10 a minute.
I just got rid of the call spread.
Oh, you're such a Johnny. You stink.
45 cents. I booked a $200 winner.
You stink.
But now I feel good because
I'm gonna let this
10
ride.
minutes.
This is how I feel about this market right now. Is I'm gonna let this. I got $200 of profit on the table, and I'm just gonna let it.
You have 4 points of wiggle room.
What do you mean?
In SPX, you have 4 points. You're at 63.89.
Yeah, but oh no, it's going. Look, 80 cents now.
I painted the bottom.
Yeah, you did. That was good. That was good.
was fun.
Oh, now I'm in the money. Shoot.
Oh no.
Let's see. No, it's got to pin. It's got to be below 63.90.
I hope it works.
That's my strike.
I think it's gonna work.
No, they're gonna rally this.
Even if it does, if it expires like 80 cents in the money, it doesn't matter.
Yeah,
it doesn't change your situation.
All for the love of the game here. I want my $50.
I got out.
God, you stink.
YouTube chat is praising my decision here.
It's probably the smart decision, all right?
It looks great now.
Yeah.
It could have just kept going down 2-3 points, and it would have been whatever.
Yeah.
But the afternoon just got cheery.
Good job out of you. That's good. You did good.
Billy's got a crab on the downside, okay, like this, and the Q's. Long the 558.
In the Q's.
In the Q's. Long the 562. No, sorry. Long the 560. Short the 562
December?
twice. August 1st.
August 1st.
It looks like this is just a butterfly.
Okay. Long the 65.
Yeah.
Short the 52s.
No, long the 560.
560.
Short the 562s twice. No, sorry. Okay.
You gotta go long, short, long.
Know, yeah, long.
Everybody, but first is the at the money. The first one at the money. Can't go from the bottom to the top, but at the money.
Long the 562.
Okay.
August 5th.
Oh God. E-mini's up 25. All right, so we're August 5th.
August 5th, long the 562.
562, got it.
August 1st, short the 560 twice.
Okay, got it.
And then long the 558.
Okay. So it's you got a small little like calendar butterfly. You got this is a trade that you hope the shorts expire out of the money on August 1st. You got a free put.
Yeah.
Basically, or a very cheap put.
Yeah.
That's what you're playing for here.
But yeah, for the risk outlay, this isn't going to move that much unless you get to expiration day into a sell-off. That's your best case scenario.
Yes. E-mini's only up 22. Come on, I got 45 seconds.
You're golden.
I got 45 seconds. Where's my SPX?
63.88.
20 cents. I'm holding. Who gets paid $20 for 30 seconds of their time? Give me it.
Oh, man.
Oh, you're going to pull this off?
I think you're going.
E-mini's up 20. You got the NASDAQ up 38.
Look at that.
Oh, no. Oh, no. E-mini's up 22. 23. Shoot. Come on. Come on.
Oh, no.
I think I'm safe. Oh, no. Oh, no. Oh,
3, 2, 1.
Come on. Come on. Oh, there's the bell. We got it, baby.
Wow. You really did it.
63.88. We held on for all dear life there. That's beautiful. E-minis up 20, NASDAQ up 30, Dow up 172, and the Russell up 6.
Yeah,
we nailed it. The YouTube chat.
Yes.
Shout out.
Saying VIX under 15, boring. This is what happens. You get a horse racing type app
For $40 into the close.
And an SPX 0-day iron condom. Like, this is where we're at.
Best we could muster up. Well, that was good. That was good fun. I'm glad we hit that. A nice little win. I see the chat's like, these D-gens. Well, thank you, everybody, for hanging with us through what was a grind fest of a day. It was a good time. Thank you for the trade ideas. We appreciate those very much. Hopefully next week is going to bring some more fun with some of the earnings that we have coming up. And Tom and Tony will be back in the chair. So we're going to take a quick little 90-second break. We're going to do this all over on Monday. We'll see you next time. Peace.
Peace.